likely a reflection of the expectation of higher inflation with deregulation, immigration restrictions, trade and tax cuts that are likely to be inflationary, but also the direction of travel of the budget deficit. We have a situation in which the budget deficit is currently around 6.5% of GDP in good times. That is not normal, and if you look out the next 10 years, we're going to be in an environment where budget deficits are going to average 6.5–7% of GDP. That is going to continue to pressure up long-term yields and could be a catalyst for a risk-off environment that could be negative for growth.
Can the U.S., though, act that way?
In terms of fiscal sustainability, that's a key question. I mean, one of the three arrows that Besant put in place is this notion of bringing back the budget deficit to 3% of GDP. What does that entail? That entails cutting the deficit by over $1 trillion per year over the next decade. That's a massive reduction in government spending. Now, this could be done if we think about entitlement programs, if we think about tax reform. I don't think that's necessarily where we're going. We're talking about potentially massive spending cuts, but let's not forget that if you cut spending, you also cut economic activity. So you have to be consistent in your messaging in terms of ensuring that reduction in the budget deficit while sustaining economic growth.
How concerned are you if there is a dojification of the government and you do get some massive job cuts or mandates that cause people to quit in a massive way? How much does that affect some of the labor pictures that people are looking at, especially considering how much government hiring accounted for some of the recent job gains?
Yeah, I think there are 2 points there. First, you're absolutely right. Government hiring has been a key element driving employment growth. Month after month after month, we've seen government sector hiring in terms of education at the state and local level being a key driver of employment growth. But the other big thing in terms of what could happen when you have massive spending cuts is, or at least proposals for massive spending cuts, is that they might not necessarily be implemented. We should not forget that about 15 years ago, the Simpson-Bowles Commission had this intent to reduce government spending, and the proposals were largely drawn down. Now, you did have the Budget Control Act in 2011 that led to a freeze in government spending with sequester threats over the course of a decade, but that was much less than what was initially proposed by the Simpson-Bowles Commission.
Just quickly, what's your reaction to Governor Waller this morning? Tariffs unlikely to impact his view on monetary policy, doesn't expect tariffs to have significant impact on inflation. Just a quick reaction to that to round things out.
Tells me there's a lot of uncertainty in the economic projections from the Fed. The Fed Chair Powell mentioned that some policymakers had included policy shifts in their projections, some hadn't, and some weren't sure. So there's a lot of uncertainty as to what is really contained in these economic projections. That's a big issue, in my opinion, in terms of Fed communication, because a Fed that is highly reactionary, but for which you don't know which policymakers is including what, is highly doubtful in terms of the trust that you can put in these projections.
Fed Minutes coming up a little bit later. Greg, it's good to see you. Great to
Always a
have
pleasure.
you there. Thank you, sir. Mike McKee still with us, our economics and policy correspondent here at Bloomberg in the nation's capital. Mike, I want your thoughts on Governor Waller's headlines this morning from that speech and what you're expecting to see in the minutes later this afternoon.
Oh, well, I think Greg kind of tied the two together when talking about what we might see in the minutes being some explanation for why some people were looking for an impact from Trump fiscal policies and some people were not. That's confused a lot of folks on Wall Street. What is it that you're actually predicting here in your summary of economic projections? I think Governor Waller's situation, you suggested it could be an audition, and maybe it is. But on the other hand, in the past, tariffs have not necessarily been inflationary, depending on how they're imposed. They are generally a one-time rise in the price level. We saw Donald Trump impose tariffs on China, on steel worldwide in 2018, and there was no appreciable effect on inflation. It depends on what's tariffed and the time frame of the tariffs, whether it keeps pushing prices up or not. So he might be right about that.
Mike McKee, appreciate your perspective as always. Mike McKee in Washington, D.C. I should also point out, of course, and Mike McKee knows this, that Governor Waller appointed to the board by President Trump in his first term. So perhaps a front runner of people on the board to think about who could be the next Fed chair.
There's a broader point here, and I think that we can all agree on this, which is that at this point, there is a question of how politically independent an organization can be looked at when there is a sort of speculation hovering over it, and you have the president talking, or president-elect talking at his press conference in Mar-a-Lago, not just about Denmark and Greenland, but also about how rates are too high and how the Fed should do something about that.
Let's have the market conversation conversation now with Winnie Caesar of CreditSights. Winnie, welcome to the program. A lot of people came into this year thinking about credit, and they all said the same thing: I'm bullish. They didn't like where spreads were, but all-in yields were attractive. You weren't one of those people, Winnie. What did you see that makes you think things are different?
Yeah, good morning. We are definitely a little bit contrarian on the credit markets right now, and we went risk off in that rally following the outcome of the U.S. election in November. And it was based on a few key things. First, fundamentals are in an okay starting point, but we do see the potential for fundamental erosion to start to become more the forefront of investor concern, whereas really strong technicals were driving the ship last year and really drove spreads materially tighter to levels that we hadn't seen since before the great financial crisis. Now, that's helpful because you've seen a lot of inflows into credit ETFs and mutual funds, but that also leaves credit a little bit more susceptible to volatility, as some of those investors might get a bit skittish if they see total return losses because of rising yields or equity market volatility, or if any sort of recession or slowing economic narrative starts to come into the conversation.
Winnie, just to sort of underscore what you're saying that there's actually a fundamental deterioration that's been feeding into your bearishness, just even putting aside any kind of rate increase, and that really is the reason why maybe you're shifting away even from the more exposed, the more leveraged companies. Is that correct?
Yes, so it's a twofold thesis here. First, we've already started to see credit fundamentals shift a little bit to a weaker territory. They're still kind of at long-term average levels, especially for higher quality parts of the market. But we've seen interest coverage levels come down quite meaningfully as borrowing costs have ticked up. We've seen decent EBITDA growth across the credit market, but it definitely hasn't been ramping up or accelerating. And then even before the Trump election victory, we had expected that issuers were going to start to focus more on intentional releveraging through M&A, share buybacks, other sort of kind of equity juicing incentives, because they've been in balance sheet kind of defense or preservation mode for so long, and now it's the time to start to look to buy growth. And that generally comes with a little bit more execution risk. And it feels like we're kind of teeing up for this perfect storm of potential challenges within the credit market.
What does the maturity cycle look like, Winnie, given the fact that we're looking right now at all-in yields of almost 7.5% for high-yield companies? You're looking, if it really rises in materially, it could be punitive for some of these companies. So how much are we seeing them actually have to incur the borrowing costs that we're seeing?
Yeah, this is a really interesting story. Within the investment grade market, there's always the kind of constant maturities. And in the next couple of years, you see very lumpy maturities, especially for financials issuers. Now, the good news is that spreads are still very tight, especially for financials, and they tend to be a little bit more focused on spreads than all-in yields. But from kind of an all-in borrowing cost perspective outside of financials, things have really been ramping up. And there are definitely a few key sectors that have pretty lumpy near-term maturities, be it autos or leisure. Within the leveraged finance market, it's a little bit of a different story because last year was so strong that we saw a lot of issuers very proactively push out maturities. This is especially true in the broadly syndicated loan market, where the amount of repricing and extension activity was really staggering. It almost kept pace with the U.S. investment grade market in terms of gross issuance overall, and it's a much, much smaller market. So we're not as concerned about kind of the near-term maturity side of things within leveraged finance, but we could see liquidity get a little bit more challenged if some of the growth expectations don't come in as strongly as people are currently forecasting.
Winnie Caesar of CreditSights. Winnie, appreciate your perspective. Less than bullish, that's for sure, on credits compared to a lot of bulls that came on this program at the end of last year into the new year. One debt market we're hyper-focused on right now. This move for the UK government bond market, yields higher by 11 basis points now. Let's call it 480, and the pound getting absolutely hammered. That's one to watch through the rest of today. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John. Los Angeles is ramping up evacuation orders as the Palisades fire continues to rip through the area. Parts of northern Santa Monica now are under alert as widespread and damaging gusts worsen the situation. The Palisades fire was almost at 3,000 acres, while two other blazes flared up overnight, one near Altadena and the other near Salmar, southeast of Santa Clarita. President-elect Trump has asked the U.S. Supreme Court to step in and stop his hush money sentencing from going forward. The sentencing is due for this Friday, January 10th. The filing follows a verdict from a New York judge who rejected Trump's argument to vacate the 34 felonies in light of his presidential victory. Justice Juan Merchan, who oversaw the trial, has already said that he won't sentence Trump to any time behind bars. Former President Jimmy Carter is lying in state at the Capitol Rotunda. Lawmakers came together yesterday for a ceremony to honor Carter's life and legacy. The former president's state funeral will be held tomorrow, where President Biden will be among those delivering a eulogy. And that's your brief, John.
Danny, thank you. Shocking pictures coming out of Los Angeles. Appreciate the update there. Thanks, Danny. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with David Rubenstein of the Carlyle Group in just a moment. From New York, this is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
The top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The open about 40 minutes away. Equities recovering from losses earlier in the session. We were down by more than 1% at one point on a Russell. The Russell's down by just 0.6. The S&P unchanged. A dovish Governor Waller. Downside surprise on ADP. No doubt helping things out. Just a touch in the bond market as well, with yields off the highs of the session stateside. Can't say that for what's happening in the UK at all. With less than 1 hour to go until that opening bell, let's get you some morning movers with Manus Cranny. Hey, Manus.
Jonathan, big tech will welcome anything that's dovish, but Apple on the back foot as Indonesia banned the iPhone 16 sales. That's still in place. They want more investment from Apple in the country. $1 billion investment to make your AirTags is not enough. Let's roll it along. D-Wave, Jensen Huang. lampoons the idea that you're going to have quantum computing that's useful to you very soon. 17 years, maybe 20 if you're lucky. Roll it done. Finish it off with Novo Nordisk. It's been through some very, very tortured moments over the past couple of months, Jonathan, on one of their new GLP-1s. Today, UBS come out with a buy rating on the stock. The sell-off is overdone. Positive inflection point for GLP-1s. Yes, they shave back on the price tag, $750 from $1,100, up 3.67%. Jonathan.
Thank you, sir. Appreciate it. As we count you down to that opening bell, some data points to watch throughout this afternoon, including the number that we get from the Fed a little bit later. The number of people that maybe use the policy uncertainty to change their forecasts down in Washington, D.C. I think that's what I want to know. Isn't that what you want to know?
Well, basically, who among them is taking a look at the potential of tariffs and some of the other spending and saying, all right, just for that, we're not going to cut rates. Forget about it. Maybe we'll get names. We're not going to get names. Do you think we're going to get any color on that whatsoever?
I'd like a number at least.
Okay.
How many? A couple?
Right.
Few? Several? Let's try and find out. 2 p.m. Eastern Time. Tune in. Thursday, of course, tomorrow, U.S. equity markets close for a national day of mourning for the former president, Jimmy Carter. On Friday, on the data side of things, it's a big one. We get payrolls, so look out for that on Friday morning. And coming up tonight on Bloomberg TV, just a programming note for you, peer-to-peer conversations with David Rubenstein. David's sitting down with Eli Lilly CEO, David Ricks, so look out for that. I'm pleased to say that David joins us now for more. David Rubenstein, welcome to the programme, sir. We've all caught up with Dave Ricks over the years. He's a fantastic leader. What did he have to say to you this time around?
Well, Dave Ricks is the CEO of Eli Lilly. Eli Lilly is a company that was started in 1876, a very respectable drug company, pharmaceutical company. But in the 5 years that he has been the CEO, the stock is up about 9 times. And that's in part because of the GLP-1 drug that they have, which is called Zepbound. They have also one, Mounjaro, which is for diabetes. But these are the weight loss drugs that we've all been talking about. And it's amazing what's happened in the pharmaceutical industry. The Eli Lilly was always a successful company, but nothing like we've now seen. In fact, it is now likely to be the first pharmaceutical company in the world to have a market capitalization of $1 trillion. It's now about 900 billion or so. And this is because people want to lose weight. Roughly 70% of the people in the United States are overweight, and amazingly, 40% are defined as obese. So this drug does tend to reduce your appetite, and it does have a beneficial impact. It now seems that it might also have a beneficial impact on other related problems that people have, addiction, smoking, and so forth. Those studies are underway. But right now, there's no doubt that people want to lose weight, and that people are using either the Novo Nordisk product, which is better known as Ozempic, or the product known as Zepbound by Eli Lilly.
How much is the optimism in the likes of Eli Lilly really dependent on the idea of the government actually covering the cost of some of these drugs at a time where that's been one of the hottest contested issues in that space?
Well, the government has gone back and forth on this from time to time, but private insurers are covering it to some extent. Not all of them are. But if you have insurance and it's covered, your costs are roughly $25 a month for each person who uses it. So that's affordable for most people. And many insurers are increasingly covering it because it does beneficial things for insurers. Think about this. If you have people that lose weight, they are going to be having less health problems. They have less health problems. The insurers will have to pay out less to their doctors and so forth. So there's a real benefit to insurers to getting people on this drug because in the end it lowers the cost of insurance.
David, I'm going to be heading down to Washington, D.C. for President Carter's funeral tomorrow, and you actually were a domestic policy advisor under the Carter administration. And before we end, I'd just love to get your thoughts on what you want Carter's legacy to be, maybe what the public didn't see behind the scenes.
I did spend 4 years in the White House as a deputy domestic policy advisor. I worked for Stuart Eisenstadt, who was a domestic policy advisor. It is ironic. Jimmy Carter came to Washington in 1977, and a conquering hero. He'd beaten Nixon, Ford, the regime, and really beat Gerald Ford. He came in with high expectations. People thought this man is going to change Washington, D.C. He tried many things. He had a lot of political problems, and the hostages in Iran were another. And so he left Washington very defeated. He was humiliated in the loss he had to Ronald Reagan. A staggering loss. Carter really couldn't quite believe he could lose to Ronald Reagan. Now he comes back 44 years later as a man who is lauded by almost everybody for the things he's done in the 44 years since he left the White House. Among those, winning a Nobel Peace Prize, doing things like election monitoring around the world, helping to eliminate guinea worm and river blindness, doing Habitat for Humanity and so forth. So it's amazing how the turn of events has taken Carter from somebody who was very popular, not so popular, and now extremely popular back in Washington.
David, looking forward to honouring him tomorrow, that's for sure. Appreciate your time today, and of course, congratulations for being awarded with the Medal of Freedom, the highest civilian honour in this country. Thank you, sir. David Rubenstein there of the Carlyle Group and host of Peer-to-Peer Conversations. Coming up tomorrow, look out for this. We'll be catching up with George Concavas of MUFG, Nina Richardson of ADP, Jim Zauter of Apollo, and the former Speaker of the House, Kevin McCarthy from New York. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
If I were at the Fed, I would be thinking about the tools that we have in the toolkit differently. I would be utilizing quantitative tightening, and to a great extent, they have. Post-COVID, $12 trillion came into the global economy from central banks everywhere. And right now, we've seen about $5 trillion has been hoovered back out. That still leaves $7 trillion sloshing around in the system globally relative to where we were before COVID. Now, adjusting that for larger GDP and GDP growth globally, probably we need to see about $3 trillion more come out before we get to an equilibrium of where we were before COVID. I don't think the Fed really appreciates the quantitative tightening tool as much as I do, and I think as much as the markets do.
Seems like traders are just waiting to see whether we get a catalyst or tariffs. 30 minutes until the start of trading. I'm Matt Miller.
I'm Shanali Basak. And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, it's anything but a quantum leap. Quantum computing stocks tumble after NVIDIA's CEO predicts that useful machines are still decades away.
And Albertsons raises its earnings outlook for the year, a positive sign for the grocery chain after its proposed deal with Kroger fell apart.
And rising cases of bird flu giving wings to Moderna shares, at least for today. Moderna is one of only a few drug makers that's actually developing a vaccine for the disease. All of that and more coming up. Let's take a look at where these markets are trading after an absolute wipeout in yesterday's session. You can see a little bit of a bounce back. It's been a choppy trade so far this morning. We had ADP actually miss headline estimates, but then we had claims come in lower than expected as well. So a bit of a mixed bag as we head into Friday's jobs report. A little bit of green on the screen, though. You can see the 10-year Treasury yield right now unchanged, but we are very, very close to 470 right now. That would be the highest level since April, and a lot of strategists and bond investors taking a look at 5% as a buying opportunity.
Yeah, the longer end of the curve, I think, is shockingly high right now. I got this chart from Valerie Titel in London via Dan Curtis, our producer. And you can see that we're not quite up to the cycle highs. This is the 10-year and the 30-year yields. But when we get there, it's going to be the highest level we've seen since the Great Recession. So that puts into perspective really how high yields are, and the market has to deal with that.
Absolutely incredible. Jim Bianco says we might retest and beat that 2023 high. So something to watch for in the near term.
He's a Michigan fan, so...
Oh, okay. Rivalry. I don't even know what that means, but we will find out. Anyway, some stocks we are watching. Albertsons raises its profit guidance in the first earnings report since a judge blocked its $24 billion deal with Kroger, yet comparable sales growth slightly missed estimates. Market likes the projection, though. Albertsons up 1.5%. Rigetti Computing, this is one of those quantum computing stocks, plunging after that comment from Jensen Huang, NVIDIA CEO, about a 20-year timeline for mainstream adoption of the nascent technology. We're going to talk more about that, but really taking a hit, down more than 26%. Moderna up 0.5% pre-market after a 12% gain on Tuesday. Scary stuff. There was a bird flu death reported in the United States. Moderna is one of a few drug makers developing a vaccine. We're going to discuss that later this hour as well.
Yeah, Katie's kind of obsessed with that story,
I
so
am.
We're definitely going to talk about it. But first, economic data pointing in slightly different directions, right?
Yeah.
ADP was less than expected, and initial jobless claims also lower than expected. But that's so
signaling strength.
Bad news and good news.
Yes, very true. There's a saying out there: never trade on ADP. So, of course, the correlation between ADP and NFP is fuzzy at best. So we'll see, of course, if the action we're seeing this morning follows through on Friday. I thought it was interesting, though. There was a note out from Citi, friend of the show, Stuart Kaiser, saying that if you take a look at the options market right now, it's priced for a 1.2% move in either direction following Friday's report. So fireworks expected.
Yeah, what's interesting to me is we've talked about this, 1 basis point here, 1 basis point there, 6 basis points here. It brings us closer to 470 nearly once again. And the worry for Friday was that an overcorrection? Because once we hit 4.7, 4.75 is the one Julian Emanuel is watching for over at Evercore ISI. Also 5%, as you've been talking about,
Well,
Katie.
if we get a miss, I mean, I would imagine we'll see yields drop like a stone, just given how far we've come.
More than 1 basis point.
More than 1 basis point.
Which is like?
Several 1 basis points moves.
But 1 basis point is like...
It's like a sneeze on the keyboard.
There you go.
Levered, though. It could be painful.
All right, I want to bring in our first guest. BMO Chief Investment Strategist Youngyu Ma joins us now out of Dallas. And I thought your note was fascinating because it kind of sets up in my mind a game of chicken. Do we get a positive catalyst for the market? Do we get, earnings growth coming in or something from Jensen Huang that makes us bullish again before we get tariffs or mass deportations from Trump that freak us out and drive yields even higher? What do you think?
Well, thanks. It's great to be here. We do think that's kind of the push and pull right now that the market is going through. On the one hand, there's concern about tariffs. There's concern about rising treasury yields, sticky inflation, what happens in the labor market. And we're also looking at what are the catalysts? What is earnings season going to come in like? And what's going to provide the next leg up? In the short term, we think the market probably has continued to be poised for a dose of caution because the risks just look like they're presenting more uncertainty for the market and tilted toward caution and profit taking at this point. But we do think catalysts will be coming. It's just going to take a little while here.
I want to talk about the relationship between the bond market and the stock market right now, because that's all anyone wants to talk about, it feels like. There was a really interesting note out from Goldman talking about so far stocks have been resilient, but if you take a look at this current move in the 10-year Treasury yield, it's very reminiscent of what we saw in 2023, in 2022, periods that proved to be very painful for risk assets. How are you thinking about that relationship as we exceed, in some cases, 4.7%?
Well, those are good analogies and corollaries, because in October of 2023, we did see the 10-year Treasury yield rise just above 5%. It's probable that we think that level will be breached again. But if we look back to that time, it was actually a buying opportunity for both stocks and for bonds. And we think that probably a lot of the concern right now is a short-term concern. We don't think those 10-year Treasury yields are going to get to, say, the mid 5% range and stay there. We do think it would take a higher level than is currently anticipated to really cause lasting damage in the equity markets and the economy. So we think right now there's a lot of concern, but the underlying economics to us don't point to a sustained move and level above 5%. We think we could get to about 5%, stick around there for a while. But we think right now, this risk, which had been underappreciated by the market for quite some time, is now probably being actually a little bit overblown by the market here and could present a buying opportunity.
You know, one thing I'm interested about, too, is portfolio construction. Katie made this point a little earlier about potentially buying opportunities at 5%. You are definitely seemingly agreeing with that view. But how much fixed income? You have Vanguard coming out this morning saying that a 40-60 portfolio, not a 60-40 portfolio, but instead 40% in equities and 60% in fixed income could make sense at this juncture. Would you go that hard into a trade like that?
We're not recommending that to clients. We do believe that taking equity risk this year is still a favorable positioning. Certainly bonds have a place in portfolio, provide stability. We think we're on the verge of getting better yield pickup. We've actually been short duration for some time here now, and actually relatively light on our fixed income positioning, which we think could be more attractive in the coming months if we get higher yields here. So we wouldn't take that kind of tilt. We do think as the year plays out, there's going to be better opportunities to see gains from those riskier assets. But in the short term, there's no question there's a dose of caution. There's concern about these Treasury yields, how high they can go, and thinking about what happened when the markets saw 5% yields in 2023 is giving people quite a bit of jitters here.
But is it correct, Young, to say that you think the concern, the risk of higher yields is overblown? Because I can imagine it being a longer-term issue, right?
Yeah, we would say the risks are overblown. If we think about what the underlying economics are, we have inflation at maybe 2.5%, let's even say 3%. If you tack on another 1% real yield on top of that, another 1% term premium, you're looking at something that's likely below 5% for equilibrium level for the 10-year Treasury. So we think these levels are sustainable for the economy. If you look back to 1995, where were Treasury yields in 1995? We had short-term yields around 7%, the 10-year Treasury in the upper 7% range. This is a level that is digestible by the economy. It might take some adjustment, recalibration, but it's not going to derail economic growth. You're going to have strong productivity gains this year, and that's going to all start to kick in and be apparent in the second half of the year. But we could and are likely to have volatility before that.
Yeah, great context there, of course. Treasury yields in 1995. I know Matt was paying attention, but many people weren't. Let's talk a little bit more specifically about the tech sector, because you think about the stock market, so dependent on the tech sector. And you write in your notes that it remains a winner-take-most economy, so we believe mega-cap tech will hold up well. Talk me through that. Why does winner-take-most translate into big tech gains from here?
Well, these mega-cap tech companies have just built such strong moats around their business, and the ability to have deep pockets to fund the new technologies and really be on the forefront of technology and even buy up smaller companies that have other technologies that are useful is really a tremendous advantage at this point. And we think these companies are well positioned. There is some concern that perhaps some of the investments they're making, the CapEx, has a longer payoff timeline. And certainly there are some notes out about that where some investors, some strategists are concerned that the market might have a bit of a hiccup because of that extended time frame for the return on some of these investments. But we think these investments are so crucial to the economy, crucial to future tech spending and growth and productivity developments, that we think ultimately the markets will be comfortable with this level of spending, this level of investment, and these companies just have such a strong business that overall we think they'll continue to hold up and lead the market pretty well here.
BMO Chief Investment Strategist Young-Yu Ma, good start to this year, of course, drumbeating to that jobs report, looking at where yields will impact the markets. But we're going to discuss more on the technology trade. We're going to talk about quantum computing, though. Stocks in the industry are having a moment. They were for a few months now, but one comment from NVIDIA CEO sending the shares of those companies off base and pushing those companies lower. We're going to talk about why next. This is Bloomberg.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let's get out of high interest. Look at what's making headlines around the world. Wildfires tore through the Pacific Palisades area of Los Angeles. Homes were destroyed and about 30,000 people were ordered to evacuate after a brush fire erupted in the community, causing panic and traffic gridlock, with some people abandoning cars without leaving their keys in them on narrow hillside roads. The blaze has spread to almost 3,000 acres and remains uncontained. President-elect Trump is asking the U.S. Supreme Court to step in and stop his hush money sentencing from going forward. The sentencing is currently scheduled for Friday, like this coming Friday. The filing follows a verdict from a New York judge who rejected Trump's argument to vacate the 34 felonies in light of his presidential victory. The judge who oversaw the trial has said he won't sentence Trump to any time behind bars. And Bill Ackman's trade idea still has the market's attention a decade later, scooping up shares of Fannie and Freddie. The founder of Pershing Square posted last month about a bet on the U.S. government unwinding its massive stakes in those companies acquired as part of a $190 billion bailout during the GFC. Ackman is eyeing a profit, or forecasting a profit, of 1,200% on the investment. Meanwhile, the shares have already soared by over 200% since the election of Donald Trump. The re-election analysts warn investors to approach the trade with caution.
We're now going to turn to a more nascent industry, of course, quantum computing. It has struck the fascination of investors, but shares of stocks linked to the next level computing technology are plunging today after months of bullishness. This comes after NVIDIA CEO Jensen Huang told analysts that quantum computing is likely 20 years from going mainstream. Bloomberg Technology co-host Caroline Hyde is here to explain. One thing I did to really put some context around this is go back to Alphabet and what happened in early December here. The lead of our own story on this talks about, okay, fine, they have a quantum computer needing just 5 minutes to solve a problem that would take supercomputers around 10 septillion years. That was the exciting part.
Longer than the entire existence of our universe.
But the next
By
sentence...
a long shot, like exponentially longer.
Right. So there's the promise. The next sentence was Google's next task was to find an actual use for that superpower.
Yeah.
So aren't they saying the same thing?
But it is interesting that Google quantum AI team have said we're going to find something relatively useful in 2025. Whereas here comes Jensen downplaying what stocks have actually risen about 1,000% in the last year, I might add. So coming off about 20% ain't much. But dousing a little bit of that euphoria, saying, look, it's going to take 15 years until we get something incredibly useful, 20 years until we get something significantly useful. And NVIDIA, in theory, should know, because NVIDIA has been working with Google Quantum AI to simulate the use of hardware, of chips that are going to be necessary in the use of these supercomputers. We haven't got the hardware yet to really overcome the significant limitations. The big breakthrough, the Willow chip, which is made by Google, is that it does help reduce errors, cancel out the noise. This was some of the significant issues that have been limiting quantum computers thus far. So maybe there's a little bit of, I don't know, bitterness or even a little bit of competitive streak feeling that Willow chips got there. But ultimately, Google's using NVIDIA to help simulate, to help identify the ways in which they have to build chips and hardware. So if anyone knows, Jensen should know as and when quantum computing really comes to bear. Well, 2 points there. I mean, Jensen did say that 15 years for very useful quantum computers. So who knows what very useful means to him. But that's what I was going to ask. I mean, is this Jensen talking his own position because NVIDIA isn't ready for prime time and sort of talking back the market? Or is this really, do you think, an honest assessment of where this industry actually is?
Are you asking me to say whether a CEO is honest or not, Kate?
That's
I mean,
exactly.
I have to just say that thus far, the guy's been honest. He's taken big bets very early. He saw generative AI and the need for GPUs and AI applications of his own technology far before anyone else did. If he's going to see round corners, I would bet on him to be able to do so. And I haven't really seen something authoritative. When we had Google Quantum AI chief on, he didn't say, yes, we're going to have a breakthrough in necessary quantum computing that's going to be super useful in the next year. They're just going to start to find the applications. So perhaps they're actually singing from the same hymn book here. It's just the market got ahead of itself. We, the retail investor or the institutional investor, powered up these particular companies, these smaller quantum-related stocks, to the tune of thousands of % on the hope that maybe we're going to have a breakthrough in the next year and the year after that. Funnily enough, maybe the market's just getting ahead of itself.
You point out that some of these stocks have already risen rapidly. Qubit, QUBT is the ticker, is up, what, 1,900%? Rigetti is up 1,500%. But these are still just only 2 or 3 or 4 billion-dollar companies, right?
And their revenue, I think Rigetti, they have a 3 million per quarter revenue.
Yeah.
These companies are so early doors in what they're going to be able to provide in terms of useful application of what they're building, that many are just pumping them up on the hopes that they'll have a key breakthrough in the next 10 years.
NVIDIA.
No, these are kind of like biotech stocks. You either win or you lose.
Yeah.
Well, yeah, let's even take an even bigger step back. If we're talking about Rigetti, $300 million, what is useful? You know, going back to Katie's earlier question, useful today, what would show progress over the next year, even if you believe that the biggest of gains are going to come in 10, 20 years?
Yeah, and Bank of America did a good job at trying to point out where would quantum be useful. Drug discovery, most prevalently. Actually, generative AI is where it's going to be deeply useful because we're going to be able to be speeding up the way in which we train data and inference. But that is unlikely to be coming. I don't think Bank of America are like, yeah, that's going to be occurring in the next couple of years. But in the longer term, what is going to be useful in the here and now is continued breakthroughs when it comes to these chips, when it comes to actual cancelling out of the noise. Basically, the fact that it's incredibly difficult to basically use the hardware as it currently stands. It can only run a certain number of, I don't know what they're called, quantum operations, so to speak, in a certain amount of time before the noise just gets too much and you start to not get accurate results. So how can we understand that? How can we ensure that ultimately when you're holding these things at freezing temperatures to be able to allow some of this quantum physics to even allow to be working, how do we overcome that? How do we store it, make it also scalable? Because this is expensive to hold temperatures at such a level.
We want to get the investor perspective here. There's at least one ETF that tracks this industry.
Yes.
The ticker is QTUM. It's an ETF from Defiance. It launched in 2018, so it really was ahead of this wave. Obviously, it had a fantastic year last year. It took in $500 million, almost a $1 billion ETF. Even with Jensen Huang coming out and pouring some cold water on this craze, I mean, how excited and interested are the investors that you talk to on BTech about this industry?
Well, we had Sylvia Jablonski, who's behind Defiance, the ETF for quantum, on. And look, she's actually saying it. If you look at the performance of the ETF, it underperformed the likes of Rigetti because they have to iron it out by ensuring they've got diversification, by putting the likes of IBM, Google in, people who are actually at the forefront of building some of the supercomputers, not just the penny stocks or now the dollar stocks that you see. and she really is saying, look, this is going to be the trend of 2025. We had a lot of people coming on saying, now we've got to these stages within generative AI.
She
now
would say that, wouldn't she?
She would. Well, I mean, but I think she's also betting on all other areas of innovation. So maybe she wants to continue to see the inbound into her ETF, but I think she was realistic that you've got to bet on some of the bigger players, not just some of these smaller stocks.
Yeah,
she's a great guest.
She's great. And
I've seen her on what's that show called?
ETF IQ.
ETF IQ.
You remember that? Yeah.
Mondays at noon.
Absolutely. Yeah, they're a thematic issuer, so they are exposed to a lot of the shiny objects, as Eric Balchunas would call them.
You can catch Sylvia on Bloomberg Tech.
She can.
Weekdays
she
at
also
11.
has a leveraged MicroStrategy one as well. I mean, she's in on all the hot properties.
Yeah, it's going gangbusters.
Great having you on, Caroline. Thanks so much for joining us. Caroline Hyde there from Bloomberg Tech. Tune into that program, as I said, at 11 a.m. Eastern. Caroline and Ed Ludlow interview CEOs from Panasonic and Mobileye, as well as others from CES in Las Vegas going on now. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
A multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, welcome back to Open Interest. You can see that little bit of a rally I was talking about half an hour ago, totally dissipated right now. We're still about unchanged, but the color is red, and that's significant because we saw a lot of red yesterday when it comes to both of these big benchmarks right here, the S&P 500, the NASDAQ 100. Not even NVIDIA could save us yesterday. The worst day of the year for both of these, which isn't saying too much given that it's January 8th. You also see some weakness in the small caps right now. The Russell 2000 currently down about 0.9% pre-market. This was your slight outperformer yesterday, but still a big down day for the small caps today. And at least right now, we're set up for another down day across the board, across all the size tiers. We'll see how that develops as we get a little bit deeper into the trading action. And with less than 4 minutes to go, coming up as we welcome the market to this Wednesday day of trading, we'll discuss the market moves with JP Morgan's Abby Yoder. That conversation coming up next. This is Bloomberg.
This facility, which is part of your $2 billion investment in the last 2 years, is a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Just moments away from there or something terrible to bring it down again. S&P futures up 1 or 2/100%, totally unchanged on the NASDAQ. Russell futures are climbing, Katie. We'll talk about that in
They're
just...
falling.
Or sorry, falling significantly, though. I meant real movement there. Red, green. Take a look at the NASDAQ market site. You've got Principal Financial Group, a fintech ringing the bell there. Over at the New York Stock Exchange, there's some kids. Exodus Movement. It's a software services company, small, but it's up in the last 12 months 700%, 28% so far this year to date, and we just started, so pretty good for them. Katie, what do you see in terms of other indexes? Or
Well, it's exactly what you said, Matt. Not too much to report right now. We do have the colors are red, and we are moving a little bit lower in the first seconds of trading right now, from the S&P 500 to the NASDAQ 100 to your small caps. Of course, all of the action is on Friday. U.S. markets are closed tomorrow, of course, for President Carter's funeral. At least the stock market is. So a lot of attention paid to 8:30 a.m. on Friday. We had a mixed bag of economic data this morning. Not really a clear picture. Maybe that explains these small moves, at least if you take a look at the large stocks. The small caps, your little guys, the Russell 2000 down about 0.9%. We'll keep an eye on these ones as well. But let's look under the hood here, because we've been talking about those quantum computing stocks really taking a big leg lower after comments from NVIDIA's Jensen Huang. He said that very useful quantum computers are likely 15 to 20 years away from reality. Again, what very useful means to Jensen Huang could mean something to all of us, but in any case, you take a look at Rigetti right now, down about 34%, Shanali.
Yeah, speaking of NVIDIA, let's take a look at the chip stocks at the open, because, of course, you saw a brutal set of selling yesterday when it came to NVIDIA. You're seeing it relieve itself right now, up about 1.5% this morning. There were concerns about tariffs and inflation. They're all on top of Wall Street's mind as Trump prepares to enter office. But it's interesting, Matt, you still see a pretty mixed trade. AMD still down more than 3% at the market open, but Micron extending its gains another 1%.
all right, I'm looking at Albertsons. After spending a significant amount of time in England, I really care about grocery store stocks. Albertsons raised its profit guidance in its first earnings report since a judge blocked the $24 billion deal with Kroger. The company's comp sales growth missed expectations slightly, and you can see the shares down a little bit, but I don't really care about grocery store stocks. I'm just saying that.
I wasn't sure. You know, I would believe almost anything you said, which is pretty dangerous. But in any case, Albertsons down about 12% over the past year. Definitely needs some good news after that merger fell apart. But in any case, let's broaden out this conversation with JP Morgan Private Bank U.S. equity strategist Abby Yoder joining us on set. Great to see you in person.
Great to see you.
So let's talk about drivers of this market right now. One of the narratives, of course, towards the end of 2024 was that this was going to shift away from a macro-driven market into more of a fiscal-driven market. It feels like in the early days of 2025, though, you're seeing every economic data print move this market. A lot of attention paid to Friday's jobs report. If you take a look at the options market, how are you thinking about the potential catalysts going forward?
Well, I think to your point, yes, Friday is very important from a labor market perspective. I would say our view on the labor market at the moment is that it's loosening at the margin. It's nothing to be very concerned about, and it's loosening to an extent that allows the Fed to continue to cut. In terms of catalysts in the near term, I think the most important thing really is going to be earnings, which is coming up starting next week. So I think that's something that we're very focused on. I think the consensus estimates are around 12% growth for the quarter. We're slightly above that in terms of our outlook, and a lot of that is being driven by tech and our optimism for tech going into next year.
I'm glad you specified, because when we look at those estimates, one big question I have is you have a stock pickers market once again, and more investors saying to us that you can't even pick sectors anymore. You have to pick stocks within the sectors. So what are the ingredients that you're looking at for companies to outperform here, that growth story?
Yeah, well, so I think to the point on looking within sectors, right? So we're still positive tech, but the way we're thinking about it is like, yes, we still like these mega cap names, but we're in this third year, we're entering the third year of this AI phase, right? And so we're thinking about different parts of the tech supply chain that are going to benefit in that type of time period, right? So when you're thinking about a data center, for example, thinking about companies that are supplying the components that go into those data centers and that allow data transmission, which is obviously very important and is going to increase as these data centers, process more information. And so that's something that we're thinking about. So not just necessarily the mega cap names, but the other names that are going into that build out as well.
If I think about a rally, I have to worry about yields. And I mean, I showed a chart at the top. We're perilously close to 2008 highs. In the UK, I think they're there, right? Isn't that a concern? Or I've heard some people paint it in a bullish light. Is it a good thing for stocks?
I mean, it's not necessarily a bad thing, right? I think the way that the market's moving right now and the way that let's think about it, let's compare it to the move in yields in, the fall, right? And what you saw was stocks actually held in quite well when rates moved that much because economic data was hanging in. That's what we're getting right now, right? And I would say there is definitely a concern around what's going on with the fiscal picture, right? That's what's really weighing, I think, on the term premium as it relates to rates. But the difference between, to your point, Matt, on the U.S. versus the UK is it's not necessarily like a deficit concern in our mind because you're not seeing the dollar sell off, right? You're seeing the pound sell off in conjunction with rates, and that to us is like a fiscal concern in terms of their outlook. Whereas in the U.S., you're having that decoupling of rates versus the dollar, which is to us signals that the market isn't quite concerned right now. There's like some tidbits of that, but not overly concerned.
So if you dissect the drivers, maybe it's not as scary as maybe at 4.7 on the 10-year Treasury yield would be at first blush. But is there any level that would concern you when it comes to the long end, drivers aside? You had a note from Goldman out this morning saying that basically equities have been really resilient during this bond sell-off so far, but that leaves a lot of scope for downside if we got much higher.
Yeah, well, so I think, and this isn't precise, but I think there's like probably a psychological level around 5 to 5.5 that would cause some pain in equity markets. But I think what's important, and we incorporate this in our outlook, is right when you're thinking about what is the drive, like why do rates matter to equities, it's really around mostly valuation, right? And so in our outlook, we have a year-end target of 6,400. A component of that is valuation compression, right, down to 21 times. And I would say that's probably below the majority of the street in terms of their outlook. And so we're taking into account like those higher for longer rates in that outlook, in that view.
It's interesting. We talk so much about rates, but one thing that's harder to digest, I think, is the impact of the dollar on equities as well, because that's what's been moving very drastically in light of any conversation about trade. DataTrack this week said that the nominal dollars index, the gain, is worth 36% of the S&P's relative outperformance since the election. That's incredible. I mean, if that's the case, then what would it mean if the dollar were to reverse?
Well, I mean, I think there are two components of the dollar move. I mean, a stronger dollar is not necessarily good for international profits as it relates to these large companies. So I would also
domestic investors. Who cares?
Yeah,
right?
I mean, I would argue that like the stronger dollar has been a negative impulse on the equity market. Like I think that's been more of the headwind, and I think it's one of those things that's under the radar because we're pointing to rates. But I do think the stronger dollar, from that perspective, will be, not obviously a fundamental headwind, but a headwind in terms of earnings for international companies.
Abby, we have to leave it there. We thank you so much for joining us here on set. Happy New Year to you. Can you still say that? Is it too
Larry
late?
David says that you can. January 7th was
Is
the
the
last
cutoff?
day.
Damn,
Yes.
we're a
According
day
to
late.
Larry David, if you put stock into that.
I don't.
I do. What he says makes sense.
Boy, is this another debate we're going to put our guests up to? Is what I want to know, Abby. Thank you so much again. I want to quickly check on some stocks here because you have eBay just moving higher. It's your biggest gainer in the S&P 500. Meta said it will allow eBay ads on Facebook Marketplace in Germany and France and the United States to comply with an EU antitrust order. The EU ordered Meta to stop trying its classified ad service to Facebook's social media platform, and eBay shares now highest since 2021. We're going to keep you in the loop on all things moving under the hood. Interesting single stock stories here. Now coming up, another one, Moderna stock on the rise as it looks to help another public health crisis. We're going to bring you the details of that next. This is Bloomberg.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
All right, welcome back to Open Interest. Quick check on these stocks. About 12 minutes into the session, you can see red on the screen across the board, across the size caps too, because the small caps right now really in the hurt locker. The Russell 2000 down about 1.2%. This follows about an 0.8% fall yesterday. A lot of concerns. Higher for longer. Will they, won't they, when it comes to the Fed's rate cutting trajectory? All of that is being expressed in this index right now. We'll continue to keep an eye on that. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Palo Alto Networks getting a pair of analyst downgrades today. Both Deutsche Bank and BTIG said that the stock no longer a buy. The DB analyst expects that cybersecurity companies will underperform this year, while BTIG cites limited upside catalysts for the stock, which is currently down about 3%. Next up, you have Kellogg getting downgraded to a sell at TD Cowen. The firm cites a tough year for consumer staples and says that the company's market share losses and its uninspiring product pipeline suggest that the spinoff has not improved the company's competitiveness in the challenging breakfast cereal category. A very competitive landscape there. Shares down on WK Kellogg about 7%. And finally, with Barclays upgrading Tapestry to a buy. The analyst says that the parent company of Coach and Kate Spade is well positioned to gain market share. Those are some of your top calls, and one stock that we're keeping a close eye on today is Moderna. It's up this week as the drug maker is working on a vaccine for the bird flu. And of course, one person in the U.S. has died from that flu, while there have been over 75 confirmed cases. Here with more is Sam Fazeli of Bloomberg Intelligence. And clearly, shareholders of Moderna and some of these other names are optimistic here, Sam. But what is the actual revenue potential when you think about the avian flu?
Yeah, hi. I'm sorry about my voice. I'm the victim of one of these.
Oh, no.
Sorry.
You're doing great.
A brilliant laryngitis case hit me, so there we go. It's the first time in my life. Nothing to do with COVID, nothing to do with bird flu, just a common law garden virus. So the thing for Moderna is that they have been working on an H5N1 vaccine. So has, I'm pretty sure, Pfizer-BioNTech. And there are already 3 approved. The first one that got approved was Sanofi's back in 2007, right? So let's put that into context. Moderna doesn't have any vaccine approved in this case. Of course, they have a good technology for putting these vaccines out. We do have a case of an unfortunate death in the Louisiana patient. That's the first death ever in the United States from H5N1. But there have been 900 deaths over the past 10, 15 years of circulation of this virus, mostly in developing countries. So there haven't been any in the United Kingdom, etc. So what value this has for Moderna or BioNTech or Novavax, as in my view, is questionable until we see proof, and I hope we never see that there is transmission of these viruses from human to human, which we haven't seen.
All right, Sam, we're going to let you go. Go get better. That sounds painful. That is Sam Fazeli.
Have a hot toddy.
Exactly. Go enjoy that. It's late in London, so that would be acceptable. Sam, really appreciate your insight. That is Sam Fazeli of Bloomberg Intelligence. And speaking of healthcare, next week, I'm excited. I head to San Francisco for the 43rd annual JP Morgan Healthcare Conference. On Monday, I'll speak to a number of CEOs, including Christopher Weber of Takeda Pharmaceutical, also Emma Walmsley of GSK. I'm also excited to speak, of course, to Dave Ricks of Eli Lilly as well. A lot of territory to cover there. But before we leave on this block and go to commercial, let's check in on shares of Boston Scientific. The medical device company said it has agreed to acquire Bolt Medical and pay about $443 million upfront for the 74% stake. You can see shares currently higher almost by 5% or so. Also, coming up, Tiger Cubs delivered in 2024 thanks to tech stock picks such as Meta. We'll explore the results next in our Wall Street Beat. This is Bloomberg.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to Bloomberg Open Interest. We're taking a look at stocks right now. A little bit of a deepening of those losses in the S&P 500, currently down about 0.2%. The Nasdaq 100 down about 0.1%. The Russell 2000, the small caps, really falling out of bed this morning, down about 1.4% on the Russell 2000. And I think so much of this is tied to what's going on in the Treasury market, particularly when you talk about those small companies. Where you need lower rates is in those broadening out trades, totally predicated on the rate cutting outlook, which of course has been slashed in half.
Absolutely fascinating. Most sectors in the S&P 500 in the red today on the heels of that rate movement. Even the financials, which were largely beloved, but of course higher for longer, means a lot of things, doesn't it, Matt?
Yeah. I mean, look, the Russell 2000, we show often the chart of how many companies are losing money in that index.
We certainly do.
Right? And so interest rates really matter to at least 40% of the index. And right now, the 20-year yield is over 5%.
God, you love that yield. That's going to be
it's focused in on the 20s.
That will be the benchmark. You're going to will this into existence.
We're going to need to start citing the S&P mid-cap 400 at this point, too, to start to get a gauge on how these mid-cap stocks and small caps are doing. All right, we're going to switch gears. We're going to talk about the big guys. It's time now for the Wall Street Beat. More hedge fund returns are rolling in, notably Tiger Management. Gained 24% last year, with Meta is biggest position for tech-focused stock pickers. Meta shares climbed 65% in 2024. We're going to discuss this with Bloomberg's Hema Parmar. Interesting. Tiger Cubs coming back again. Have they kind of gotten over the high water mark here? Because they had a lot of pain when we saw the drawdown in valuations. But big tech, really interesting. We know they've all been taking different strategies into how they approach the Mag 7 even.
Yeah, so it was a really tough 2022. We saw numbers we really haven't seen before. Some have gotten out of their high water mark, some haven't. So if we look at Viking, for example, they're a fund that didn't lose nearly as much as their peers. They bounced back off their high water mark pretty much the year after. But this is the first year for Co2 where they bounced back from their high water mark. If we look at Lone Pine, they're close. They only have to make about 4 or 5% more to get over that. But Tiger, they had the worst performance. And a lot of these guys had 2 bad years back to back, 21 and 22. So they still have to make about 50% more than they have. That said, they have bounced back a decent amount and posted double digits for 2 years. So investors are probably happy with that, but still a long way to go.
Is the common denominator for all of these names that did well big tech? Is there anyone who wasn't overweight some of these big tech companies that we talk about all the time that also performed?
Yeah, so all the Tiger Cubs, they made most of the money. I mean, they focus on tech, so their gains really came from tech, and Meta was their biggest position pretty much across the board. But there are some other equity stock picker funds that did make money without necessarily being an NVIDIA or Apple or Meta. So let's take a look at Contour. They're a $3 billion hedge fund. They're up about 47% so far this year, mostly because of their short book. They were not in NVIDIA or Apple. Then if we look at Rubrik, they were up 81%. That's because of an energy bet that worked out really well for them. They were in Taylor Energy, and that stock more than tripled during their investment period.
What does investor appetite look like for the Tiger Cubs? I mean, I'm old enough to remember Julian and how important these investors were on the hedge fund scene, but that's because I'm old, right?
He floats the Dow, that old.
Exactly. So Do the kids still invest with these guys? Are stock picking funds all the rage right now?
Yeah, so stock picking funds are the most sought after strategy, according to a Bank of America report. They are the hottest one right now of the space. But I do think when you look at Tiger Cubs, you want to look at them a little bit differently because they are so tech focused, because so many of them have really gone through a trying period, and because they do a lot of private venture as well too. So whether investor demand has come back for those funds, we didn't really see a lot of appetite for Tiger's latest venture fund, for example. I think they're still trying to ramp up across the board, all these funds, and I think investors are watching very closely. I wouldn't call them all like the hottest funds just yet, but equities as a broader strategy is in hot demand.
Has there been no reputational damage over the past years from the various scandals and, massive jail time that some of them have gotten?
Hedge funds broadly?
No, Tiger Cubs.
Tiger Cubs.
He's referring to Archegos.
Oh, yes. Well, that's a family office. So,
right, no, but
yes.
Bull Wang was a Tiger Cub, right?
Yes,
so,
yes. Yeah, I mean, I think...
And he got in trouble before Archegos. That wasn't his first brush with the law.
I think a lot of the reputational damage has come from just pushing so fervently into private equity and tech at a time when it was just not opportune, and kind of getting over your skis on some of these venture bets, having it blow up in a big way, having that pain across the board, and I think that has really soured people to having too much exposure and concentration into some of those that exposure.
But it's a crossover model, and that's what really was pioneered by these Tiger Cubs in the recent years. It looks so rosy. Tiger Global, Co2, is that crossover model where venture is being sought after, is it dead yet? Because we're on the precipice, in theory at least, of an IPO rebound.
Right.
This would be the time to cash out some of those trades.
So that's the thing. Yeah, you know what? This could be the time to be really investing in the space. The problem is a lot of allocators already invested very heavily in the years before, so they got burned, and they have less capital to put to work, and they have less redistributions from PE. So when they're looking at where to put their next dollar, they're really thinking, okay, do I put it in a hedge fund? Do I put it in more private equity or more venture where I'm already overexposed? Yes, for managers that have not had that exposure in the past, this is a great time, and we've been seeing that push in, but so many have their hands tied.
Emma, great having you on.
Thank you.
Love talking about this old school is new school kind of stuff. They're back. Emma Parmar there covers hedge funds for us, and Shanali obviously does that as well. We're looking at some, I guess, a tech stock right now that's moving a lot this morning, eBay.
This is fascinating. This is the biggest move since 2021 for eBay.
And so do you ever use eBay?
I don't. My husband does a lot because he likes to search for old cameras that you can't find that easily.
Well, I can tell you that because I've sold a lot of stuff on eBay lately.
You seem like the type.
They have this new promoted ads thing where they take another 10, 12, 15% from the seller. And so if they get their ads in more places like Facebook, they can raise fees drastically.
And you can thank the EU for that. Anyway, coming up in the next hour, Sarah Wolf from Morgan Stanley Wealth joins us to talk ahead of Friday's jobs report. This is Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where
it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Shonali Bassett.
And I'm Katie Greifeld.
And coming up, second term unchained. President-elect Trump floating a number of headline-grabbing ideas, including seizing Greenland and absorbing Canada. We're going to give you the context.
And it was a milestone year for Rolls-Royce, not because they're selling more cars, but because they're selling more expensive, super high-end, bespoke cars. The CEO joins us later this hour.
And it's still all about NVIDIA. CEO Jensen Huang's comments still making waves in the markets, particularly in the quantum computing stocks. Ed Ludlow joins us from Vegas with the latest later on this hour, following his interview with Huang yesterday. But let's get to these markets right now. Volume a little bit higher than normal. You can see a sell-off developing in the S&P 500 right now, down about 0.2%. It's been a rough 2025 so far, of course, for the stock market bulls right here. The NASDAQ 100 unchanged. Big tech trying to be resilient here. We'll see how long that lasts. And the bond market holding in steady right now. We are pretty much unchanged on the 10-year yield, but the levels are eye-watering. You can see the 10-year Treasury yield right below 470. These are the highest levels since April or so. And of course, this comes after this morning's jobless claim data. It came in a little bit softer than expectations, below expectations. That's good. But then you had ADP also miss estimates as well, which would signal some weakness. And all this comes before, of course, Friday's jobs report. So let's get to the latest now with Mike McKee, of course, joining us from Washington. And Mike, talk to us about what ADP says about NFP. I say this every month, but the mantra out there is never trade on ADP because it's hard to draw a line between those two figures.
Yeah, well, nobody's listening to you, Katie, because everybody trades on ADP. I think they just trade against the forecast for the number, and the number came in much lower than even forecast. Forecast was for 140. ADP came in at 122 for the month of December, which is extraordinarily low. Now, we also saw, as you mentioned, a good number for initial jobless claims, 201,000. But the issue there is that's largely seasonal effects. The seasonal adjustments expected a bigger increase in jobless claims. We didn't get it, so they pushed it down farther to 201. I think you take that with a grain of salt. But the ADP one is interesting because you go back and you look at what happens with ADP and non-farm payrolls, the private sector payrolls, and they don't match up at all. And ADP has now gotten to the point where they tell us they are not a forecast for the private sector payrolls number. As you can see there, they don't match up. They kind of go in the same direction. The red line all the way over on the right is what the forecast for private sector jobs is, and it's above where ADP is now. Last month, it was significantly higher than ADP. So we'll see what we get.
Every time there's a blowout ADP number, I run over to Mike McKee's desk and ask him to explain this to me again.
And he shows you that chart.
Exactly. Mike, you are not here. You're down in Washington, D.C.
You are right.
What are you doing down there?
We've got the Fed minutes this afternoon, and it's going to get a little more attention than usual in the sense that, you remember at his press conference, Jay Powell said that some members of the Open Market Committee had incorporated the idea of Trump tariffs and other fiscal policies into their forecasts. And so the question is, how many did that? How do they explain that? And what can we really take away from the consensus if half the people were using a different kind of forecast than the other half? Markets have been kind of confused by those December forecasts from the Fed, and they want to see a little more explanation, if there's enough of one, to actually, to get back to what Katie said, trade on.
All right, Mike, thanks very much. Look forward to hearing from you when we get the minutes, and then seeing you back here for the granddaddy of all economic statistics on Friday, non-farm payrolls. Joining us now is Sarah Wolf, Morgan Stanley Wealth Management Senior Economist. Sarah, you've talked about the fact that some Fed members are now speculating on what Trump policy will do to the economy. They said previously they wouldn't do that, or Powell said they wouldn't do that. Is that why we see rates rising? Is this concern about, tariffs and mass deportations being inflationary and holding the Fed back from cuts? Or is this, U.S. economic growth is strong and so rates are higher?
I think the FOMC December projections make it very difficult to discern what's actually driving markets. First of all, you have about a third of participants that are not including the Trump policies, another third that likely are, and another third that we don't really have a good picture on. The reality is that when you take that all together, some are incorporating the economic data and making their decisions off of that. Waller, for example, spoke earlier this morning, and he doesn't think the Trump policies are going to be as inflationary. And as a result, he thinks there's going to be more cuts. But it's very difficult to discern which policymakers are putting in which dots. Given all of that, we're going to be seeing a lot of shifts in views and a lot of shifts in the SEP over the coming year as these policies actually bear fruit, and it's going to make it very difficult for markets to get a sense of what to believe and what type of forward guidance to latch on to.
Another thing I think that's difficult for investors, Sarah, is that you had the Fed chair months ago saying that politics is not playing into the decision making, but then you see for some of the participants, it is. At least parts of the politics and policy making, trade, immigration. How is that uncertainty playing into interest rate expectations this year?
So the issue is that none of the FOMC members and economists know in reality how these policies are actually going to play out over the course of 2025, right? Everybody's giving their best guess on what the immigration numbers will be, on what the tariff numbers will be, on what deregulation means. But the reality is that nobody knows for sure. So I do feel like what we're seeing in rates markets is kind of the more conservative approach, that this is going to mean higher inflation, fewer rate cuts, and that's why we've been seeing this sell-off in yields and why we're seeing a stronger dollar. But we do need to remember that maybe we shouldn't be taking these policies at face value. Our view is that the tariffs are likely not going to be as aggressive as what Trump has been saying. It's being more used as a negotiating tactic. And so perhaps market pricing of only 1.5 cuts for this year is a little bit too hawkish, and we could actually see less aggressive tariffs, less inflationary pressures, less of a hit to growth, and perhaps 3 cuts instead of 1 or 2.
It's interesting, Sarah. We heard something similar from Fed Governor Chris Waller earlier this morning, saying that if, as I expect, tariffs do not have a significant or persistent effect on inflation, they are unlikely to affect my view of appropriate monetary policy. So it feels like we're all in sort of wait and see mode here. But I want to get your perspective on what's going on in markets, and specifically the bond market, because the Fed has cut by 100 basis points since September. And since September, you've seen the 10-year Treasury yield rise by about 100 basis points. So we're going in opposite directions here. How do you think that the Fed members and Jerome Powell himself are sort of thinking about what's unfolding?
Well, Chair Powell needs to be a big concern, and we'll likely see some mentions in the FOMC minutes about financial conditions because of this big shift in policy expectations. And as a result, we've seen a really big sell-off in rates. This has been significantly tightening financial conditions over the last couple of months, and that's not really what the FOMC wants, right? You do see a labor market that's slowed down significantly. It looks somewhat to be stabilizing, but the FOMC does not want to see any more slowing in the labor market, and as a result, they really don't want to see that much of a significant retightening in financial conditions. And so I do think some of the communication that we're going to get is going to help, put a damper on some of that financial conditions tightening, because we do want to be in an environment of less restrictive policy than we were a year ago. If you look at the 10-year, we're at 4.5% right now. A year ago, we were at 4%. That's not where we should be when we're making policy less restrictive. So I do think we need to get a little bit more forward guidance from FOMC members in order to prevent, a retightening in financial conditions, a widening in credit spreads.
I want to ask about the jobs number coming out on Friday, Sarah. Last reading for 2024, the survey shows 163,000 are expected. The whisper number is substantially higher at 185,000. We have a cool function on the Bloomberg, WHIS Go, shows the whisper, and you can even put in your own estimate and see how you fare against your Bloomberg competitors. What are you looking for? And is this labor market really softening? Because those numbers, while not very high, don't seem weak.
I think anything between 100K and 200K is going to be dismissed by markets on Friday because there's so much more attention right now on inflation, and the Fed has made that very clear that they're a lot more tuned right now to upside risk to inflation since the inflation prints have stalled out a little bit, and now uncertainty is weighed to the upside for next year as well. I think we would need to see, some type of material upside in payrolls well above 200,000 or downside below 100,000 to get a really strong market reaction. If we look at the mix of data on the labor market this week, we're not really getting a clear picture. It kind of looks like things are stabilizing. As you mentioned, initial claims are low, but continued claims are rising. But we still have this holiday effect. So I do think even though the hurricane effect, the strike effects that were impacting October and November payrolls are behind us, we're still going to be getting this holiday effect that makes the picture a little bit muddy. So I do think we'll get a little bit of a discounting on the Friday payroll report.
I want to bring up one point about labor markets as well. This is from Neil Dutta over at Renaissance Macro. And when he looks at the idea that labor markets are cooling, and as we know, there's a lot of data that also shows otherwise, he says that he's looking at the quit rates rather than openings because he's looking at a private sector quits rate hitting a fresh cycle low, which also implies cooling wage growth through the middle of this year, he says. So if you're looking at that as one barometer, how seriously do you take it? And isn't some of this kind of okay in that cooling wage growth could also be a decent signal regarding inflation?
Yeah, I think you're making great points there that on one hand, you have openings that have started to rebound and stabilize a little bit. Layoffs are staying low, but quits are low. And so I think as openings start to rebound more and the hiring rate starts to turn, that's when we'll start to see quits rate come back up again. But we're not really, significantly at that tipping point quite yet. And I think this is a good place to be, right? We want to kind of see these metrics being moving sideways at healthy levels where that really is what the quits rate is doing right now. It ticked down a little bit in the latest reading, but if you look more broadly over the last year, it's kind of bouncing around sideways. We're not seeing significant moves higher or lower. As openings pick back up, which will depend a lot on the environment for next year, how much does deregulation actually really help small businesses and support hiring there? That's when we could start to see a pickup again in the hiring rate again in 2025.
All right, Sarah, appreciate the preview ahead of Friday's jobs report. That is Sarah Wolf of Morgan Stanley Wealth Management. Now, coming up, we are less than 2 weeks away from Inauguration Day, and President-elect Donald Trump has made some bold statements as it relates to foreign policy. More on that next. This is Bloomberg.
to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Somebody wants to use your product, Zepbound, how much does it cost a month?
You can buy Zepbound direct from Lilly for $3.99 for the starter dose.
$3.99?
No.
No.
This is a valuable innovation, David.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
Today, SEC Chair Gary Gensler sits down for an exclusive interview with Bloomberg's David Gura as he prepares to leave office. Tune in today at noon Eastern, only on Bloomberg.
Let's get to high interest now. We'll look at what's making headlines around the world, and thousands of people are fleeing the Los Angeles area as raging wildfires are spreading by the most destructive windstorm to strike the region in over 10 years. Hurricane winds blowing the uncontrollable blaze around the region, with the authorities expecting the fires to continue for another couple of days. Mandatory evacuation orders are affecting so far around 30,000 people, while more than 300,000 people have lost power. Indonesia has decided to keep a ban on the sale of Apple's iPhone 16s in place, saying its $1 billion plan that includes building an AirTag factory, Apple's $1 billion plan, is insufficient to meet local investment requirements. The government is willing to negotiate with Apple, but may impose sanctions if the company continues not to comply with local investment rules. And a group of around 20 Republican representatives from the House have been invited to Mar-a-Lago this weekend to meet with Donald Trump ahead of his looming battle to extend the SALT cap. GOP lawmakers from New Jersey, New York, Connecticut, California, they're all expected to push for a more reasonable adjustment to the cap, which currently offers up to $10,000 of relief for the high tax states, but used to be unlimited. So doubling that just isn't going to do it for these lawmakers, Shonali.
Yeah, Representative from New York, Mike Lawler, saying that $10,000 is woefully insufficient. So your congressmen are hearing you, Matthew Miller. Meanwhile, in a press conference yesterday, the president-elect made several bold foreign policy statements, including calling for absorbing Canada, declining to rule out using military force to seize the Panama Canal and Greenland. Joining us now from D.C. to help us walk through all of this, Bloomberg Politics editor Laura Davison. Barring the specifics for a moment here, the tone, how is that being perceived not just from the countries he's talking about here, but also European allies, the rest of the world?
This is really a different Donald Trump than we saw on the campaign trail when he talked about ending wars and very much this isolationist perspective that he took. Now this is very much an expansionist perspective. Almost he's talking about, building an empire in some regards. So this has been met with a bunch of different reactions. For example, in Panama, the Panamanian prime minister said, or president said, look, I'm not going to talk to him. I'm not going to respond to him until he's actually president come January 20th. Of course, that's, he's going to be president. There's no doubt that he's going to have to face some of these questions here in a couple weeks. But you see foreign leaders sort of brushing off and being a little bit flippant with the president-elect. Also in Europe, you're starting to get a sense of real annoyance, both from the tone, from Danish leaders, for example, as well as broadly of sort of, Musk, who has been Trump's right-hand man for the past several months, of, all of the meddling that Musk has also started doing, that there's a broad sense that, that Trump is, kind of coming out in a big bombastic way, and he doesn't maybe actually mean some of these things that he says. With Trump, that's always the difficult line to walk of, what is sort of a negotiating position versus what is, something he actually intends to follow through on.
But there are, Laura, I imagine people taking him seriously. I mean, Greenland could be considered a threat in case of a conflict, for example, with Russia. And the U.S. has acquired territory in the not-so-distant past, right? We bought Alaska. So it's not totally as insane as, maybe the sort of intellectual elite in the Northeast thinks.
Yeah, it's not out of the question. I mean, these things, have happened in the past. You only have to go back, 5, 6, 7 decades to see, both the USSR and the British Empire and as well as American colonialism, as this is something that has been done. The difference now is you have, sort of these countries coming out and saying, look, this is not on the table. Greenland is not for sale. It won't be for sale, is what Denmark said in recent days, as well as, Canada. Trump has really trolled Canadians over the past several weeks, including Justin Trudeau, saying that, hey, why don't you just become a 51st state? Trump probably hasn't thought through all of the implications of that. That would probably mean 2 more Democratic senators, which would mean he would lose his Senate majority. But Canada has said, look, this is not on the table. You saw a very strongly worded statement from Trudeau yesterday.
Well, you'd be able to get into Canada without a passport. I will say
Trudeau, he's done.
That's true. The last time we expanded American territory was in 1947 when President Harry Truman oversaw the acquisition of several small Pacific Ocean island chains from Japan in the aftermath of World War II. So never say never, I guess, Laura, but... Alaska, too.
Yeah.
But I'm saying the last time it happened was 1947.
Oh, those small.
They were little.
But
in any
probably
case,
nice, though.
Probably. I mean, I don't know.
Maybe strategic.
Maybe we can visit them. In any case, Laura, what did we hear Donald Trump say about tariffs yesterday? Was there anything new on that front there? Because that's where a lot of investors are focused right now.
Yeah, a couple new things. One, he said that he would threaten Denmark with tariffs over this Greenland issue. He didn't get into specifics, but he said they would be high-level tariffs. And this is, something that we know that Trump sort of thinks about. He, sort of throws out the threat of tariffs as a negotiating tool, and he is very willing to follow through on that. He doesn't always. So this is, again, where this gets to be sort of a geopolitical, kind of dance here of, other nations trying to figure out exactly what Trump means, what he might follow through with. He doesn't need Congress to do any of this. So if he decides he wants to do it once he's president, all he has to do is basically sign a piece of paper saying that tariffs are into effect. We also really saw him double down on both tariffs for Canada and Mexico. He had talked about this several weeks ago and mentioned, really connecting the threat of tariffs to the flow of fentanyl and illegal migration across the U.S. borders. He really sort of said that, look, this is coming. This is something that he, he sort of really escalated the language there.
Laura Davison, we thank you so very much for your time covering all things U.S. politics for us. Now, still ahead, Meta CEO Mark Zuckerberg, yes, he made some news yesterday announcing the end of fact-checking on his social media platform, but people were watching what he was wearing instead. We're going to talk about that more in Social Climbers next. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. February 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
All right, it's time now for Social Climbers, companies making waves this morning. And first up, Flutter. It's the world's largest online betting company. It said that earnings at its FanDuel brand will be sharply lower after U.S. football gamblers enjoyed an unprecedented winning streak. Flutter said that the NFL season had the highest rate of winning NFL favorites in almost 20 years, and that's bad news for Flutter, but shares shaking it off at the moment. Next up, we have shares of Helen of Troy. They're falling. That's after the parent company of consumer brands such as Hydro Flask and Vicks said that a weak winter season hit its sales in the third quarter. The sales decrease was primarily driven by a decline in its beauty and wellness line. And finally, Meta CEO Mark Zuckerberg reportedly wore a rare $900,000 watch. You can buy so many really nice horses for that sum of money. That was as he announced his company's decision to end its fact-checking practice. The Swiss watch is said to take 6,000 hours to assemble, and only 3 models are made by hand every year. Some say it's a sign of Zuckerberg's stylistic evolution. Others are reportedly deeming it a midlife crisis. I'll leave that to you, the viewer, to decide.
Can I just, Katie, is it...
Go ahead.
Is it not more notable that he's wearing a necklace? He started wearing a necklace
recently.
recently.
If we could get a photo of the man, we could really dissect.
I just don't. Is that a new thing? Did the kids do?
He's been wearing a necklace for a while. He has done this rebrand. Here he is. I think he might need a haircut, but in any case, there's the watch. There's the necklace. He also's got a T-shirt on. In any case, let's take a check on these markets right now. It's been a rough day, a rough start. Of course, you can see the S&P 500 down about 0.3%. Same thing if you take a look at big tech. The bond market, relatively well behaved right now, but don't go anywhere because coming up, we're going to keep talking about luxury items, and that is with Rolls-Royce Motor Cars CEO Chris Brownridge. He joins us next. This is Bloomberg.
2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this, the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Rolls-Royce Motor Cars didn't sell more vehicles last year, but it made more money. At 5,712, BMW's pinnacle luxury car maker sold about 300 fewer total units than in each of the two previous years, but at a higher average price on a 10% jump in bespoke deliveries. As a result, Rolls-Royce is now investing an additional $375 million in its Goodwood manufacturing facility to meet rising demand for personalization that can drive individual transactions deep into seven figures. Joining us now is Chris Brownridge, the CEO of Rolls-Royce Motor Cars. And Chris, this is, I think, a fascinating strategy move that you have made with the company. And it goes beyond just sort of paint to sample or picking a different leather. Tell us about some of the personalizations that people are doing.
Well, Matt, first of all, good morning, and thank you for inviting me onto your show. Last year was a tremendously successful one for Rolls-Royce, and you know that at Rolls-Royce we make handmade bespoke luxury goods for our clients, and we strive to deliver them an extraordinary experience. And our bespoke collective team is right at the heart of our business. What we aim to do is create a masterpiece for each client, and the investment that we've announced today is all about facilitating that through creating the capacity and the space within our manufacturing facility at the home of Rolls-Royce in Goodwood so that we can deliver those projects.
So, but your customization goes beyond the customizations of almost any other car maker I can think of, certainly any one that produces in the hundreds or thousands of cars a year. What kind of investment are you making, and what is it going to allow you to do to these cars?
Well, Matt, at Rolls-Royce, bespoke means something very profound. It can be something as simple as having a hand-painted coach line on your Rolls-Royce that perhaps has your family motif on the outside of your motor car, or perhaps embroidered in a head restraint. It could be something more profound, celebrating the relationship you have with your partner, where the headliner on the interior of the car, which uses fiber optic cables to recreate a constellation of stars, it could show the constellation on the night that you met, in the location that you met. Or it could be something much more profound, whereby, for example, last year we made a car for a very famous client where the interior of the car used silk paneling in the headlining and the doors, where we embroidered a particular flower and hand-painted that flower and created a fascia panel, a dashboard panel, inlaid with mother of pearl because it reminded them of the different homes that they own. So the diversity is extraordinary, and this extension will mean that we've got more capacity and space to deliver these projects because they are very time consuming, and it comes hand in hand with us expanding our network of private offices. Now at Goodwood, the home of Rolls-Royce, our clients come to us and they meet the design team, but not every client can come to us. So we've opened private offices in Dubai, in Shanghai, in Seoul, and of course in New York, where our designers are working nearer to the clients and they can bring their ideas to life. So effectively this network of private offices is driving a growth in the demand for these wonderful creations, and that's why we're preparing the facility in Goodwood.
What's your fastest growing market right now? It's interesting to hear more about the private offices. Certainly the Middle East is an area that a lot of investors have been looking at for growth. But is there one area more than others that you see more potential? And what are the demographics driving that growth?
Well, the wonderful advantage Rolls-Royce has is it's got a heritage of 120 years, and it's famous throughout the world. And our business is present throughout the world. So we have clients in every corner of the world, across every region. Of course, the USA is our biggest region, and we have a strong client base there. But across the world, we've seen a significant growth in Europe and the Middle East, and also APAC this year. And the great thing is we're seeing in every corner of the world significant demand, particularly for our bespoke creations.
And Chris, I want to talk a little bit about the future here. Obviously, when it comes to EVs, you have Spectre. It's selling very well. You talk about in your release how this manufacturing facility will help your transition to an all-battery future. It's been interesting watching the trends, though. You see hybrid selling very well in sort of the normal market, the non-luxury market, and even in the luxury market. Could a hybrid ever be in your future?
Well, I'll start by talking about our experience with Spectre this year. Now, Spectre's a super luxury coupe, an absolutely stunning motor car. And in 2024, it was the first full year that we were delivering this motor car to our clients. And it's been a very successful year for Spectre. In fact, it was the second most demanded Rolls-Royce, which is extraordinary. And what we have with Spectre is it's the first Rolls-Royce to use a very highly developed electric powertrain in a Rolls-Royce. And our clients have told us that what this does is it amplifies all the characteristics that you'd expect of a Rolls-Royce: the silence, the waftability, the ease of driving, and that magic carpet ride. So the feedback that the most important group our clients have given us is that they think this is a wonderful Rolls-Royce. And with the data backs that up, the client satisfaction with Spectre is the highest of any of the motor cars that we produce. So that's a really encouraging start. You know, at Rolls-Royce, we strive for perfection. And our powertrains are the finest for the motor cars that we deliver to our clients. And of course, we already have the wonderful V12 combustion engine. With Spectre, we have our first electric powertrain, and both of them deliver the best possible experience for our clients. We wouldn't deviate from that because we always want to deliver the best possible solution. And Spectre's told us very clearly that when we combine this new technology with a Rolls-Royce, we can deliver the best car in the world.
I can confirm that the V12 is a highly enjoyable powertrain. I have not driven the Spectre yet.
Okay.
Chris, are there any holes in your product offering? I mean, you've got Cullinan, which is your bestseller, the big SUV. Spectre, as Katie mentioned, has done very well. I tend to prefer Ghost or Wraith, more drivers' cars. Phantom is the one that we're looking at now. Or that's Cullinan? That's Cullinan. Phantom is the one you want if you've got a chauffeur. Is there anything that you need to add to that product offering?
Well, we have had a very busy year in 2024 where we introduced the Spectre for the first full year. And of course, we introduced the Cullinan Series 2 and Cullinan Series 2 Black Badge, and also the Ghost Series 2 and the Ghost Series 2 Black Badge. We've had a very busy year, and we have a very, very strong core product offer. And all of our motor cars are like a blank canvas for the bespoke offer that we provide to our clients. In terms of future products, I won't give any secrets away right now, but of course there are always exciting things that are coming down the line.
All right, well, I'm excited, and that's for sure. Rolls-Royce, really the pinnacle of luxury vehicles worldwide. Chris, great to have you on the program. Chris Brownridge there of Rolls-Royce Motor Cars, owned, of course, by BMW. Coming up, a case for healthier snack options. The March Group founding partner Harold Schmitz discusses how AI is helping to achieve that, which, I mean, that's a tease. I'm going to stick around
I'm
and
excited
figure
to
out.
find out how those two relate.
What does that mean? This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or sorry.
My voice and my conversation, my poetry, you know.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
All right, it's time now for our daily Wall Street Week conversation. And studies show that people continue to eat more snack foods even as they struggle with weight gains that affect their health. Human psychology is fascinating. David Weston spoke to the March Group founding partner Harold Schmitz about how AI is helping to create healthier snacks.
What AI does is it enables businesses, when it's applied properly, to do things better, faster, and more cost effectively. And developing new food products is very difficult. So food is actually, from a chemical perspective and biochemical perspective, it is incredibly complex. So when you think about the raw materials that go into making a food, these are natural products and there's thousands of molecules in those ingredients that then need to be manufactured, processed and manufactured into something that tastes great, is affordable, and can be scaled up. And so what AI does is it actually makes this incredibly complex mixture of chemistry, biochemistry that then goes through food processing. It actually makes it understandable. So product development can happen exponentially faster in order to create exponentially better products that are more cost effective for consumers in the marketplace.
Do you have your own model or models? And if so, what are you training them on?
So in the food product development space, what we have to do is we have all these different data layers. So it's one data layer are the molecules, the chemistry that's in these ingredients that we're bringing together to form into a food product. Another data layer might be the temperature of the process that happens along the food processing. Another could be the pressure and steam and so on and so forth. So there's a lot of different data layers that go into making a new food product. And the only way to actually create accurate predictions about what could happen, let's say how I could take a high-fat, high-carbohydrate format, like a savory snack, that would be less healthy for consumers, and convert that into a higher protein, higher fiber snack that would be more healthy for consumers, then what we need to do is actually have data assets that are, or the training data sets that you just mentioned, that are in the house with the food manufacturer. And those are actually the training data sets that they run their own experiments over and over. And then those training data sets enable us to understand how to make healthier snacks that taste just as good and are just as affordable as the less healthy snacks where they came from previously.
How do you afford the compute that you need to be able to run these models?
So in order to actually afford the compute power, the first principle is the early stage startup company cannot be an AI company that actually has the compute power within itself. It needs to partner effectively. And so in the business, in the business marketplace, there are great AI providers and great compute power providers. And so, they want to do business and they want to work with companies who are going to grow into something that's going to be, a bigger revenue stream for them.
And that was Harold Schmidt speaking with David Weston. You can catch Wall Street Week every Friday at 6 p.m. Eastern. This is Bloomberg.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's hard to pick your favorites. We announced 3 chips. We announced a brand new AI a world foundation model, a first of its kind, and we announced our work in 3 areas in robotics.
Right.
And they're all important.
And that was NVIDIA CEO Jensen Huang speaking with Bloomberg Technology co-host Ed Ludlow. And I'm thrilled to say that Ed joins us now from CES in Las Vegas. So we heard a lot of things, of course, in your interview and also during a live Q&A that he did with analyst Jensen Huang. And his comments there spurring a huge move in quantum stocks right now. He said that maybe we're 15 years away for very useful quantum computers. But what does very useful mean to Jensen Huang?
Well, supercomputers and quantum computers are different technologies, right? A supercomputer is coded in ones and zeros. Classic. That's the understanding of most computer science. Quantum computers rely on particles called quantum bits or qubits that are particles that can be in any state at any time. They are better at very complex mathematical computations that you can just run exponentially, whereas a supercomputer, which is basically what NVIDIA sells, just focused on a more narrow task, training a large language model. And Jensen is authoritative, right? This last fiscal year, his company will sell $100 billion worth of supercomputers. So if he's out there throwing shade at this technology debate, quantum versus super, and saying, I don't see it happening for 20, the market reaction is kind of understandable. And as you guys may have covered in the show over the last year or so, some of those stocks, of quantum stocks I'm talking about, are pretty volatile anyway. Some of them, many of them pre-revenue. It's you know, there's not a really clear timeline to market.
I want to say, first of all, that I have missed you, Ed. And I'm glad to have you back on our air, even if it's only for a couple days. Also, love the glasses. I want to ask about cars.
Thank you.
You know, obviously major in tech, but you minor in automotive. And at CES, it feels like, you know, that minor kind of takes over. You spoke with the head of Scout Motors yesterday and asked him about, you know, the potential for no EV credits as they enter this market. Here's what he had to say.
Look, we've always been braced for it not to be there. So we never sat on it. It would have been a nice cherry on top, if you will. If it was there, it would have been helpful, obviously. But no, as like I said, you can't sit a company in a business case on legislation that may or may not be there, particularly in these times.
So, you know, maybe their product doesn't need it. Maybe it's a different market group, target market group that's buying the product, but also they have introduced a range extender, making the EV, the Scout EV, essentially a hybrid, and they've gotten massive orders for that version of the vehicle, right?
Yeah, I think the news from that interview is that more than 50% of the reservations are for the range extender. So the way that I think about extended range EVs is that they're battery electric cars that have a supplementary gas engine to top off as you drive, as opposed to a sort of a hybrid where it's a gas engine the other way assisted by a battery. All of the automakers are here, and they're all thinking about Trump because of the proximity to the inauguration. And, you know, we don't actually know a lot about Scout. I can tell you that Volkswagen are supremely confident in the Scout project, and they are backing it to the tune of $5 billion overall. But they're 2 years away from bringing a product to market. And so how can you plan for a vehicle at a certain price point now without knowing what the future holds? And I think his point was that they expect it to sell in the high $50,000 range based on a scenario where it is not aided by a consumer tax credit. You know, many of the automakers plan as such. And I think the consensus here, at least from the executives I've spoken to, and I've spoken to many, is that Trump will take that away.
Ed, we thank you so very much. This is going to be a very, very, very big story this year, particularly with how much capital has been flowing into the space. Ed Ludlow in Las Vegas at CES. We're also keeping an eye on another big interest for investors, that is Fannie Mae and Freddie Mac. The government-backed home loan giants soared over 200% since Trump's election, largely because of Bill Ackman. The Pershing Square founder is betting that the U.S. government will unwind its stake in Fannie and Freddie and that they'll be listed 1,200% above his average purchase price. Joining us now for more, Bloomberg's Nora Melinda. You know, your story is the #1 most read on the Bloomberg terminal right now. It's easy to see why. This is something that investors have talked about for many, many years. Easier said than done. When you have a 30-year mortgage that's flirting with 7% still, regardless of rate cuts, how difficult will it be to privatize Fannie and Freddie?
I think that's the question. And as you mentioned, it's a very challenging task. It's a very tall order that we're working with here. And especially because it's largely dependent on politics and what the environment is looking like. As I've been speaking to sources, many people are saying that it's typically a bit more of a conversation under a Republican administration. And specifically, we have President-elect Trump that's going to be coming in. And during Trump 1.0, he actually was interested in potentially bringing them out of this conservatorship. And so we are seeing a massive rally coming off of the fact that people assume that if he has more time to do so and he has 4 years ahead, that there is potential that we could see this happen.
What does the process look like? I mean, is it something that Trump could do? Does Congress have to act? It's more complicated, I think, maybe than it seems at first blush.
It's definitely very complicated, and I think that that's something that it is a pair with Congress. It's also Trump, but it's also about how do these companies look when they come out of it. I mean, of course, when we're thinking about what Bill Ackman is saying in his tweet, he's talking about the idea of an IPO. Now, these companies have been under conservatorship since 2008, so they've been under the government purview for quite a while here, and that's something that if it were to come out, people are wondering how they would actually do. I mean, of course, if you look at the stock, it's very, very low, but we've seen an extreme rally that people are comparing to potentially a meme stock rally.
We should point out that it would be a secondary offering, not an initial public offering. Right. Because the stock trades already.
This is very true. This is very true. But if that were to happen, and we did see this happen, that would be about 1,200% above what Bill Ackman's the initial purchase price was. So that would be an extreme gain, of course, for him and for others that decide to hop in on that trade.
So you could say that Ackman is talking his book here, but I think he's been pretty upfront about that. Let's talk about timelines. As you said, this would be a thorny process. This wouldn't be the first time that markets got really excited about a story and then had to wait for a little bit. But what are sources saying? What are analysts saying about when this might actually happen?
Right. I mean, so Bill Ackman does talk about late 2026. Now, analysts, I have been hearing people a bit more bearish about the idea of this actually occurring, but it depends on which side of the aisle that you're sitting on in terms of how this could potentially pan out. But it could take a while, and I've been speaking to sources that are saying that it wouldn't necessarily be a step one out of the gate thing that President Trump is interested in doing. It would likely be later in his tenure.
All right, Nora, great reporting. Stay in touch. That, of course, is Bloomberg's Nora Melinda, and it'll be interesting to see where that actually falls on still President-elect Donald Trump's priority list. But in any case, let's take a look at these markets right now. Of course, you can see it's been a choppy trade. We're talking about small moves overall, but of course, this follows a big wipeout in the stock market yesterday, and the S&P 500 not able to get off the ground, down about 0.1%. The NASDAQ 100, we've been flirting with unchanged territory. Now it seems like we're maybe materializing into maybe a decisive move lower, but still small moves. And then you take a look at the bond market, and it's quiet right now, but that's deceiving because, guys, you think about this incredible move that we've seen at the long end of the Treasury yield curve, particularly when it comes to 10-year yields. We're on 5% watch, but Matt, the 20-year Treasury yield is already at 5%.
Was up and over 5%. I know this is a stocks-focused show. Obviously, we air over the market open, so we're looking at stocks. But I've been pulling up WB more and more often on my Bloomberg just to watch and see not only the 20, but also the 30-year get to 5%. It's trading at 4.927%. And these yields are higher than they've been, with the exception of one other time in recent history since the great financial crisis.
There's a lot of spillover effect. On one hand, you're looking at that 5%. Is that the new danger zone, guys?
Feels like it.
Right.
Every guest we have on, they told us a couple months ago that 4.5% was the danger zone. Last month, they said 5%. Today, we heard from Abby Yoder, 5.5. So they keep pushing that zone further away.
But they're also just different sectors, right? You think about that longer-term rise in interest rates. That's the mortgage market that's being impacted more. Then consumer discretionary could be the spillover. So a lot of those spillover effects under the surface, I suppose.
All right, coming up tomorrow, we will have special coverage here on Bloomberg Television at this time of President Carter's state funeral. That starts at 9 a.m. New York time on Bloomberg TV. And remember, there's no trading tomorrow. The New York Stock Exchange has stopped trading to honor the legacy of President Carter. This is Bloomberg.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Min-Sung, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불지." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and Las Vegas, this is Bloomberg Technology. Coming up, NVIDIA rides to Samsung's rescue. After disappointing quarterly results, shares actually bounce back as Jensen Huang expresses optimism for the memory maker. Plus, we sit down with Mobileye at CES to discuss the future of autonomous driving in the US and our conversation with the CEO of SiriusXM on the company's focus on growth and leveraging AI. But first, we check in on some of the key movers on the NASDAQ and the technology spectrum. I'm looking at NVIDIA, currently holding gains of 0.2%. It had been higher, but we've been fluctuating between gains and losses across the chip spectrum. The push and the pull of the announcements on Trump tariffs coming forward, but also whether we see a little bit of a bounce back yesterday after the sell-off that we saw in NVIDIA. Will we see more optimism around Blackwell and the rollout of the future from Jensen Huang? Meanwhile, Jensen Huang makes impact on all of the quantum names that have rallied so hard in 2024. They're off to a bad start in 2025, off by 33% for IonQ, for all the others on the downside. Jensen Huang saying, look, it's going to take 15 to 30 years before we get some significantly useful quantum computing outcomes. So pouring cold water on some of that optimism. But on the upside, Jensen rides to the rescue of Samsung. We're currently up 3.4%, even though the numbers of their last quarter were dismal. But it looks as though the high bandwidth memory chips that are so important to integrate into AI accelerators of NVIDIA, well, they're coming at a pace. Peter Elstrom has more on all of this. Peter, just give us the nuance, because Samsung has lagged behind SK Hynix and smaller competitors when it comes to high bandwidth memory, but some optimism from Jensen Huang here.
Yeah, that's exactly right. So Samsung reported preliminary earnings. We're going to get the final earnings later. But as you say, they were pretty terrible. They reported operating profit of 6.5 trillion won. That's about $4.5 billion. It's a third less than everybody had been expecting. Revenue was also a bit late. But just a few words from Jensen Huang and the stock went up. And really the reason for this is what he said was not even that positive, but he said that Samsung has to make this leap to AI chips. They have to make these breakthroughs. And he said that they can do it, and they're working very fast to do it. They're trying to come out with the next generation of high bandwidth memory chips that will be paired with the NVIDIA AI accelerators to be able to train these AI models. So just a few words from Jensen Huang were really enough to turn around Samsung's fate. He expressed some optimism that they're making progress. They're coming out with a new design for the HBM chips. NVIDIA is going to get to the point where at some point they're going to give them approval for these HBM chips. Then they can start to buy from them. them in addition to SK Hynix. Essentially, SK Hynix has had a monopoly on this market so far. So NVIDIA wants competition there. They want Samsung to get into the market.
And boy, has it been displayed in the share prices, right? We saw SK Hynix up about 20% last year, whereas I think it was about a third of the market capitalization of Samsung was ripped away because of their seeming delay on getting in on high bandwidth memory. Are they having, though, to spend a lot? Is that why we saw the disappointment in the numbers?
Yeah, certainly they're investing very heavily, and Samsung is not used to being in this position. Samsung has long led the memory market. They've been the biggest. They invest the most amount of money. They get the best engineers. And what they're seeing is that SK Hynix, kind of like the little brother in this market, has been able to surpass them. And partly that's because SK Hynix had a breakthrough design in how they organized their HBM chips that really help with some of the heat dissipation issues that are necessary as we move into this higher powered computing with AI and AI memory in particular. So SK Hynix has gotten ahead of them. They got NVIDIA's approval to be able to ship these chips. That's been a huge boom to SK Hynix and their share price so far, but they have Samsung right behind them, very determined to catch up. And as we heard from Jensen Huang, they are making some progress.
Peter Elstrom, we thank you so much. Now, let's head out to Las Vegas, where our own Ed Ludlow is on the ground at CES with the latest, Ed.
Yeah, it's so interesting to hear Peter talk about the semiconductor and AI demand at Samsung. Because if you look at the numbers, it was everything not AI that was the pain point. And a lot of the street going into that print were like, well, what does Samsung do? They sell smartphones and they sell high-end TVs. And everything here at CES is all the rest, right? They're always the biggest exhibitor here. High-end appliances that are AI integrated. I don't know if you have an AI integrated fridge or washing machine, Caroline. I don't know if I need one, but that's what Samsung was hoping would be a boost to profit in particular, and it didn't materialize.
It certainly didn't, but actually Jensen Huang rides to the rescue, and Jensen's making moves, whether it's on quantum stocks as well. But just talk us through a little bit more of what we're seeing unfolded when it comes to actual consumer technology here.
Yeah, so if you imagine the ginormous hall behind me, right at the center of it out of shot is this like mini stadium, and that is Samsung's display. It's always the biggest, and they are betting that the consumer now is going to part with their cash to build out their home in competition with Apple, in competition with Amazon. I spoke to Jeon Jung, Executive Vice President at Samsung, head of Smart Things. It's all about efficiency, cost, and energy. Listen to this.
2024 was the 10-year anniversary since Samsung acquired SmartThings and started building this smart home experience to our consumers. And with this SmartThings platform, we are just so thrilled that each year we can really deliver new, innovative features to our customers, and from kitchen to living room, bedroom, and all the appliances and TVs and watches and rings and Galaxy devices that with the SmartThings platform, we can really help you live in the best way. Optimize, we can set the optimized settings for you for your bedroom and kitchen and living room. So with the SmartThings, the connectivity and then AI that we add to make these appliances and devices more adaptable to your lifestyle, I think that's the really great benefit of SmartThings platform.
What
can provide.
Behaviors are you recognizing in the consumer? So, for example, say somebody watching this has never had a connected appliance or device, let alone an AI-capable washing machine or refrigerator.
Well, we think that, so you may want to start with one appliance at a time, right? But once you experience that benefit, then you may want to then replace all the other appliances. I mean, that's what I actually did. So I recently moved to a new apartment, and then, I was like, okay, so maybe I can sort of have one new washer, and then, just the benefit is so great, right? So you can remotely control it, you can see the energy used, and then why not, replace the dryer so that I can have added benefit. And then, once I see the value of, then with washer and dryer, and then cooktop and the hood, they all together, then you can save more energy, and then you can sort of have also coordinated control that we can provide. So kind of slowly, one at a time, you can sort of build a smart home that way.
this is the Consumer Electronics Show, but one of the more interesting announcements I found was that you were taking smart things into a scenario that people might not expect with Samsung Heavy Industries. Shipping. We're talking big commercial boats.
Right.
Why would a ship and a ship's crew need smart things?
Why not, right? So we are, so this year's CES, you'll see our offerings in the home and beyond the home. So we have the SmartThings Pro solution that we built on top of SmartThings platform. So this SmartThings Pro solution is for business, and we are expanding that functionality to fleet of cars and ships. So, you'll see our exhibition of our collaboration with Samsung Heavy Industry this year.
The Executive VP and Head of Smart Things at Samsung there with Ed. Coming up, we'll be joined by the Panasonic North America Chairwoman and CEO, Megan Myung-Won Lee. Live from CES, this is Bloomberg Technology.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
Okay, welcome back to Las Vegas and some special coverage of CES 2025. One of the big focuses at this place is always about the technology behind energy, the supply chain for energy. One of the companies that talks about that most is Panasonic, from energy, supply chain, right through to consumer products as well. And I'm delighted to say that Megan Myung-Won Lee, Panasonic's North America CEO, is here. As every year we talk, and every year there's an update. So let's start with what I think your focus was, which was energy supply chain.
Yes. Mm-hmm.
Why? What's new, and in particular, how are you using artificial intelligence to get better?
Yes. So we did a keynote speech yesterday, and our message was all about well into the future as a 106 years old company, and we're making big investment in North America in the area of energy for EV batteries. But supply chain is also a critical part of our business and the area that we're trying to make a contribution for a more efficient, smart supply chain solutions. So we bought Blue Yonder, and Blue Yonder is coming out with a end-to-end visibility capability with AI agent. They can customize for your problems and solutions and can work with you. So we're really excited about that announcement.
What kind of a deal was that? How difficult was it to get done? You know, like the story of 2024 was companies, industrial companies in particular, going out and saying, we're either going to have to acquire capabilities or we're going to have to grow them internally. You went one way.
Yes, yes. So we started working with them a couple of years ago, and we're really excited about their our ability and investment that we made with Blue Yonder and their capability to really solve the problem of the supply chain resilience and safety, and will be the forthcoming with the newer technology, and we're really excited about that. So it's a Blue Yonder subsidiary of Panasonic, and they're in North America based, and it's a great announcement for us and newer capability for us.
You said two things, supply chain resilience and investing in America.
Yes.
And I post on social media every year that I'm going to be speaking to you, and every year I get dozens of questions, hundreds actually in this case. I would say the vast majority are about the upcoming Trump administration and potential tariffs and policy around China. And that's so interesting to you because of the EV battery supply chain in particular in this country. What's your message around that?
So even before the Trump administration, the supply chain, I mean, we all know that China controls a lot of raw material.
Right.
We had
raw
our...
material being lithium.
For the, yes, for the EV batteries.
Right.
Yes, yes. So we've been working hard even before, I mean, during COVID, everyone had the challenge of managing supply chain. So we had that issue of trying to make sure that the supply chain is smooth and predictable and under control. So we have vested interest to make sure that it's closer to the production being Reno and newer factory in Kansas, which is opening up this spring. We're really excited about that.
Okay, so give me more updates, because the next question from the audience, particularly those that follow names like Tesla, ask, give me a factory update, please.
Yes, so our Reno operation has been really successful, and it's up and running for now 10 years, and we're opening up new operation in Kansas, and we've been building the factory for now 2 years. It's going to open up in April, and we'll be in full operation from spring and summer this year. And we're working with partners like Mazda, Subaru, which is already announced, and Lucid as well.
That's right, with the Gravity project.
Exactly.
Okay, that's interesting. So I got a question for you about Lucid, and when I read it was from an audience member, I was trying to think, like, what's the core of this question? But I think people were surprised that you partnered with Lucid on the Gravity. It might not necessarily be a high-volume EV initially. What was your thinking there?
So Panasonic being a 106-year-old company, and it's great to work with the partners like Subaru and Mazda, but we're very also keen on working with up-and-coming newer companies so that they challenge us and we learn from them and make sure that we're partnering and capable of partnering with the companies like Lucid, and we're really excited about that. It's going really well.
I've covered that company a few years, and interesting vehicles, they're not very good at building them, you know, from a volume perspective. When you make a decision like that, how do you weigh that up in your head? You know, because you want to be able to provide supply, it helps you in supply chain planning.
I do think we, as a company, want to take a chance and partner with the companies that operate different ways than us. Blue Yonder is an example, right? It's a software company, US-based, and Lucid is also a newer partner too. But we have a success cases with Tesla 10 years ago, and we're doing it again with Lucid, and we're very bullish about that.
What is the latest on the Tesla relationship? Where are you innovating, and where do you see it progressing?
We are Panasonic, as a Panasonic, and really excited about the 4680 capability.
Okay, where are we at with 4680?
So that product is, the capability and quality is great. It's been tested and in production in our mother company factory in Japan, and we're planning on bringing it to our Kansas in the future.
You, with respect, are a CES veteran. You've been to many. What's it been like this year? Many of the OEMs and automakers are here. Just walking around, I feel like, even on the consumer electronics side, genuine consumer electronics, things are positive.
Yes.
What have you been talking with your customers, your suppliers with? What are they thinking about?
So We started working with CTA and CES since 1967.
Okay.
So we're one of the longer. So we feel like we've grown up with the CTA. CES is not necessarily so much about newer gadgets and product. It's about our message. Our keynote speech was about storytelling, how we grew up with the CTA for past 60 years. So we feel really good. AI was big last year. This year, it's all about application, even including us. We made an announcement about a product called Umi. It's an AI wellness coach that's on the floor. And, you know, it's a newer capability that we're demonstrating on this platform, which is a little bit different from our past capability. But we are coming up with a newer solution and AI product.
We just have 15 seconds. Are you ready for the Trump administration?
Yes, we are, and we've been prepared for this, and we will work with the government to make sure that our investment in this market is meaningful for our company as well as for the market.
Megan Young-Wong Lee, I always appreciate catching up with you every year here in Las Vegas.
Thank you.
Panasonic North America CEO. Caroline, back to you in New York.
Great conversation, and another story, Ed, that we're watching, and it's going back to Anthropic. The OpenAI rival is in advanced talks to raise $2 billion in a funding round that would value the startup at $60 billion. That's sources saying this. Lightspeed Venture Partners is leading the round. Anthropic was recently on pace to generate around $875 million in annual revenue. Coming up, we hear from SiriusXM CEO Jennifer Witz on why they consider themselves anti-AI. This is Bloomberg Technology.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersechi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
SiriusXM, the online radio service, says it's focused on growth after its 2025 forecasts missed expectations. That was back in December. Now, Bloomberg's Ed Ludlow just caught up with the CEO, Jennifer Witz, at CES and began with a discussion on AI implementation.
In some ways, I think we're the anti-AI in terms of content creation and curation, right? So, we pride ourselves on the hosts and the programmers that we have, the people that actually put together the channels and the shows. It's the voices you hear every day on your commute that really drive that intimacy that audio offers and the connection. Where we will leverage AI is in some respects where others have used it as well to provide better discovery discovery and personalization, right? So we hope that our programmers can really curate an experience to help you find what you love, but also the technology of AI can create more personalization in our marketing, in the product itself in terms of recommendations to enhance that even more. And of course, there's lots of other benefits for AI in terms of cost reduction and more efficiencies in the business overall.
This is Bloomberg, so let's talk some business. Last month, you basically said, this is our revenue outlook for 2025, and investors, for whatever reason, were disappointed. You also said that you're going to cut costs, run your business. How is the cost cutting going? And what were the factors that, I guess, if you accept that the revenue outlook was not what your investors wanted to see, what were the factors behind it being what it was?
Yeah, so we're very focused on supporting the top line in the two aspects of our business that we've talked about, subscription and advertising, and we have opportunities to continue to grow there and drive improvements in that part of our business. But we're really focused on the subscription side on what we do best, audio first and in the car, because that's where we've proven that we can really be successful, and that's where radio is very successful. In our ads business, we talked about where we're adding in terms of podcasts and other content to build out that portfolio. And yes, cost reduction will be increasingly important as we move forward, as we want to sustain our industry-leading margins. And on top of that, we also have significant free cash flow generation, right? And as we get to our target leverage ratio, we'll be able to increasingly return capital to shareholders, whether it's through our dividend or through share repurchases as well.
I think I'm right in saying this is your first CES in about 5 years.
That's right.
It's packed. There is an intense focus on the exhibitors, AI. I would also say there are lots of questions about what 2025 is going to be like, in particular because we have a new administration that will come into office this month. How is SiriusXM preparing for that? Do you see it being a factor to people that listen to audio in America this year?
We have a really diverse set of content, and I think one of the things we saw during the election is an increase in news and politics content consumption, which is probably not surprising, but it just speaks to the overall bundle and that we have something for everyone at any given time, depending on what's going on, and also the value of live linear when something important is going on. So I think that's going to continue to be a focus for us, and then there are things like people are focused on tariffs and taxes and what happens with the auto business, but we feel really good about our position in terms of our availability across the spectrum of auto manufacturers. Having a lot of meetings with the OEMs while we're here, in addition to advertisers, and I think we feel good. December was a great month for auto sales, so hopefully that's an indication of what's going to come in 2025. Strong auto market is great for our business.
SiriusXM CEO Jennifer Witz there. Coming up, we're going to be joined by the Mobileye CEO live from CES for his take on the future of autonomous driving. Remember who was talking about autonomous driving yesterday? Jensen Huang. Guess what else he's been talking about? Quantum. Look at the share impact his words have had. We're up by 50% for some of these names, but look, they're up 20-fold in the fiscal year of 2024. But these stocks now getting caught up by the fact that he's saying it's going to take 20 years, at least he thinks, for very useful quantum computers. Everyone got very exuberant following the Willow chip from Alphabet and have run up these stocks significantly. Today we get a sharp pullback. Let's look at another name that's on the move, and eBay up significantly. This is on the news of Meta folding in eBay within its marketplace. It's currently just on test, and it's rolling out the new test to integrate the listings. But all of this on the back, of course, of the European Commission's recent decision that Facebook Marketplace hindered competition in the EU's online marketplace sector. So they collaborate, and eBay up 11% on the news. From New York and Las Vegas, this is Bloomberg Technology.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but is producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets, which are being buffeted about by macro headwinds. Look, we're anticipating jobs data on Friday. The market is shut tomorrow, a national day of mourning of President Jimmy Carter. And we also think about what's happening from a macro perspective in terms of the economic data, where the Federal Reserve goes. All of it just putting caution. We're down 0.1% on the NASDAQ. Nowhere near as low as yesterday, though. I'm looking at what's happening with Bitcoin. Again, has been selling off as some of the economic data has just been too good. And what does that mean in terms of a rate-cutting environment? Bitcoin off by 1.6%. We're at 94,000, having been at 100,000 earlier yesterday. Move on and have a look at the individual names that are also under the microscope. Nvidia trading basically flat, but it has been on the higher side and then dive back lower. All of this as we try to digest really how much autonomous robotics, the latest in gaming, is going to be advantageous to Nvidia, and what about Blackwell, but also whether or not we're seeing any more profit taking after a run-up in January. AMD, though, one of the biggest points drags on the NASDAQ today, off by 3.8%. It looks as though HSBC doing a significant downgrade to this stock. They're worried that, look, the AI GPU is not a key competitor to Nvidia. They just think the AI rack in particular is not going to be making waves. AMD, therefore, being told to reduce by HSBC. I'm looking at D-Wave Quantum as one of the key quantum stocks we are keeping an eye on. Jensen Huang takes a sledgehammer to some of these market capitalizations by saying, look, quantum from a really useful perspective, not going to be there for about 15 years. Many got very excited post the Google Willow AI chip and quantum chip at that. But let's just talk a little bit more about what NVIDIA CEO Jensen Huang's been saying. He actually joined us yesterday at CES and had this to say about the outlook for autonomous driving. Just take a listen.
The autonomous vehicle industry and the robotics industry is really important to us, and we offer 3 computers for them. We offer, of course, the training computer through DGX, the robotics computer that's inside the car or inside a robot, and now we have this new computer called Omniverse with Cosmos that is the digital twin or the playground where these robots can learn how to be robots. And so if we could accelerate the development of artificial intelligence for AVs and for robotics, it brings in a lot of business for us.
So interesting to see NVIDIA move in more aggressively to autonomous driving. Part of that Cosmos Foundation model play is the generation of synthetic data, text input, generate images or video, train models on that video rather than real-world data. A lot happening in this space. One of the key players, Mobileye, and the CEO, Amnon Shashua, joins us once again in Las Vegas. That is an academic debate. I've always understood Mobileye's advantage to be that you have SoCs or chips in vehicles already on real roads around the world, real-world data. Jensen says synthetic data. What do you say?
Well, synthetic data is a big thing in humanoid robotics.
Why for humanoid robotics? Because each robot has different actuator types, different placement of actuators. So if you build a foundation model using some architecture of a robot, it will not generalize to other architectures. If you build a foundation model from synthetic data, you can have something that generalizes to all robots. For example, I co-founded a company in humanoid robotics, Mentee Robotics, 3 years ago. So they rely heavily on NVIDIA's physics simulators and build foundation robots from synthetic data. And you can then train dexterity, you can train pick and place of objects, grasping and so forth, just from synthetic data. With cars, it's different. With cars, all cars look alike in terms of actuations. Right? What you want to minimize is distribution drift. You don't want to train a model on some artifact that could come from synthetic data. Well, if you don't have real data, that's all what you can do. But if you have real data, then you can be more precise.
Well, I think that Jensen's argument was that the synthetic data augments the real-world data.
No, but what we do at Mobileye, say, for example, we find an edge case.
Okay.
Then we go to a simulator. We have simulators. We go to a simulator and we generate many examples of that edge case. Right? But this is
a multiverse, so to speak.
A multiverse. So this is really for edge cases, but not for the kind of main
also,
training of the system.
Also, ridiculous that we're saying multiverse. Like, this isn't Spider-Man, this is autonomous driving. Let me just make an observation, and the team in New York, let's bring up Mobileye shares. Down significantly. Is that because NVIDIA is coming out strong and saying, we want some of this autonomous driving market as well?
No, I don't think so. I think investors were expecting announcements, and we're not ready yet with announcements. I think we'll have major announcements throughout the year, but we're not ready yet. And this is a natural response for that.
But you have something to show, and that is the Volkswagen ID Buzz, the camper van, battery electric. You are working with them on a higher level of autonomy for that product. My understanding is it's in the prototype phase. However, a lot of the pieces are there to go to production, but there is no plan as it stands to firm, dry ink, go to production. Update us.
Well, no, there's a firm plan to go to production. It's end of 2026. Right now, there are about 150 vehicles driving in Hamburg and Munich and in Austin, Texas.
Testing.
Testing. But there's a firm plan to go to start off production.
That must be a really big deal for you guys.
Yes, but robotaxis is a spectrum. We build robotaxis with ID Buzz and also with Schaeffler and Vernia. We build with Audi a consumer-level autonomous car, a level 3, level 4 on highways, which will come out in 2027. And by the way, there's lots of commonality in hardware between those two. It is the same IQ, the same boards. We are developing imaging radars, both for the consumer car and for the robotaxi. So that commonality would reduce cost considerably. And we have also FSD-like systems, which we call supervision, 300,000.
FSD-like in the sense they are camera vision-based systems. So
purely camera-based. There is an optional front-facing radar, but it's purely camera-based. And it's eyes-on. Means the driver is still responsible. You cannot let go of driving.
Very quick on this one. Mobileye has a broad offering in the theatre of autonomous driving, robotaxi. Which specific deployment do we see first?
Well, we see the supervision. We're already deployed in China, but our next generation, which it's 95% of the focus of the company, is this next generation on the IQ6, coming out next year. It will be on all Volkswagen Group, 18 models of the Volkswagen Group, including Porsche and Audi. That's coming out next year, 2026. And then Chauffeur, which is the level 3 autonomous driving on highways, will come 2027. Early 2027.
I have to ask you this. You are a key automotive supplier. You must be speaking with your customers and partners this week about the coming Trump administration. How do you think that's going to impact 2025 in the auto market, particularly here in North America?
Putting politics aside, I think it's going to be...
Politics aside, but not policy.
Yeah, but I think from a policy point of view, it's going to be very positive. The problem with the U.S. is that there's a patchwork of regulations, state-wise and federal-wise. If the president comes in and puts things in order at the federal level, it could promote autonomous driving considerably.
Which Elon Musk mentioned.
Exactly. So I see that very positive.
Amnon Shashua, it's great to catch up. Thank you for your time. I will go and check out ID Buzz. Caroline, we keep going at CES Las Vegas. Back to you.
We certainly do. Let's stick with autos because Scout Motors in the US, its revival is betting big on range extenders, on EVs, to lead its comeback by 2027. That's as Volkswagen relaunches the legendary nameplate. Ed sat down with the CEO, Scott Keogh, and began by asking him about the demand the company has seen since its announcement.
Yeah, look, the reaction's been huge. We're not giving the mixes, but I would say, direction, it'll probably be over 50% would be in the range extender version.
Really?
And I think in my mind, I think
the motives.
I think there's two reasons. I think one, a portion of America, this gives us a 50-state vehicle, which I think is exactly what Scout always wanted to be. I think, look, what are the two challenges we see with electrification? Charging infrastructure, and of course this takes that all off the table, and plus this convenience. So I think those two things, range extender makes a lot of sense.
Let's find some common ground and give some context to the audience about Scout. One might frame it as Volkswagen's play to take a foothold long term in the US market.
That's one play.
Given your CV, you understand that. But we're waiting until 2027. It's a long wait.
Look, I think what we're doing is we're storing an American icon. I think Scout was an iconic American brand, and now we're bringing it back to life. So if you're waiting for just a product, well, yeah, 27 might seem like a long time. But if you're saying to restore an American icon, bring back 4,000 jobs into South Carolina, start an entirely new company, I think it's the perfect time. So what the reaction to the customers has been, we want to go along for this journey, and I think 27 is manageable.
What's interesting in some sense is that Scout is kind of leading the way in the concept of extended range. So you look at some of the legacy OEMs, they have put on pause pure battery electric offerings of variant pickup or otherwise, and they may now look at the plug-in hybrid or the extended range. You see others following suit?
Yeah, I do, and I'll tell you why it's perfect technology. I think first and foremost, the two platforms are exactly the same. This is critical. So the platform for an EV and the platform in extended range are exactly the same. The second thing, it has zero impact on manufacturing and the plant. So you don't need to retool the entire plant. It's two relatively simple JIT operations, one for the tank and one for the engine. So this gives you ultimate flexibility. You could go from 0 to 100% or 50-50, whatever it is. So regardless of the way America goes, we are put in a position for the next 20, 30 years to have a tech platform that can navigate it.
Scout Motors CEO Scott Keogh there. Coming up, we'll be joined by the Siemens US President and CEO, Barbara Humpton. Again, it's live from CES. This is Bloomberg Technology.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Siemens. It's showcasing its vision for the future here and over in Las Vegas as well at CES, a future where data, AI and automation can provide more flexibility and optimization across the world's industries, big and small. I'm pleased to say Ed Ludlow is now sitting down with the key executive.
Yeah, what's so interesting about this is that we started with NVIDIA, and NVIDIA talked about, in particular, Omniverse, its simulation and 3D graphics platform. Basically, customers can go in and work within it. But the customers are also here, and that's what's so interesting about Siemens and North America CEO Barbara Humpton. I find Omniverse hard to understand. I would say it's at the center of what you've been talking about as an NVIDIA customer this week. Explain.
Yeah, NVIDIA's a treasured a partner of ours. You know Siemens as the maker of industrial software. We've got the tools that help designers and engineers visualize and actually work with the most comprehensive physics-based digital twin. But when you would look at the drawings that we'd produce, they looked a lot like engineering drawings.
Right.
Now layer on the Omniverse and bring that photorealistic rendering, and suddenly engineers anywhere can connect, look at this object that looks like it will look in the real world. That's the power of Omniverse.
I think something that Wall Street, but generally people interested in technology are trying to understand is that all sounds great. If you are a business, does it help you make more money? Does it make the running of your facilities instantly better?
Oh my heavens, yes, and let me tell you how. Right here in our booth, we're featuring customers of ours who've chosen to use our Siemens Accelerator platform. And what they're doing is using these tools to help them in the design phase, in the manufacturing phase. Why would you want to go digital first? So that you can try all kinds of permutations in the virtual world before actually bending metal and making things for real. Think about Jet Zero. This is a blended wing aircraft that'll be brought to market. And Tom O'Leary, their CEO, said the other night to me, he said, we chose Siemens because it's the best. We wanted to start in the early phases with the virtual designs that would allow us to flow through into the manufacturing phase.
So I guess in really simple terms, if you build your own product like that platform, do you then just basically sell it as a high margin service? How does it translate to the business model for Siemens?
Yeah, we're engaging with customers in a lot of different ways. In the olden days, we would have enterprise agreements. You know, think about all the aerospace, automotive, today battery manufacturers. We serve all of those markets, helping the designers, the manufacturers, the operators. But we know that there's a need to put all that in the cloud, make it accessible on a per user basis so that even startups can get going. And here with Teamcenter offered up in our Siemens Accelerator Marketplace, if you went to Eureka Park, you'd see a bunch of startups who are being onboarded, and we're giving deep discounts for that license suite so that people can get their entryway into this new economy that's being built.
You are an experienced CES goer.
Yes.
This week in particular, how many conversations have you had with customers, partners about the upcoming administration, tariffs, and are you ready for that at Siemens?
We're absolutely ready. And here's what I keep telling our customers and certainly our own organization. We've been in the United States for 160 years. We've worked with all of the administrations along the way. And Siemens' capabilities are aligned with national priorities. So whether we're talking about increasing the amount of electricity that's available for data centers and using the switchgear that Siemens makes, or whether we're talking about the resurgence of manufacturing and these tools we're featuring, this is a moment when Siemens can have true impact.
Like you might benefit from some policy that's coming. Have you had to adjust supply chain, make it more onshored, more focused in America?
This has been a trend for Siemens. Actually, you'd see if you looked at our global mega trends we follow, globalization is one of them. We truly believe that bringing manufacturing supply chains closer to the point of use is going to be a trend going forward. So we've been making in America for decades now, and no, I don't see tremendous change coming for us, but we truly want to be responsive. In particular, we think that the kind of technology we bring can make even government customers more efficient and effective. So,
Elon Musk would like to hear that.
I'd love to talk about it.
You are someone that meets with so many CEOs during the week. I always am grateful for your time here at CS. Barbara Humpton, Siemens North America's CEO. Caroline, back to you in New York.
And it's time now for Talking Tech. First up, Tencent has announced its biggest buyback since 2006, repurchasing 3.93 million Hong Kong-listed shares. The move comes amid a sell-off in the stock after the tech firm was added to a US blacklist for alleged links to the Chinese military. Plus, Indonesia keeps its Apple iPhone 16 ban. The country says the tech giant's $1 billion investment plan, which includes building an AirTag factory, is insufficient to meet local investment requirements. Indonesia says it's willing to negotiate with Apple, but may impose sanctions if the company continues to not comply with the investment rules. And TikTok shop rival, Whatnot, has raised $265 million with a valuation of $4.97 billion. The LA-based live stream shopping platform says it plans to use those funds to hire engineers, improve customer service, and expand into new countries. Whatnot's funding round coincides with a looming US ban potentially on TikTok, sending some of its live sellers maybe to competitors. Coming up, we'll have more after this break. This is Bloomberg Technology.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investments. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything.
somebody wants to use your product, Zepbound, how much does it cost a month?
You can buy Zepbound direct from Lilly for $3.99 for the starter dose.
$3.99?
No.
Okay. No.
This is a valuable innovation, David.
This CES in Las Vegas feels a little bit different. 2025. Yes, the inauguration of a new administration is around the corner, but there's just been more news. NVIDIA kind of kicked it all off in the week. And here at Bloomberg Technology, we're ramping up as well our coverage of consumer technology. There's more to cover. AI is playing a big part. I'm on my best behavior because the big boss is in town. Senior Executive Editor Tom Giles. And we have a big team here, and we are going to go deeper and broader on consumer technology. How and why?
Right now is an incredibly exciting time in consumer electronics. As you mentioned, AI is changing everything. It's getting woven into every gadget we use, every robot that's infiltrating our homes and our warehouses, our cars, the list goes on, and it's changing things in a very dramatic way. Right now I think the time is right to double down on our consumer electronics coverage. We've always cared about the business of CE. Right now, it's time to do a better job of telling the world where they can find all this information. There's a section on Bloomberg.com.
Showing it right now. A place that we're going to show our best work.
We've been doing product reviews, but we're going to be much more systematic about it, much more consistent, much more comprehensive about it. And we're going to talk about products in the context of the business and the strategy of these corporations that are trying to make money from these gadgets that are changing the way we live and work and do our everyday lives. We're going to talk about it in an unbiased way, and we're also going to draw on this group of journalists who have so much experience in writing and thinking about consumer electronics. Everybody like Vlad Savov, Mark Gurman, Dana Woolman, who we just hired from Engadget in the last year. Long list, Shireen Ghaffari, who writes about artificial intelligence. The list goes on, and we've got dozens of reporters around the world, and they're going to be bringing you the latest in consumer electronics news.
So real quick, CES is the first week of the year. It puts everyone in one place, speed dating with very important people. What's it been like for you?
Oh my gosh, yesterday, a lot of conversations with NVIDIA, really interesting. You talked to Jensen Huang yourself. He wants to map the physical world. He's creating this new world foundational model that is going to help us understand how robots interact, how cars interact. If you want to weave AI into these physical devices, you need to understand how these objects interact in the real world. That's just the beginning of the really interesting, exciting things that we're seeing here.
It's hard to find somebody more excitable than me, Caro, but I think we've done it with Bloomberg's Senior Executive Editor, Tom Giles. Back to you.
He's giving you a run for your money, almost on par with the energy levels, and what a joy. All things CES. Thank you for today's reporting. Meanwhile, that does it for this edition of Bloomberg Technology. Coming up in the next hour, you do not want to go anywhere. An exclusive interview, the SEC Chair, Gary Gensler, outgoing. Don't want to miss it. And don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York and from a very busy Las Vegas, this is Bloomberg Technology.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. Today, SEC Chair Gary Gensler sits down for an exclusive interview with Bloomberg's David Gura as he prepares to leave office. Tune in today at noon Eastern, only on Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. It's Jobs Day Eve, and we're seeing the stock market make a little bit of a turnaround here, giving up their early losses and moving somewhat higher, inching higher here. Fed Governor Chris Waller did say he sees inflation cooling, and that supports his view for more rate cuts this year. The Russell continues to underperform, with small caps lagging behind. At one point, all 11 sectors were in the red. The bond market stabilizing after a recent move higher in yields, but noteworthy here that the 20-year yield did top 5%. And the 20-year note, really an outlier on the curve, but it could be a sign for what's to come across the curve. All right, a quick glance at what's going on in the UK, because the bond sell-off is very much a global story, with the 10-year yield there jumping to the highest since 2008, 4.8%, on concern about inflationary pressures and, of course, drawing comparisons to what happened in 2022. Let's go now to Bloomberg News' David Gura, who is sitting down with the outgoing chair of the SEC over in Washington. David, over to you.
Thank you very much, and welcome to our listeners and viewers worldwide. I'm here with Chair Gary Gensler in his office in Washington, D.C. Great to speak with you.
Great to be with you, David.
You've had a very active agenda during your tenure here. I want to get to as much of that as I can, but I want to start first just by asking you how you're feeling here with less than 2 weeks left in your term. You have been subject to a fair amount of attacks, some vitriol. How have you processed all of that?
It's a great privilege to be in a role like this. I'm the 33rd chair, and it's a big country. A lot of people could do this job. So I start with, it's just such a privilege to be here, and thank you to Joe Biden for asking me to do it. But what's remarkable about this role is it oversees the $120 trillion capital market, which touches everything in our economy, because you've got to raise money for most of what we do in our economy, and people save. So I feel terrific. You ask about the attacks and things like that. That's what public policy is about. You walk into this central square and you debate these important things for 330 million Americans. I've worked over the years with Hillary Clinton on a number of campaigns, and I remember Hillary saying once, like, if you're not willing to be attacked, you can't go into the public square and debate policy. And so I think it's part of our great democracy.
I look at who is inveighing against you and who's throwing that invective, and it's the president-elect, it's the world's richest man. Does it feel different to you than what you, I'm sure, experienced after the global financial crisis when you were at the CFTC? Has the atmosphere, has the environment changed for regulators like yourself?
Well, I think it does change. What we do here at this great agency is look out for everyday Americans, people just trying to save for a better future and try to move through things that help them, like we've done, like even shortening the settlement cycle from 2 days to 1 day. Might sound geeky behind the scenes, but it means you get your money 1 day faster, for instance, or getting privacy notices. There was no federal rule that you needed to get a notice if your data was hacked, and we put in place some rules to do that. So we're looking out for everyday Americans, trying to lower the cost of the markets to trade stocks, to trade the bonds. But it doesn't surprise me that then there's some in the middle of the market. They're called brokers, they're called dealers, they're called intermediaries, stock exchanges, who they like their business model. And if we're changing the rules to benefit everyday Americans, they might have thoughts on that and object. And that's part of the process. But our clients ultimately, people at their kitchen tables.
Let me ask you about one facet of that $120 million trillion.
Trillion. It's a big number.
It's a T with a T, and that's crypto. And you often will point out it's a small sliver of that total multi-trillion-dollar package. But you came into this job, you gave a big speech in which you analogized the crypto world to the Wild West. I guess that makes you the sheriff. So as you get ready to hang up your spurs, is it less of a wild? I'm really belaboring the metaphor, but is it less of a Wild West than it was as you leave this office?
My daughters, if they ever watch this interview, will ask, "Where are your spurs, Dad?" I think that we've done some good things. Look, I came in, my predecessor, Jay Clayton, who was in this office, had also tried to address this new emerging part of finance. And as you say, it's less than 1% of our overall financial markets. But it was then when Jay was trying to address it, and he brought 80 enforcement actions in this area. We've brought in about 100 in our 4 years. It was consistent. It's maybe about 5% of what we do in our law enforcement. That means there's 95%, in a sense, unfortunately, about other things, scammers and fraudsters and so forth. But in this field, it's rife with bad actors. And let me just split the field into two just for a minute. The public knows a lot about Bitcoin, which is, depending upon its market value on any given day, is 2/3 to 80% of the market value of crypto. And then there's everything else, or some people say Bitcoin and Ethereum and everything else. These 10 or 15,000 projects, they're raising money from the public, and the public's investing, or the public's investing hoping for a better future. I've been around finance for over 4 decades, and everything in the markets trade on a mixture of fundamentals and sentiment at any given time. But I've never seen a field that's so much wrapped up in sentiment and not so much about fundamentals. And these 10,000 to 15,000 projects, many of them will not survive. They're like venture capital investments. They're not going to survive. But there are also a fair number of small pump and dump schemes and other things in this. And of course, we've lived through a few years where, they became notorious, but they're in jail. The Sam Bankman-Frieds and the CZs and the Do Kwons, where tens of billions of dollars were lost by investors.
Can I ask you about those? Because early on when you talked about enforcement, you said bringing high-profile cases could lead to a change in behavior. Are you satisfied that those cases has led to a change in behavior in this space in particular?
It's a field that built up around non-compliance. And I'm proud of what we've done, building on what Chair Clayton and others had done previously. I think there's still work to be done, particularly I'm saying about these 10 or 15,000 alternative coins that are there, and the intermediaries themselves. I think there's still work to be done. And I think the public is probably aware of this, and less than 10% of the public invests in this field. I think various Federal Reserve, and even we did a survey here, these public figures, it's somewhere between 7 and 9% of the public. Should be aware these are highly speculative, volatile investments, and they're not getting the full and fair disclosure that's appropriate. What we're about here at the Securities and Exchange Commission for 90 years is letting the public decide what they want to invest in. The proper disclosure. And secondly, that the intermediaries, the brokers, the stock exchanges, the advisors, are giving that advice and doing what they're doing without fraud, manipulation, and so forth.
Settle something for me, because I think when you came into office, a lot of people looked at your immediate background, having researched a lot of digital assets, worked on them at MIT, and thought that you would be perhaps a champion of them. Has there been an evolution in the way that you approach crypto over that transition from academia to here, or while you've been here?
Here's the evolution.
People think you are somebody who's adamantly opposed to
Here's the evolution. When you're in academia or when you're not in this job, you can study something and observe it, as I did, and try to teach students what's the value proposition about this new technology, what's the value proposition of this new investment vehicles. But then when you're in this job, this is a chair of a 5-member commission over roughly 5,000 people that's a law enforcement agency. And so now one gets in this chair, building upon my predecessor had brought 80 cases, so we brought about 100. And this is a field rife with challenges and non-compliance with the securities laws. So sometimes people, you take an oath of office, you do what you can to protect the investing public.
Just another question about evolution of thinking, turning to the climate-related rules that have been passed by the SEC. Some say that you fashioned yourself as kind of a climate crusader.
No.
Are they wrong in that supposition?
I haven't heard that. I'm a securities guy. I was at Goldman Sachs for 18 years, a fair number of years ago now. And I deeply believe in markets, and I came into a role that there were some outsiders that said, use the securities laws to promote an agenda, but we're just a securities regulator, and I deeply believe that. But what we found is that not just hundreds, but over 1,000 companies were already making disclosures to their investors about climate risks. And I'm very proud of the work we did to bring some consistency in those disclosures, all based in materiality, meaning that the only thing that the various investors need to look to, or the only thing the public companies would need to do is to make disclosures about their material greenhouse gas emissions, and not their supply chain, just their emissions and how they manage certain risk in that field. One interesting number, of the top 1,000 companies in the U.S. in the capital markets, what percentage of them do you think already make greenhouse gas disclosures?
No, is the majority?
It's over 60%. And so investors, we heard from not just hundreds, but thousands of investors that say they make decisions over those material disclosures. So our role is just to try to bring some consistency to that.
Chair Gensler and I are going to keep talking. The full interview will be available on the Big Take podcast. I'll send it back to you in New York.
All right, thank you. Bloomberg's David Gura in Washington with the SEC Chair Gary Gensler, the outgoing SEC Chair. A wide-ranging conversation there, and of course, we want to reflect on some of what he did tell us and bring in now Bloomberg Balance of Power co-host Kayleigh Lines. Kayleigh, it was interesting in some ways that Gary Gensler was kind of minimizing his role in what he's done, talking about how we're just a securities regulator. We don't have any greater mission than protecting the broader public. What stood out for you in that part of the conversation?
Well, I thought it was really interesting, Scarlett, that he was essentially trying to compare himself with his predecessor in some way, which, of course, was Jay Clayton, who has now been tapped to be part of this incoming second Trump administration, leading the Southern District of New York. The idea that the kind of enforcement actions that Gary Gensler has taken a lot of flack for, specifically when it comes to the crypto industry, which it's no secret has had a very antagonistic relationship with the SEC. He was suggesting that really started under Clayton, who brought a lot of enforcement actions himself. If we all think back to Jay Clayton's tenure as SEC chair, he, in fact, denied Bitcoin ETFs. It wasn't just Gary Gensler who was initially opposed to that, although because of legal challenges, he eventually had to relent, the court making that decision in many ways for him and the other commissioners. As we have really seen throughout his tenure, a lot of pushback through the legal system, through the courts, to many of the rules that he has tried to pursue, not just when it pertains to crypto, but also things like hedge fund disclosures and that climate fee disclosure rule they ended talking about there. This notion that the SEC, well, he said, is just a securities regulator, not a climate regulator. They were trying to amp up disclosures that public companies would have to make. That has been on pause because of many legal questions around it. And it's not clear that that is something that is going to stand in the incoming SEC led by Paul Atkins, who presumably will be confirmed to that role, tapped by Donald Trump. So there's a lot of questions about how the SEC as an agency will be moving forward differently under this administration, and in many ways could be friendlier not just to crypto, but to Wall Street at large.
All right, all fantastic points. And I know that this is something that you'll be discussing later on Balance of Power at the top of the next hour. Bloomberg Balance of Power co-host Kelly Lyons in Washington. Coming up on Bloomberg Markets, the S&P 500 now turning a bit lower here, losing about 0.25%. We're going to take a look at some of the individual stocks that are moving so far in the session. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together. And that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or sorry.
My voice and my conversation, my poetry, you know.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me. But we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought. But I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. We're looking at the S&P 500 down right now with 8 out of 11 sectors in the red. So for some individual midday movers, let's bring in Bloomberg's Natalia Knežević. Natalia.
Hi, Scarlett. So we are watching shares of eBay and Meta. Meta is down, but this is a part of a bigger risk of sentiment today. But eBay, this is currently the best performing stock in the S&P 500. It comes as Meta said that eBay will be able to publish its listings on Facebook Marketplace, and then customers will complete those purchases directly on eBay. So it's a pretty big move for the company. We see the stock reacting really positively. The next stop is Sana by Biotechnology. It's a relatively small company, but it's a really big move. The stock is up by more than 200%. The company posted positive results on its trial and treatment of type 1 diabetes. That study found no safety issues. Analysts are really excited about this news, but they are saying that on the one hand, time frame between now and the moment when this treatment will be available for commercialization can take a pretty long period of time, but at the same time, it completely changes the risk profile of this company. And then finally, Edison International. This is the worst performing stock in the S&P 500. It's now down by almost 10%. The stock is moving down sharply as wildfires are spreading across Los Angeles. The company's Southern California utility is the largest in the region. It has already shut down power to more than 100,000 customers, homeowners, and businesses. And it's saying that it will likely to cut more electricity as it's trying to prevent the spread of wildfires. Scarlett.
All right, Natalia, thank you so much. And of course, we will be heading over to LA to get an update on those wildfires. Natalia Kinejevich, thank you so much. Now, coming up, President Biden just certified a raise for millions of retirees, but the move might barely be a silver lining for Social Security at large. We've got more in our new retirement-focused segment next. This is Bloomberg.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics and math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. Time now for a brand new weekly segment that makes its debut today, focusing on retirement, a key topic that investors, voters, and politicians are increasingly focused on. President Biden on Sunday signed a bill into law that will increase Social Security benefits for more than 2.5 million retirees.
Signing this bill, we're extending Social Security benefits for millions of teachers, nurses, and other public employees, and their spouses and survivors. That means an estimated average of $360 per month increase. That's a big deal.
For more on this, let's bring in Suzanne Woolley with Bloomberg News. This was a rare public bill signing by President Biden, I think the first in more than 2 years. Don't Social Security benefits increase annually due to a cost of living adjustment?
They do. They do. This was an interesting signing because it is about the Social Security Fairness Act, which is an act that Social Security Act. it applies to a couple provisions that ding public service workers' Social Security benefits because of some quirks in the system. So this is sort of trying to remedy some old provisions in the Social Security system that have hurt public service workers like firefighters and policemen and teachers.
Okay, so thus the Social Security Fairness Act.
Yes.
Why was this act passed now before the start of the new year?
That's a really good question. What wrangling is going on in Washington? But one thing is that it's become more pressing as more baby boomers are retiring and are beneficiaries and who are encountering this and seeing their benefits dinged. So, and this is has a very broad appeal among congressmen and senators because there are constituents in every state who are getting dinged by these old provisions in the Social Security Act.
You mentioned baby boomers. As a Gen Xer, whenever I hear about Social Security benefits increasing, I kind of think, well, it's inevitable that this thing will kind of run out of money or we won't get as much in benefits as the prior generations have. What are experts saying on that front?
Well, experts are saying that this particular Social Security Fairness Act will have an impact on the health of the Social Security system in that it'll push up when the system is unable to pay full promised benefits to workers by 6 months. So that affects all of us.
So my fears are not unfounded.
Your fears are not unfounded. There's always talk of reform about pushing the full retirement age from 67 to 70, and I feel like every generation gets a little bit less from the Social Security system as it comes under need of reform, and they have to do something to lessen the costs.
Speaking of Gen X, I know you've been writing about how this cohort faces significant financial stress, in large part because it's the first group that really saw the retirement of pension plans, traditional pension plans, and saw the advent of 401k plans, which people didn't really understand how to use, at least initially.
Yes, that's so true, because I feel like Gen X were sort of the guinea pigs of the 401k system, and they were the first generation to full-on have 401ks. And in the beginning, the plans weren't as good. Companies and record keepers weren't as sort of involved and savvy about the best design for the plans. The fees were higher. So, we had an imperfect system that the Gen X generation had to sort of jump into with kind of no training.
Yeah, no, that's a good point. Financial literacy was not something that we were taught in school, even now, but especially back then.
Right.
And of course, this cohort is also paying for their kids' tuition and paying for their elderly parents. A lot of people you spoke with say they don't see themselves able to retire anytime soon.
No, many people don't because of those pressures you just mentioned, the sort of sandwich generation. Not only are they helping their parents, but they're helping their adult children who are having sort of a tough time launching into the working world. Yeah. And this is all at a time when costs are really high too. So you've got all these pressures raining down on you, and it's very hard to find the money to save for retirement when you've got a lot more pressing financial needs.
Yeah, I think about one of the quotes that you got from one of the Gen Xers you spoke with about how having to just grind it out and not being able to retire.
Yes.
Kind of sums it all up.
Yep.
All right, Suzanne Woolley with Bloomberg News. Thank you so much.
Thank you.
All right, coming up on Bloomberg Markets, we're looking at 2025 shaping up to be a big year for M&A. Bob Profusek, Global Chair of M&A at Jones Day, joins us next with his outlook. From New York, this is Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's check on how markets are faring right now. You have the S&P 500 at session lows, led lower by technology. The Nasdaq losing about 0.8%, and the Russell 2000 in particular underperforming with 10 out of 11 sectors declining. Basic materials is the outlier. That is the only sector in the Russell that is gaining right now. The bond market largely stabilizing after the recent move higher in yields, but notably the 20-year yield currently just below 5%. It did reach 5%. It is, of course, an outlier on the curve, but it could be a sign, a worrisome sign for what's to come across the rest of the curve now that it's topped 5% today. Let's move over to the UK because the bond sell-off has been a global story, and that really peaked today with the 10-year UK bond yield reaching 4.8%. That is the high since 2008. There's a lot of persistent inflationary pressures. There's also some comparisons being drawn to the 2022 turmoil as well. So for more on the market route in the UK, I want to bring in Rachel Evans over in London. She is managing editor for fixed income and rates for Europe overall. Rachel, I talked about inflationary pressures, but it's kind of hard to pin down a specific sell-off for a specific catalyst for today's sell-off in UK bonds and the pound and stocks beyond something vague. What are people saying to you?
Yeah, I mean, it's one of those things, isn't it? We come into a new year and so much of this is sentiment driven. These are issues that have been kind of lurking behind sentiment on UK assets for a while now, particularly since we had the UK budget under the new Labour Party administration back in October. People have been really growing concerned about the amount of debt that they are looking to sell in order to fund their spending plans. We've got £297 billion worth of debt to sell in this fiscal year, and those auctions are starting to come through this week as the year gets underway. So those seem to have really provided sort of a reminder to investors that this is something that they need to pay closer attention to, and I think that's really why we're sort of starting to see this more dramatic move this week.
And it's not just bonds, as I mentioned. The pound is also under pressure, reaching $1.23, the lowest since April. There's a significance here of bonds and the currency selling off together because usually higher rates will at least attract some investors, which then supports the currency.
Yeah, exactly. So this is a particularly bad sign. Typically when you see rates and the currency sort of moving, higher yields and sort of lower currency, that's a sign of a broader lack of confidence in that particular country. Because as you point out, normally you'd expect high yields to woo investors to come back in. So this is really not a good sign. And when you couple this with the fact that we're also seeing UK stocks falling as well, particularly those with a domestic focus, it's kind of sending a signal that the investors are are really losing faith in the UK as an economy. We've got a government that has vowed to restart growth and to bring back growth, and there's now serious question marks about whether investors buy that.
Right, and of course the comparisons to 2022 and the Liz Truss moment abound. I wonder, because in 2022 the gilt meltdown led to kind of a liquidity crisis overall. A bunch of funds were left flat-footed. Do you see any sign of disorder from institutional investors, from different funds?
So not yet, and a lot of those problems that we identified 2 years ago have really been solved. You know, we don't have the same sort of exposure from pension funds to particularly sort of inflation-linked debt, which, you know, really prompted a big scramble for the exits 2 years ago. So those problems have eased, but of course, you know, when we do start seeing, you know, yields hitting multi-decade levels, some of those kind of heading back to at least kind of the trust levels that we saw back in 2022, it does beg that comparison. And I think a lot of people are sort of watching very closely to see if kind of this initial sell-off really gains legs and becomes something more of a broader confidence crisis in the UK.
All right, and it's something we'll continue to monitor. Rachel Evans joining us from London. Thank you very much. All right, plenty of stress clearly in the UK, but no signs of stress when it comes to deal making in the US, where M&A activity is off to a pretty hot start in the new year. Some of the notable transactions: Getty agreeing to buy Shutterstock, while payroll software firm Paychex is acquiring rival Paycor. Add it all up, and this week's deal haul is worth more than $37 billion. And moments ago, some breaking news crossing the terminal regarding Constellation Energy, which is nearing a deal to buy Calpine in what could be one of the biggest ever deals in the power generation sector. So with more on the M&A backdrop, I want to welcome Bob Profusek, Global Chair of M&A at Jones Day, which has advised on more than 1,000 deals over the past decade. Bob, great to see you.
Nice to be here.
So you say that the M&A stars are almost aligned perfectly for 2025, and in large part this is because of a lighter touch regulatory environment under a pro-business Donald Trump. But the deals that were announced this week and today, it's not like those just came together after November 5th, right?
No, obviously there's been a lot in the pipeline, so to speak, for some time. But, you know, the last 2 years have been difficult. The regulatory environment is difficult. It'll be probably better, but most deals are global, or at least have a global dimension to them, other than a utility deal or something like that. And it's very difficult outside the U.S. One of the things that a lot of people are worrying about in terms of, you know, there is a lot of euphoria. On the other hand, you know, the idea that the U.S. Steel deal was blocked on those kinds of, on the grounds that it was blocked on, it's kind of troublesome in the sense, because one of the things that's evolved in the last few years is so-called foreign direct investment requirements, not antitrust, but there's something different, kind of like CFIUS and the things that were brought to bear there. So it's much better. There's no question this last administration is most aggressive, at least maybe ever, but at least in my time, which has been a long time, in terms of enforcement. But that's a big factor. Not just, you know, horizontal, two companies in the same space, but also there was a lot of resistance to vertical deals, which will become more and more important if the world becomes more and more balkanized and we get tariffs and all that sort of thing.
Okay, so that's where I want to pick up on. How do tariffs spur more vertical deals?
Well, you know, every company that has brings in product from Mexico, China, Asia, and all that, which is almost every company in some sense that make things, they're trying to figure out what's going to happen, and they're looking back to Trump 1 and saying, well, how did that work out, and all that sort of stuff, and you know, things could become prohibitively expensive. Most companies don't operate with a huge amount of slack in their profit margins. They're very tight. Yeah. And so people are looking at it and they're thinking maybe we've got to vertically integrate in the U.S., which of course is what the Trump administration would like to have happen, right? Rather than buy things abroad. And a lot of companies are looking about reconfiguring assets, including assets that were sent out in the last decade or so, because of the potential for tariffs.
So let's talk about
the one thing that we need is clarity on this soon.
Yes, yes, and I think that's one thing everyone's in agreement on, that they just want some kind of answers. I want to talk about the EV industry in particular because it's in for a rough year. There is stalling demand overall. There's competition from China, fierce competition, and of course, reduced production. It's already led to names like Nissan and Honda merging, which took some people by surprise. You say a lot of the companies in this ecosystem are going to run out of capital soon. What kind of deals will that likely result in? How do you see that taking shape?
Well, it typically distressed M&A is about debt. Well, most of these companies don't have a lot of debt. So, and because you can't afford debt when you're in a sort of ramp-up environment, you don't really have a lot of sales. It's all based on the future. There's going to be a lot of consolidation, especially in the battery and related kinds of spaces, because there was, as is not unusual, a sort of euphoria about this in the 2022 period. Lots and lots of capital was raised. Sort of reminds me of what's going on right now with AI. Let's not talk about that stuff, because the valuations were astronomical for companies that didn't have any revenue. And so they're getting together, but there's going to be, electrification isn't dead. It just isn't this moonshot that people were thinking it might be. It's here permanently, but it's just not going to be so quick. And these companies were capitalized on the assumption it was a moonshot. Even the big manufacturers, the traditional autos, they said, well, we'll be all electric by a certain period of time.
They've had to walk that back.
Right. So there's going to be a period of transition for sure.
Well, speaking of industries that are in transition, I think about the media industry and how it's setting itself up for deal making as well, right? Comcast has a SpinCo ready, and of course, Warner Brothers Discovery has reorganized into legacy and streaming. And then we got the news that Fubo and Disney are teaming up as well. How messy is this going to get? Because there's a lot of talk about the job cuts that are coming and the remaking of this, and it might not happen right away.
Well, one of the things, this business in very significant part, not just this media and all that, but just all business is driven by technological change. When you think about what's going on in technology and that, I'm a big football fan. I was surprised that the games last weekend, the NFL games, were on a subscription service I don't have. It's all of a sudden everything is moving, and the so-called cord cutting and all the rest of that goes on with cable, and that there's gonna be a reckoning in that space. Whether separating the businesses, that makes some sense, and maybe the streaming people, that's one side, they got a much better multiple. Maybe there'll be a lot of consolidation with the more traditional people in this space, but there's going to be a lot of activity. One of the reasons I think this is a really hot market is that there is a lot of reconfiguration, spin-offs. You're going to see so-called Morris Trust, where there's a spin-off and a merger at the same time. All that kind of stuff is people are repositioning for really a new world, especially in media.
A new world, and it's something that we know private equity and all asset firms are looking at very closely. Bob, always appreciate your joining us. Thank you so much with giving us your 2025 outlook. Rob Profusek is Global Chair of M&A over at Jones Day. Coming up, our stock of the hour is eBay, soaring in today's session, its biggest gain since 2021. This is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. It's time now for our stock of the hour. We're looking at shares of eBay. They are soaring for the best performance on the S&P 500, gaining almost 10% after Meta offered to publish eBay's listings on Facebook Marketplace. This move is an effort to comply with an EU's antitrust order. While Meta disagrees with the EU's decision, the company did say in a blog post that it will launch a test in Germany, France, and the U.S. that'll enable buyers to browse listings from eBay directly on Facebook Marketplace while completing their transaction on eBay. Joining us now for more on this story is Bloomberg's Caroline Hyde. So Caroline, good news for eBay because more people have access to its listings.
Basically, more visibility, more reach, more general merchandise volume is the outlook here. Bloomberg Intelligence saying, look, this is nothing but a positive thus far. Even Baird saying this is a clear positive for eBay. I mean, the staying power is going to be everything here.
Yeah.
How long this test becomes a reality. And as you mentioned in the introduction, they are trying to fight this. Meta is still trying to fight this because not only is there this movement that they have to include other marketplaces, you can't just be a Facebook user and allowed to use Marketplace, but they also got a big hefty fine on the back of it, more than 700 million euros. So this is still being fought out in the courts, but it's a lovely day for eBay stock, best day since November 2022.
And in terms of what people are saying for whether this is good news or bad news for Facebook, for Meta, I should say, is it necessarily seen as a negative? Because, I mean, the more variety you have on your Facebook Marketplace, presumably that makes it a can't-miss destination for users.
Yeah, I suppose in many ways it just grows. I assume the fact that they're having to let others in on what had been a bit of a walled garden for them ultimately feels aggravating, and they wouldn't be pursuing what is going to be quite expensive legal fees if they didn't feel that it was more than a fine but an issue with the business model. But to your point, this just seems like a win-win for the consumer, and ultimately if it makes Facebook Marketplace ever more powerful because you have a one-stop shop. What's interesting though is when you go in and access an eBay, if you're lucky enough to get access in the US or Germany or France, well, you're still going to be going through eBay for the payments. So I wonder if there's an element that the fact that they're still having to push you off to a different marketplace ultimately to complete the purchase is something that might have a business model at.
That's true. That's true. Yeah, it'd work better for them if they just came in and didn't go away and they had the eBay branding, the co-branding, but nothing beyond that. In terms of Meta and what people are talking about with this idea that Meta is going to let users kind of police themselves, is that something that it moves the share price? I know you talk about it a lot on Bloomberg Technology, and this is something that politicians have been discussing as well, but do investors care as much about this?
I think investors will be pleased that there seems to be an alignment with the future administration.
Oh, good way
I
of
would have
putting
thought
it.
there had been more of an overhang on the stock that At one point, Trump went as far to say that he might want to incarcerate Mark Zuckerberg. I mean, that doesn't bode well for potential enforcement and focus on antitrust coming Meta's way. The fact that Meta has so single-mindedly focused on aligning itself, whether it's with changing of the guard from a policy chief over at the company, whether it's the fact that they are going on Fox and Friends, whether it's the fact that they had a trip to Mar-a-Lago and a lunch that's been reported on, all of this, of course, the fact that we're now managing to try and push back on the fact of any bias, moving their entire trust and safety team out to Texas from California. I would have thought an alignment with the future administration is no bad thing.
All right, great stuff. Bloomberg Technologies' Caroline Hyde, thank you so much. With our stock of the hour, that was eBay. Now, let's just go back to the top of the hour, because back then we had an exclusive interview with the outgoing SEC chair, Gary Gensler. He is, of course, set to leave the agency later this month as Donald Trump takes the White House. Gary Gensler spoke about his legacy to our David Gura. Take a listen.
It's a great privilege to be in a role like this. I'm the 33rd chair, and it's a big country. A lot of people could do this job. So I start with it's just such a privilege to be here, and thank you to Joe Biden for asking me to do it.
And you can watch David Gura's full interview with Gary Gensler across our Bloomberg media platforms. In the meantime, coming up next on Bloomberg Markets, we're going to get an update on the wildfires taking place in Southern California as the most destructive windstorm to strike the Los Angeles area in 14 years fans the flames. This is Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ. Mondays on Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
I think this scene is familiar.
Wages are still robust. They're still growing. What does that mean for 2025?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
We're looking at a reacceleration of how much people are earning and the hours they're actually working.
We count you down to the jobs report.
The December Jobs Report, Friday on Bloomberg.
This is Bloomberg Markets. I'm Scarlett Foe. Turning now to a breaking news story that we are following. Wildfires in Southern California now being fanned by what's being called the most destructive windstorm to hit that area in 14 years. We want to go now live to Alex Stone, who is in Los Angeles for ABC News. Alex, you're in Altadena, where there is a fire raging, and there are a couple of different areas within the LA area where there are separate fires, aren't there?
Hi, Scarlett. Yeah, you're right. There are 4 separate fires right now, this being, at this point, the only deadly one. We just found out that 2 people have died in this fire, that there are numerous others who have burn injuries. They don't know how many yet. They have not been able to get in and count. One of the other big fires in Pacific Palisades, a ritzy area near Malibu. That's the first one that ignited yesterday in the high winds. There's another in a northern city of L.A. in the Sylmar area, and another one out east. It's a lot of fire, and this all comes down to the wind. Up until a couple of hours ago, 100-mile-per-hour winds were hitting this area. You couldn't stand in it. Firefighters couldn't shoot any water in it because the water would just go at a 90-degree angle in the wind, that it made it impossible for them to fight the fire. The winds have subsided a little bit, although they may pick up later on today. Let me just show you real fast. This is a Jewish center here. Firefighters are here with us, and they just began putting a little bit of water on there, trying to take advantage of this lull right now and try to knock down the flames that were burning in this area. And if we walk over here, CAL FIRE, they've got their trucks, they've got their hoses out. They've been working all of this, but they've got a big road ahead. That it is so dry. 10% humidity here today. It is still quite breezy, even though it may not be 100-mile-an-hour winds any longer, that they've got a lot of work left to go, that it's going to be many days. A lot of crews are coming in from Northern California, from Nevada, from Oregon to help them out. They are out of crews here in Southern California. Back to you.
And Alex, what is the state with evacuation orders versus evacuation warnings? I don't see a lot of people in the area that you're at, which is a good sign, I guess, but is it difficult for people to make their way out of their part of Los Angeles right now?
Yeah, well, people have been told to get out of here. This is an evacuated area. It is so big that today they couldn't do anything but really go on PAs, on loudspeakers, on patrol cars saying, get out, leave now. In Pacific Palisades, we saw they had a rough time, people getting out there, where they clogged the roads and they ended up getting out of their cars and running and abandoning their cars. The LA Fire Department came in with bulldozers and moved the cars out of the way, so engines like this one right here, so they were able to get in. Otherwise, they were blocked getting into that area. Here in the Altadena area, a couple hours ago, as people were trying to get away from the flames, there were a lot of vehicles packed up, people racing out of here. It wasn't bumper to bumper like it was in Pacific Palisades, but we don't have real firm evacuation numbers at this point because it is so big and so unknown that law enforcement and firefighters have just said, everybody get out, that it's dangerous and they got to go.
All right, Alex Stone with ABC News, thank you so much for the update and the reporting on the ground. And of course, we're keeping an eye on the developments there in Los Angeles. We should note as well that Gavin Newsom, the governor of California, did speak with President Joe Biden to give him an update on the wildfires currently raging in Los Angeles. That does it for Bloomberg Markets. We leave you this hour with the S&P 500 under pressure, down about 1/3 of 1%. But really, it's the bond market that we're watching very closely here. Right now, yields have stabilized, but the 10-year is currently at about 4.68%, just below that 4.7% level. And the 20-year did top 5% as well. And that's a key level to watch for, because even though the 20-year tenor is a little bit of an outlier, not as widely traded, less liquid than the other tenors, it could portend similar moves up across the curve to that 5% level. And a lot of people were anticipating that if yields get to 10%, that might then presage a move towards 6%. And if yields continue to stay elevated, that could then trigger a rethink on the equity market and spur larger declines there in U.S. stocks. From New York, this is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump makes his return to the Capitol. Welcome to the fastest show in politics as the president-elect arrives in Washington to attend the funeral of Jimmy Carter this week, but not before an important meeting on Capitol Hill between Donald Trump and Senate Republicans. I'm Joe Matthew alongside Kaylee Lyons in Washington. We welcome you to the Wednesday edition of Balance of Power. Kaylee, something else. This meeting could bring a lot of news on the congressional agenda, right? On sequencing, on confirmations, and maybe more.
Well, certainly confirmations are going to be in focus as hearings for Donald Trump's nominees for a second administration, at least a large number of them, will begin next week ahead of his inauguration on the 20th. But of course, after the inauguration, when they're trying to enact his legislative agenda, that's where we still have a pretty big question mark as to how exactly tactically the president-elect wants to pursue this. Does he want one big, beautiful, powerful bill as he has suggested? Or if he gets or rather Senate Republicans get his ear today and say, we'd like it to be two, is he going to decide maybe that's the better way forward?
The idea is how quickly you can get some punch. Sworn into office, confirmations we're hearing potentially on day one, Marco Rubio and Elise Stefanik, and then how quickly can you get to the border and taxes? John Thune and Mike Johnson haven't agreed on this, but there's no real direction coming from the president-elect, so we're still talking about it.
Yeah, so we'll have to see what emerges. The meeting is set to take place this evening. Yeah. So we'll have to follow this story throughout the evening and, of course, tomorrow, just as we're always following the markets here on Bloomberg as the Trading Wednesday is underway. So let's get a check on that now with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much indeed. We got a real chill on Wall Street today with the Dow, the S&P, NASDAQ very much in the red right here with the S&P down 12 right now, down 0.2%. Dow Industrials down 77, decline there of 0.2%. NASDAQ down 74, drop there of 0.4%. 10-year 4.68%, with the 2-year now at 4.27%. Gold, little changed, up $6 the ounce, $26.55, up by about 0.2%. A retreat for crude with a 73 handle now, down 1.2%. And Bitcoin trading lower by 2.5%. Bitcoin at 94,062 on Bitcoin. Bottom line here, traders refraining from making riskier bets with the market set to close tomorrow on the eve of Friday's jobs report. Sources tell Bloomberg Constellation Energy is making an acquisition of Calpine in what would be one of the biggest ever deals in the power generation sector. Those sources say a deal could be announced in coming weeks. And also, BlackRock has told employees it is cutting roughly 1% of its workforce after it committed more than $25 billion for acquisitions last year to expand its reach in private market assets and data. Again, recapping, S&P now down by 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. We're live here in Washington, and joining us in studio in just a few moments will be a very important guest, the former chair of the House Financial Services Committee, Patrick McHenry, will be with us. He, of course, has left the House of Representatives, no longer representing North Carolina, so he'll be weighing in on the business still ongoing there, and if he's happy to be on the other side. But before we get to that, Joe, we also have to talk about the multiple legal developments pertaining to the president-elect that have emerged today.
It's been busy. We have a sentencing set for Friday, right? We'll remind everybody of that. January 10th, this is the New York hush money case. Donald Trump is now asking for help here, wants the Supreme Court to intervene. And as soon as we started working on this story, we get another one now. There could be a major development in the potential release of at least some of Special Counsel Jack Smith's report, which we know Merrick Garland wanted to see released. Donald Trump was fighting that as well. So we want to get to this with June Grasso, the host, of course, of Bloomberg Law on Bloomberg Radio. She's with us from World Headquarters in New York. June, it's great to see you. Let's start with the sentencing on Friday. What's going to happen here?
Well, that's a good question. It depends on the Supreme Court, I suppose. Trump is making this unusual request, one of many unusual requests he's made to the Supreme Court, asking them to intervene in a state case before it's over. I mean, they don't usually have jurisdiction to do that. You have to wait until the state case is completed. So he wants them to intervene to stop the sentencing from going forward on Friday, saying that it will, different reasons, saying that it will harm the reputation of the presidency, that will be a stigma, that will harm the way he, world leaders look at him, that he has so much work to do during the transition. But remember that the judge in the case, the trial judge, has said that he is not going to impose any kind of sentence at all. This is just going to be an unconditional discharge, but it will formally put on the record that Trump is a convicted felon. And that appears to be what he's trying to avoid, being the first convicted felon being sworn in to be president of the United States.
Well, and of course, it was this case, the only one that had a verdict of some kind, because it was the only one that went to trial. The federal cases, of course, dropped because he is the president-elect. June, that's both the documents case down in Florida, which was struggling to find a path forward anyway, as well as the election subversion case here in Washington, D.C. And we learned today from the Department of Justice that despite yesterday's ruling from the judge in the documents case, Eileen Cannon, that blocked the release of Special Counsel Jack Smith's report, that they're still going to try to release, if not the classified documents part of it. The DOJ would like to see the election subversion material come forward.
Right. So by dividing it this way into the election subversion part of the special counsel's report and the classified documents part of the special counsel's report, they're avoiding the argument made by the co-defendants in the classified documents case that it would hurt them to have this revealed to the public. So, I mean, that might be a good argument, but now the Justice Department is saying, well, we're just going to release the first part of this report. And, I can't think of any reason besides embarrassment to Donald Trump that that wouldn't be allowed to happen. But it's before the 11th Circuit, and that is a conservative circuit. They have overruled the trial judge, Eileen Cannon, a couple of times. So it's hard to say what they'll do. If everything went the way it should, I think that part of the special counsel's report should be released. Because the second part, I mean, when Trump takes office, that the Justice Department is never going to release the second part of the report, and most likely the charges against the co-defendants in the classified document case are going to go away. So this is the be-all and end-all decision here.
All right, June Grasso, host of Bloomberg Law, thank you so much for joining us. Of course, we'll be watching on Friday to see if that sentencing does indeed move forward unless the Supreme Court intervenes. But as we've mentioned, before Trump can get to his agenda on Friday, he has a lot to do here in Washington in the next few days. He will, of course, be attending former President Jimmy Carter's state funeral tomorrow. And ahead of that, this evening, he is expected to meet at the Capitol with Senate Republicans as lawmakers look for some clarity on what exactly the legislative path forward is he would like to pursue. There's a little bit of a difference between the Senate and the House here, and it's on the House that we'd like to focus with our next guest, the former chair of the House Financial Services Committee, someone who once held the Speaker's gavel for a brief period of time in 2023, is here with us now, former Congressman Patrick McHenry of North Carolina, here in our Washington, D.C. studio. Sir, nice to see you.
Great to be with you.
On the other side.
Yes, and nice to be in studio as well. Cheers.
Yeah, it's lovely to have you. As you are now on the outside looking in, anticipating what is about to happen, now that Republicans do have entire control of Washington, how easy is it actually going to be able to exercise that control when it comes to some of these big ticket items we're talking about? Tax reform, immigration reform, energy policy.
Big ticket items, major consequences, high stakes, narrow majorities. This is going to be a hell of a grind. That is the only way to describe it. We saw on opening day with the Speaker's vote. We had 15 votes on for Speaker McCarthy's election. He got through it without help. You had a faction within the House think that they were playing with the same dynamics as 2 years ago, and Speaker Johnson had his card, which was the president-elect Donald Trump, saying that this is an imperative to elect the Speaker. So we saw the dynamic shift and the power shift here in a significant way, that President Trump's power and popularity and the mechanics of good leadership in the House can lead to results. And so I think we're going to have I think you're going to get the big ticket items done. It's going to be the secondary issues that are going to be much, much harder. And we need to lower, I think Republicans need to lower their expectations on being able to achieve that in a timely manner.
I'm struck by the singular experience that Mike Johnson is having right now. You're one of the only people in the world who knows what it's like to stand in that rostrum, look across the floor of the House of Representatives. We know that he's going to have an even smaller majority in this new Congress than he had before. But bring us back to that view. When you're in the rostrum and you're looking at that room in front of you and the Republican conference, we hear a lot about the five families. What did it look like to you? Did you see these factions spread out in front of you as you were trying to corral lawmakers?
I spent most of my career in the House focusing on the mechanics, the COO role, not the CEO role, not the chairman role, but the mechanics of the day-to-day and how do you deliver on this. So when I look out, I see the groups of people, how they're sitting, where they're sitting, their disposition, who are they talking to, who is the person who's not supposed to be in that row talking to somebody in that row. Why are these two people that I know hate each other, have personally told me they cannot stand each other, but they're laughing and hugging about something? That's probably not good, right? It's a dangerous thing. So when you look out at the mechanics of this, and what you saw from a Speaker Boehner and a Speaker McCarthy in particular, is they knew the granular details of this stuff. And Speaker Ryan came in with a different view, and I would say that Speaker Johnson comes in with a different view. They're at the higher level of policy. The mechanics, they have not been steeped in. That's not their first order capacity. So they lead in a different way than those that understand the tactical day-to-day. And we're in an environment now where President Trump has this overarching, has this umbrella that enables policy to be made within those powers and within those contours if he is definitive and certain. We're in this situation now where, as a primary example, where if the president says he wants one reconciliation package, there'll be one reconciliation package. And if he says there are two, there will be two. And if he says maybe one, maybe two, you may get none. And so he has to be definitive in what he wants and his expectations, and then demand that congressional leaders perform to that. And uncertainty means nothing happens.
Okay, so when we look at, as Joe is alluding to, the many different factions here, the people you might find suspicious if they were sitting together, the Freedom Caucus, for example, which caused a lot of trouble for Speaker McCarthy. That's why you had to step in for a few weeks there to hold the gavel yourself. Are those the same people that you see as most likely to ultimately bow to what the former president and president-elect is going to want? Because they're the ones who are likely to push back on a debt ceiling increase, on the idea of tax cuts without at least somewhat offsetting spending cuts.
Well, they're the ones that are most outspoken and they're currently getting the most attention. But you have those that are on the moderate end of the Republican Party that are not getting attention. And they're the ones that will have significant sway over the contours of legislation as well. It is not just you mentioned the five families, and it is to say that you can neatly divide this Republican conference into five factions. They're more than that. I mean, it it's a myriad of challenges the Speaker faces, and you have one-off challenging individuals that, because of personality, because of their lack of understanding how the place works, may be problems on a weekly basis here. So it is far more complicated than the Freedom Caucus, though the Freedom Caucus is currently shown, with the 9 votes that they withheld to Speaker Johnson, that they have the power to throw him out of the speakership. What they also submitted to is an understanding that President Trump would force them to submit. And so they gave that up on the first vote. They made their show, but they did not extract any additional pain or get anything in result for that, other than to show they do have the capacity to take the speaker out. So it's a complicated thing, a complicated beast, but this is why this is why I love following this stuff. This is why, this is far more interesting than any other sporting competition.
Do you regret not being in there now?
There's a little FOMO, but it also is a little more liberating because I don't feel that weight and the pressure of that moment to perform. But it is absolutely fascinating. It's going to be a fascinating Congress to watch.
I can't imagine how you remember that period of time when you were holding the gavel. But I think the point that you're making here is that even after MAGA wins the election, House, Senate, White House, the power may in fact lie in the middle.
It does, and inevitably, outside of a reconciliation package, you need to have almost, with a reconciliation package, you'd have to have near unanimous Republican support.
Yeah.
That is complicated by
So why won't he
SALT.
say what he wants? Mike Johnson's begging for it. Just give us direction, to your point.
That has always been the beg of President Trump from legislative leaders. That is the first term, and is now in his second term. This is part of how he operates. And when people seek clarity, he may withhold that. Yeah. That may be a purposeful act, and I think on the most part it is. And in other regards, it may be the fact that he doesn't see, or his advisors don't see, the need for him to step in yet.
He has obviously a long list of things he would like to see accomplished, that he would like to see the U.S. turn into, including something you're very familiar with as it pertains to crypto. He wants the U.S. to be now the Bitcoin capital of the world. You obviously worked very hard on crypto legislation when you were chair of House Financial Services. You had to do so through bipartisan negotiations. That may be less mandatory now, if you will. Now that it will be full Republican control, how do you see the nature of any kind of market structure legislation, for example, that's going to move forward from here changing, and how will it affect not just the incoming SEC chair, Paul Atkins, but whoever takes Ross Benham's spot at the CFTC?
Well, so let's step back. What we got with our market structure legislation called FIT 21, which was first of its kind on crypto, giving it a regulatory definition of what is a digital asset and a regulator, and actually 2 regulators, because we're America and we do things in a more complicated way. But FIT 21 was the result of bipartisan negotiations in the House of Representatives without the help of a Senate banking chair. Now we have Tim Scott as Senate banking chair. That is a world of difference from Democratic Senator Sherrod Brown, and a pro-administration. And I was working in an adversarial administration, highly adversarial administration. And yet I had 1/3 of the Democratic Party join me, including the number 2 and number 3 House Democrat, former Speaker Pelosi, significant members, Jim Himes of Connecticut, serious legislators across the left of center ideology, joined with House Republicans with an administration that did not want them to do that.
Yeah.
So I think the opportunity for crypto legislating, it goes way up because the environment has shifted, and crypto has shown that they have capacity at the ballot box, and they're willing to help their friends and go after their enemies. That is real power in Washington. They've expressed it, and if they're here to stay and here to play, they can have massive results over this Congress and future Congresses.
Big change coming to the Fed. Are you going to get dinner with Michael Barr once he's on the loose?
No time will I have that. I think Michael Barr resigning as vice chair to the Fed is very good for our system of independent monetary policy and very good for the Federal Reserve. I think the likelihood that incoming President Trump would fire the head of regulation at the Fed it is, number 1, warranted, and number 2, likely to succeed in the courts. And so for Michael Barr to step aside is actually is a direct result of this election, number one, and number two, the direct result of his mismanagement of the new set of regulations in bank capital standards that he couldn't even see through before the election. So I think this is a welcome and good thing for the American economy, a welcome and a good thing for financial stability and banking in the United States, and very good for our global leadership as well. I think the Federal Reserve Board does a fine job of overseeing their full powers when the board is in charge. And when they silo this off and hand it off to one individual on the board, they make mistakes, or that person does not keep their eye on the ball, like Michael Barr did not keep his eye on the ball in March, with the March of 2023 with the regional banking crisis. So I think it's a welcome and good thing. And I wish him well as a member of the Board of Governors, and I'm grateful that he has gone as with those additional powers of being vice chair.
Yeah, talking about the supervisory role of the Fed here specifically, but you in that answer talked about the independent monetary policy setting role as well. And I wonder if you're confident about that independence in this incoming administration, when just yesterday Donald Trump was at Mar-a-Lago saying interest rates are far too high. Do you not think he's going to try to put some pressure here?
He always does, and he always will.
Is
and
that
every
appropriate?
every president has. Every president has. FDR tinkered with the gold supply during the Great Depression. LBJ physically assaulted the chair of the Federal Reserve. Right? So he's not doing that. Mean tweets, that does not make monetary policy. And the Board of Governors at the Federal Reserve have long terms as Congress designed so they can have this longer term view. And I think Jay Powell's done a fabulous job as chair of the Fed. I think he's done a fabulous job. He's reining in what got out of control in inflation, and they're hitting their marks. But this president will speak his mind publicly where other presidents privately complained. And that is a big distinction between now and what was then.
We spent a lot of time in our conversation. You've been very generous with your time talking about pretty recent history. You spent 20 years doing this. I'm glad to see the bow tie is still here. Well, what's next for Patrick McHenry? This is going to be a massive life change for you.
It is. This is what I've done my whole adult life. Public policy, campaigns, and elections. Yeah. I still want to remain involved in these big debates on financial policy. I think it's important that America stay at the forefront of the world of finance and we remain competitive. I have a deep interest in digital asset and cryptocurrency policy and affecting outcomes. But financial inclusion and fintech are these other areas of opportunity that I think we need to expand on. So I'd like to stay involved in the public policy debate, but more meaningfully in the economic consequences of our economy and participating in that in a real way now.
And you'll stay in touch with us, I hope.
Absolutely. This is the best place to...
Your opinion is important to us.
Well, this is the best place to know what is happening day to day, moment to moment with the markets and here in Washington. So thank you all. Thanks for having me on.
High praise, sir. Thanks for being here.
Yeah, absolutely. Patrick McHenry, former Congressman, Republican, with us at the table here in Washington. We want to keep tabs on the markets, of course. We've been talking around them. Let's get to them with Charlie Pellet in New York. How's it going, Charlie?
Thank you very much. And here's what's going on right now. Little change on the S&P 500 index. Seconds ago, it was trading higher, but right now we'll call it flat on the day at 59.06, where we stand on the S&P 500 index. The Dow down 17. That is a drop of just under 0.1%, while NASDAQ lower by 17, a decline now of about 0.1%. 10-year at 4.68%. The 2-year 4.28%. Gold up $6 the ounce. Spot gold at $26.54, up by 0.2%. West Texas Intermediate crude down 1.4%, $73.24 a barrel. And Bitcoin now down by 1.9%, 94,634 on Bitcoin. Stocks are little changed as traders refrain from making riskier bets. The market's set to close tomorrow on the eve of Friday's jobs report. Ally Financial is cutting jobs, ending mortgage originations, and considering strategic alternatives for its credit card business as borrowers have struggled to pay down costly debt. Again, recapping, S&P 500 index now lower by 2 points. Little change there. We've got the 10-year yielding 4.68%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Welcome back to Balance of Power on Bloomberg TV and radio. We just had a great conversation with the former chair of the House Financial Services Committee, Patrick McHenry, who was discussing something that is very relevant today, and that is the path forward on budget reconciliation. This is something Donald Trump is going to be talking about with Senate Republicans in Washington this evening. And I believe what former Congressman McHenry told us, Joe, was essentially as long as Trump is clear, that is what will happen.
Right.
As long as Donald Trump, which is kind of where he is now, is suggesting one bill, two bills, I'm down for anything. He said if he doesn't decide, that may be the one thing that makes sure nothing happens.
That's why Mike Johnson and John Thune want an answer.
Yeah.
And we're wondering if they get one today. Let's assemble our panel because they have feelings about this too. Rick Davis is with us, Republican strategist and partner at Stone Court Capital, Bloomberg Politics contributor, joined by Democratic strategist Christy Setzer, founder, New Heights Communications. Great to have you both with us here. Rick, how important is it for Donald Trump to be clear with John Thune, with Senate Republicans when they meet later on today? The clock is ticking here. If they want something out of the gate, they need to start writing legislation.
Yeah, it's obviously been in Donald Trump's interest to try and push the envelope on timing. You know, we just talked about getting some of his confirmed Senate confirmed secretaries in day one. Well, he wants to have the same kind of impact legislatively. He wants day one the Senate and the House to start stepping off on his agenda. And what's really interesting to me is the fact that the president-elect's White House selection for immigration, Stephen Miller, has come out publicly saying he sides with Thune and we ought to do immigration first and get the rest of this stuff done in a second reconciliation package later. So when you start seeing people around Donald Trump articulating a clear strategy on what they think ought to get done, and they're the ones advising Donald Trump, I think it leads you to a path that could likely be an outcome today, which is Donald Trump puts his hand on Majority Leader Thune's shoulder and says, you've got the ball, get this thing rolling. I want immigration, energy, and a few other things first. And we'll handle tax cuts and other fiscal issues later. If that happens, then everyone salutes and steps off. There'll be no more debate.
Okay, well, I'm guessing the only people saluting really, though, will be Republicans, Christy, not Democrats. And I do wonder the role, if any, you see them playing in here. By nature, reconciliation means that just the majorities can get this thing through. You don't need 60 votes in the Senate, for example. So do they have any leverage in this conversation? Is Chuck Schumer relevant to how John Thune pursues this?
Yeah, sure. We talked in the last segment about how Democrats right now are just going to try to control the things that they can, which include, one, sort of controlling the media narrative a little bit. Obviously, as this process is going on, you're certainly going to see members of Congress, members of the Senate headed to cable networks to talk about what they would like to see in this process. And then they're also going to have some control, some leverage about, small process things. What can they delay? What can they emphasize? That sort of thing. So it's not that I necessarily think that Democrats have too much of a preference of what gets addressed first, whether it's immigration and the border or, tax cuts, for example. But I do think to the extent that Rick was emphasizing how Donald Trump has been quick out of the gate with, naming potential cabinet nominees, with legislation, wanting a big, beautiful bill, et cetera. Sure, that shows that he is active, but it also shows not just your priorities, but your values. And I think that there is a lot of opportunity for Democrats right now to control the conversation about what are Donald Trump's values. If we're going to talk about tax cuts, it's giving a huge benefit to people like Elon Musk and Jeff Bezos and Mark Zuckerberg and not you, right? So that is the leverage that Democrats bring right now.
Boy, I can't imagine, guys, what people think listening to this conversation every day. Who's going to go first? Are there going to be one or two bills? My goodness, we've been talking about this for days, and you start wondering exactly why it matters, Rick. But with regard to the border, if this in fact did come down to two different swings at reconciliation and they want to get to the border first, could they not get some help from Democrats on that? Aren't there Democratic members in both chambers, frankly, but more so in the House, who would like to be associated with border security?
Sure. You saw a virtual stampede toward being more assertive on border security before the last election because I think members of the Democratic Party started reading the surveys and realizing that this itself is much more than just border security. And Donald Trump has said openly he'd be willing to engage with Democrats on what to do about Dreamers and, work requirements and expanding H-1B visas. And I mean, there's a lot to talk about on a bipartisan example. And we just saw a bipartisan bill come out of the United States Senate right before the election, parenthetically, that Donald Trump had killed. But there is appetite for a bipartisan deal. I would say the one thing that is probably going to get in the way of anything significant like that is deportations. There'll be things in this bill that Donald Trump's going to want to have to make and ease his path to massive deportations. And I can't imagine a scenario where Democrats would sign on to any bill that has that kind of punitive provisions in it. So, yeah, there are lots of good things to do on a bipartisan basis. Things have been done in that way in the Senate. Kudos to them. We'll see if Donald Trump picks up where that left off and takes it one step further.
So there may be some area for bipartisan cooperation on immigration, perhaps, Christy, but I also wonder about tax policy, because obviously there's going to be a massive tax reform debate, whether that is encompassing in this wider package or is indeed a separate reconciliation bill. When you think about issues that are likely to come up, like the SALT cap, for example, something Donald Trump will be discussing with SALT-relevant Republicans at Mar-a-Lago this week, that is something that Democrats, Chuck Schumer included, have long been pushing for, as it's typically blue states that are most affected by that. Are there going to be Democratic votes showing up for a tax package that includes that, or is able to maintain the tax cuts that were put into place for inclusive of middle-income families in 2017?
I do think that is an area on the SALT tax where they can peel off some Democrats, including Schumer and others. In general, though, that one provision does complicate an issue on which, generally speaking, there's unity for Democrats, and it is a really good issue for us in that, in terms of messaging. I mean, obviously, I mentioned earlier that just generally speaking, I don't believe that people voted to give a huge tax cut to, millionaires and billionaires. They voted because they thought that they themselves would benefit from those tax cuts. So there's certainly kind of opportunity for Democrats to explain what's going on with that and how it's going to play out. There's also a bit of an opportunity for an education campaign on how much this is all going to cost. It's going to add $4 trillion at least to the budget, to the deficit over the next 10 years. That's a problem. And how do we want to pay for it, right? So that's actually where we get into the meat of the conversation. We're going to see huge Republican divisions on how to pay for it, and where the kinds of ways that, for example, the House Freedom Caucus, those issues that they would like to entertain about how to pay for it include cuts to programs that are deeply popular, Medicaid, Medicare. And again, there's going to be real consequences to groups that actually just put Donald Trump back into office among seniors, poor people, veterans, et cetera. So I do believe that they will be able to kind of pick off a few through, issues like the SALT tax. But for the most part, this is one where I think you're actually going to see a lot of Democratic unity.
It's going to be quite the patio at Mar-a-Lago this weekend, Rick. There are large groups of Republican lawmakers who are headed to Florida for a confab. Governors will be there Thursday night. Saturday, the salty Republicans, as we're calling them, will be there. The Freedom Caucus will be there. They all have their own interests and their own ideas. What will come from these meetings at Mar-a-Lago if nothing less than a congressional agenda?
Yeah, my guess is it's more, here's what we think we can accomplish rather than give us your ideas on what you want to do as members. It's usually the way it works with the White House. But I guess this is Mar-a-Lago, the winter White House, in about 2 weeks. So the reality is that I've been hearing Republicans, the salty Republicans, really minimizing the exposure on the SALT tax. Many of them have taken up this cue that, wow, if we could just get a marriage penalty provision in there that gets rid of that, that would be great. It's not very expensive. It gives us something to say that we won. I think if you have these kinds of attitudes going in, you're going to come out with some agreements that are going to put SALT revisions on the tax code. So the reality is, if they don't do all these things and the tax code doesn't get passed for some reason, then the salty Republicans have a huge victory. All those provisions that took away their SALT tax go back into effect. So the reality is they do have some leverage, but my guess is they will come out of Mar-a-Lago charged up. They'll be happy with what they hear from the incoming White House team, and that will start some of this momentum. As you can see, he's building momentum for early legislative successes, and I think it's a really good use of what is otherwise been really pretty dead time in a presidential transition.
How early, though, is early, Rick? If ultimately he does tell John Thune, look, get me that first earliest win and wait for taxes later, how late in the year do you anticipate that would be, that the tax package actually gets through in a second budget reconciliation bill?
Yeah, well, it depends upon, obviously, what else is coming up that needs funding. So, typically these reconciliation bills take on a life of their own when they're attached to fiscal measures, right? So budget funding for the government. September is always a dicey month. It will be shocking to me that we have regular order this year and that we will have all the appropriations bills done before the end of September and we can fully fund the government for the first time in a few decades. So that will be actually one moment in time where you're going to have to fund the government. It's a must-pass bill. You slap reconciliation in there, and you got a big fat tax cut, and you'll see a lot of Republicans cheering for that kind of effort, and a lot of Democrats really angry that they're going to miss an opportunity to vote on some good things in the budget because they've attached a tax cut to it. So I would think that would be one of the first opportunities on a must-pass legislation that you'd see reconciliation number 2.
All right, Rick Davis, Stone Court Capital partner and Bloomberg Politics contributor, together today with Christy Setzer, founder of New Heights Communications and Democratic strategist. Thank you both so much for joining us. And what is a pretty packed hour? We, of course, had a conversation with the previous chairman of the House Financial Services Committee. We're going to talk to its current ranking member coming up, Maxine Waters.
And they probably will not agree on everything.
No.
Yes, indeed. The gentlelady from California will join us ahead. We've got our eyes on the wildfires out there in the Palisades. Kaylee, we'll talk about that as well. Her district bumps right up against the line where that has fallen between the Palisades and Santa Monica. So we're balancing politics and some real life issues in California straight ahead on the fastest show in politics. This is Bloomberg.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control 1/3 of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investments. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. A choppy trading session on Wall Street today. Stocks are now back in the green with the S&P 500 index up 6, up by about 0.1%. Dow Industrials up 36, also an advance of 0.1%, while NASDAQ higher by 6 points. Little change there, but back in the green. 10-year, 4.68% with the 2-year, 4.28%. Spot gold right now at $26.57 the ounce, up by about 0.3%. Crude 73.31 a barrel, down 1.3%, and Bitcoin down 1.9%, 94,630 on Bitcoin. Sources tell Bloomberg Constellation Energy is nearing an acquisition of Calpine in what would be one of the biggest ever deals in the power generation sector. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much, and thank you for being with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio, and on YouTube, where you can find us always. Search Bloomberg Business News Live, and you'll find our live feed there running through the day. Alongside Kaylee Lyons, we turn our attention to what's happening right now in Southern California. Kaylee, the images have been just remarkable. We were just looking at some of the tape from last evening when the Getty Villa was just surrounded. Yeah. It was engulfed. And we're seeing these wildfires get incredibly close to downtown Los Angeles. If you're with us on Bloomberg TV or on YouTube right now, this is the Palisades. That's adjacent to Santa Monica. Some incredibly beautiful homes and some rather famous and wealthy people live there, Kaylee, and it's getting getting ever closer to some very concentrated population centers.
Yeah, we know that the fires already have killed 2 people. More than 1,100 structures have been destroyed. Many homes just simply burned to the ground as people have, of course, rushed to evacuate to safety. All of this being intensified and spread by really powerful winds that are making it very difficult for firefighters to get this thing under control. So we wanted to get an update now and turn to David Baker, who's Bloomberg climate and energy reporter coming to us from San Francisco today. As we look down south in your state, David, is there any indication that these are going to be able to be controlled anytime soon with winds like this?
It's going to be very difficult for firefighters to get a handle on these fires until the winds abate, and they have not really abated. The worst of them may be past us, but that is not 100% sure. This windstorm event is supposed to last into Thursday, maybe into Friday, and there's the possibility of another windstorm coming in early next week with no rain in between.
Give us a sense geographically, David, of where this is happening and how close it's getting to areas of LA that a lot of people know. I mean, the Palisades are it's an area on a lot of tours. People know, obviously, the pier in Santa Monica. Where are you most concerned about?
Most concerned about the Palisades, Malibu, which is downwind of the Palisades, and the fire is burning right towards there. They had a bad fire back in December that sort of presaged all of this. But I'm also very, very concerned about Pasadena. When you look to sort of the northeast of downtown LA, Pasadena has a major fire on its hands. We just got an update from CAL FIRE on the size of that one. It is now past 10,000 acres, and it is burning right into the edge of that city. It's a beautiful place if you've been there. It's nestled right up against the San Gabriel Mountains, but that's part of the problem here. These winds are racing down the mountains and just tearing through that area. We don't know what sparked that fire, but now that it is going, it is raging there, and I am very concerned about that spot.
Well, very concerning indeed. And obviously our thoughts are with everyone who are in these areas in which they may find themselves in danger. As we think about how ultimately these fires will be brought under control, it's not just whether or not the winds calm down, but of course, water and other things that it will take to actually fight the flames. There has been a lot of criticism thrown out today, David, by the president-elect Donald Trump, by Elon Musk, for example, about decisions Gavin Newsom has made when it comes to water. Trump specifically saying that he refused to sign a water restoration declaration that would have allowed access to millions of gallons of water. Can you just walk us through the extent to which that is true, or if it's playing any real role in the attempts to fight these fires?
With these fires, when they erupt, the state throws pretty much every resource it has at them in terms of access to water. I have not heard any on-the-ground reports about problems with getting access to water. Plus, the state does actually have and is using tankers that fly out over the ocean, scoop up water, and just dump it where it's needed. We know they were in use yesterday. We saw them flying off the coast of Santa Monica. So we know those are out there. And you know, with fires like this, once they get going, the big issue is how much water actually fell from the sky in the last 6 months before the fires started. Here in Southern California, you're seeing virtually no rain since early last spring, whereas in Northern California, where I am, we've had atmospheric rivers and even a little bit of flooding. They've had nothing down there, and that's the big issue here.
Well, it's great to spend some time with you, David. Appreciate your joining us. Bloomberg climate and energy reporter David Baker with us from San Francisco. It's also a pleasure to add the voice of Maxine Waters, the Democratic Congresswoman from California's 43rd District, is with us at this precarious moment. Congresswoman, thank you so much for being here on Bloomberg TV and radio. This is basically happening in your backyard, as, again, you represent the 43rd District with our eyes on Santa Monica. What do the people of your district or neighboring districts need most now? Can you hear us, Congresswoman? Not sure we're ready to talk to Maxine Waters yet, but we'll work on that so we can have that conversation. If you look at her district, Kaylee, if it's not already impacting her neighbors, it's awfully close.
Well, and especially with the winds that we were just talking about with David, how quickly this can be spread, considering how dry it has been, how powerful these winds are, and how we are talking about urban areas here. Usually Maxine Waters' district would probably not find itself as susceptible to the risk of these fires as other areas of California, which unfortunately have experienced this repeatedly in recent years. But this is literally downtown Los Angeles we're talking about in some instances. And it's remarkable to consider that this is happening with the president, Joe Biden, in California. He was slated to be talking about climate-related issues in California yesterday, remarks that had to be rescheduled as they navigate what is turning into a very serious situation that has already taken 2 lives.
Yeah, and massive evacuations here. To give you a sense of the scale we're talking about, almost 3,000 acres uncontained here. There's a separate fire, about 400 acres in size, Kaylee, that's nearby. And I know that with the winds, there's a very real worry about them coming together at some point here. We're talking about 100-mile-an-hour wind gusts. The images that we were showing, which, by the way, that was live stuff that we're showing you from Southern California just now. Absolutely horrifying images with many people who are, of course, watching and listening impacted by this, and their neighbors, family members who have had to evacuate. We're talking about a massive swath from Pasadena all the way down to the Santa Monica Pier, up through the Palisades in Malibu. Kaylee, it's just absolutely remarkable.
Yeah, and of course, we're seeing resources deployed. David was talking us through some of the resources that are being tapped by the state of California, but obviously the federal government is involved here as well. The White House earlier this afternoon, in fact, just a moment ago, said the president has also directed the Department of Defense to provide additional firefighting personnel and capabilities, as well as 2 modular air firefighting system units being deployed, and Navy helicopters as well, as they try to fight these flames. Just speaks to the very urgent nature of the need to get this under control. And again, as I said a moment ago, this is unfortunately not something that we're not used to in the state of California and other parts of the country. Frankly, these wildfires have done a lot of damage in recent years and beyond.
We're standing by for a conversation with Congresswoman Maxine Waters, the Democrat from California, whose district is right in the zone that we are looking at here, is going to be on the line with us shortly. Kaylee, we have a lot of other things to talk about with the Congresswoman, as we did with Patrick McHenry. Really interesting conversation to hear from a former, in this case, at a difficult moment here in Washington, with big questions about the congressional agenda going forward. We'll remind our audience, by the way, Donald Trump in Washington for a meeting later today, 6 p.m. Eastern, is the plan right now with Senate Republicans. I suspect they will be talking about this, Kaylee, among other things, because you know this is going to likely result in a supplemental budget request, an emergency funding request of some sort. But we're talking about everything from border security to tax cuts. In this meeting, the president-elect is here, of course, for the funeral of Jimmy Carter that is scheduled for tomorrow.
Yeah, it certainly is a stacked week as we keep an eye on what is happening just with natural elements, and then, of course, with domestic policy as we consider not just the future path of legislation like tax reform, but also other legislation that will come out of committees like the Financial Services Committee that Patrick McHenry used to lead when it comes to, for example, crypto legislation, something that might be a bit easier to get through with entire Republican control, and certainly the landscape for companies in that industry and others is going to change as there's a new SEC chair coming in as well. Presumably Paul Atkins will be confirmed, but the current SEC chair, the outgoing one, sat down for an exit interview with Bloomberg earlier
We've spent some time with Gary Gensler here on this program, and he spoke with David Gura today in his office, which was interesting. They're literally packing things up right now, and they covered a lot of ground. Of course, crypto was a big part of the conversation, and I'll be curious to hear the full interview on the Big Take podcast. But reflections on time spent working for the Biden administration. Let's listen.
It's a great privilege to be in a role like this. I'm the 33rd chair, and it's a big country. A lot of people could do this job. So I start with it's just such a privilege to be here, and thank you to Joe Biden for asking me to do it. But what's remarkable about this role is it oversees the $120 trillion capital market, which touches everything in our economy, because you've got to raise money for most of what we do in our economy, and people save. So I feel terrific. you ask about the attacks and things like that. That's what public policy is about. You walk into this central square and you debate these important things for 330 million Americans. I've worked over the years with Hillary Clinton on a number of campaigns, and I remember Hillary saying once, like, if you're not willing to be attacked, you can't go into the public square and debate policy. And so I think it's part of our great democracy.
I look at who is inveighing against you and who's throwing that invective, and it's the president-elect, it's the world's richest man. Does it feel different to you than what you, I'm sure, experienced after the global financial crisis when you were at the CFTC? Has the atmosphere, has the environment changed for regulators like yourself?
Well, I think it does change. What we do here at this great agency is look out for everyday Americans, people just trying to save for a better future and try to move through things that help them, like we've done, like even shortening the settlement cycle from 2 days to 1 day. Might sound geeky behind the scenes, but it means you get your money 1 day faster, for instance, or getting privacy notices. There was no federal rule that you needed to get a notice if your data was hacked, and we put in place some rules to do that. So we're looking out for everyday Americans, trying to lower the cost of the markets to trade stocks, to trade bonds. But it doesn't surprise me that then there's some in the middle of the market. They're called brokers, they're called dealers, they're called intermediaries, stock exchanges, who they like their business model. And if we're changing the rules to benefit everyday Americans, they might have thoughts on that and object. And that's part of the process.
In good mood. He's sitting in the office with David Gura. But David brings us back, Kayleigh, to a really important point that you can't avoid when it comes to Gary Gensler. This has been a very difficult tenure for him in the crypto space. You have a unique perspective on this, having covered crypto. You used to host the crypto show. You joined us here in Washington originally to cover the regulatory space, and you've had some pretty chippy interviews with Gary Gensler, and that's because you were doing your job. Did he deserve all the flack he got from the crypto space? What do they think of him now?
Oh, they're not going to look kindly upon him in hindsight. And it was interesting, in part of this interview with David Gura, he actually tried to kind of throw something back on his predecessor, Jay Clayton, that he started taking enforcement actions in crypto.
He made
it was
almost
Jay
as
Clayton
many enforcement actions.
Is the one who rejected initial proposals for Bitcoin ETF.
Is that
so
fair?
I think he's trying to make it seem like he's not the only potential bad guy that they can point out.
He was building on the work of Jay Clayton.
Well, that's I guess how he would describe it. But certainly the crypto industry specifically is probably very much looking forward to Paul Atkins coming in to take over the SEC. And it'll be interesting to see how Atkins pursues or dismantle some of the other areas in which Gary Gensler was very active in when it comes to reining in hedge fund disclosures and fees. Climate disclosure is going to be a really big question. So it's something we're going to have to continue to watch.
And with the outgoing leader of the CFTC today, you wonder if its charge might be evolving under a Trump administration. All questions we'll be seeking to answer after the 20th of January. Alongside Kayleigh Lyons, I'm Joe Matthew. Glad you could spend some time with us. We'll be back at 5 p.m. Eastern, the late edition of Balance of Power, with much more to follow.
Indeed, and Fed Minutes coming up in just 5 minutes. So they'll take you through that on Bloomberg Business Week, just ahead on Bloomberg.
minute-to-minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but is producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio and Television.
And a very good afternoon, everybody. Live on television, radio, YouTube, Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Master along with Tim Stenivek on what we're kind of calling a Fed Wednesday, but it's really an FOMC Wednesday because we get minutes in just a moment.
Yeah, they're going to be crossing the Bloomberg terminal any minute now. We're going to get the latest intel on Fed policy. This is the U.S. Central Bank releases the minutes from its latest meeting, its last meeting of 2024.
Yep, we're going to be reading the tea leaves, trying to get more clues on what we might get in terms of rate moves come 2025 this year. Because as you know, based on some of the economic data, the expectations have been changing. Let's head to D.C. Bloomberg News International Economics and Policy Correspondent Michael McKee is at the Fed. Mike, walk us through the minutes.
Well, Carol, there are some hints in the minutes of what might come in the future. The president-elect isn't mentioned by name, but the minutes show Fed officials spent a lot of time discussing the possible impacts of his potential fiscal policies. Quote, almost all participants judged that the upside risks to the inflation outlook had increased, the minutes say. They cited recent stronger than expected readings on inflation and the likely effects of potential changes in trade and immigration policy, a phrase that appears several times in the minutes. With growth also stronger than had been forecast and the labor market showing no signs of, quote, rapidly deteriorating, a substantial majority of the central bankers felt it was time to move to a more cautious policy regime. At the current juncture, the minutes say, with its policy stance still meaningfully restrictive, the committee was well positioned to take time to assess the evolving outlook outlook for economic activity and inflation. Participants indicated the committee was at or near the point at which it would be appropriate to slow the pace of policy easing. The minutes confirm some of the 19 officials incorporated what they called placeholder assumptions to one degree or another about the effect of possible Trump policies. Others did not. A few didn't say. A majority of participants noted their judgment about the meeting's policy decision had been finely balanced. More than one said there was merit in keeping the target rate unchanged. Cleveland Fed President Beth Hammack, who dissented at the decision to cut, is the only one who was identified. So the minutes do lay out the possibility of a slower for longer path forward for the Fed.
Mike, I want to come back to you in just a moment because I'm curious to see what you think stands out based on our thinkings about the Fed and what they're going to do in 2025. Having said that, I do want to do a quick check on the markets because pretty much no reaction, very little reaction, I should say, in terms of the equity trade. The S&P was down about 9 points heading into the FOMC minutes, now down about 11. The NASDAQ 100, we saw a decline of about 38 points ahead of that decision, now with a decline of about 48. More importantly, the Treasury curve. Let's go there. The 10-year was yielding about 470. That's exactly where we're seeing it. Let's go to the shorter end, which is so sensitive, of course, to Fed policy and conversations and narratives. That 2-year note was yielding about 4.28. That's exactly where we see it. So not too much reaction. Mike McKee, you parse through, you actually read all these documents, go through it word by word. What jumps out for you in terms of what we've been thinking about, less Fed moves this year? Is there anything in there that gives you some more clarity?
I'm not sure if it gives us a whole lot more clarity, but it reinforces the idea that the Fed is now going to slow down. We don't know exactly what that means for January, but the bet would be they're not going to cut rates. They'll hold at that meeting because the discussion of potential changes to trade and immigration policies comes up over and over again. It comes up in the staff forecast for what they think is going to happen. The staff slightly nudging up its inflation forecast for the coming year and citing some of this uncertainty about future policies. So one has to walk away from this saying the Fed has basically told us what they were thinking at the time of the last meeting is the same as they're thinking today. We don't know what's going to happen. Inflation pressures are still relatively strong, so we are setting the stage for not moving right away.
Inflation in the labor market certainly linked. We got a little bit of data today with the ADP jobs report. We're going to get the change in non-farm payrolls on Friday for the month of December. Analysts surveyed by Bloomberg say 165,000 to the upside. Mike, how does what you learned today change the picture or inform the picture about the labor market moving forward?
Well, there's a little bit more emphasis on the labor market in the minutes than a lot of people maybe had taken away from the last meeting and what we've heard from Fed officials since then. While they do say, as the minutes note, that there's not a sign of substantial deterioration, there are some signs that the labor market might be weakening a little bit. And the minutes say members agreed that it bears close watching. So they will pay attention to what happens. But it's inflation that gets top billing throughout the minutes, as it has in most of the members' speeches since then. And so we're really going to be watching next week to see what happens with CPI and PPI. And of course, towards the end of the month, when we get the PCE numbers, because inflation seems to be the lodestar for the Fed right now.
Hey, Mike, we did have Federal Reserve Governor Chris Waller coming out, a permanent voting member, and he said he believes inflation will continue to cool toward the central bank's 2% target, prompting some support for additional interest rate cuts this year. How important is Waller's voice?
Waller is seen as one of the intellectual centers of the Fed, and he is an important voice. He's basically said today that his view is sort of the central view among members of the Fed, that they do expect inflation to continue to cool, but he noted at a slower pace, and it still means that they can cut rates, but he didn't put any kind of time frame or amount on that. So that didn't represent really much of a change. The news in his speech today perhaps was that he was looking at the possible Trump policies and saying he didn't think at least the trade policies were going to be necessarily inflationary because with trade and you get higher tariffs, you don't necessarily get higher inflation because it's a one-time move up in the price level unless you have tariffs that are spread out over time or very large that could have an impact on inflation. And we don't know, and Waller said that today, we don't know what Donald Trump is actually going to do. So based on past history, it may not be inflationary, but you still have to watch and wait. The markets have obviously not reacted to the minutes, but pre-acted. We've seen rates go up as investors have kind of bet this is what the Fed was thinking.
Hey, Mike, a story continuing with Fed leadership and the composition of the Federal Reserve under the next administration, a story that got a read spike on the Bloomberg terminal. President-elect Donald Trump's advisors considering how they will reshape the leadership of the Federal Reserve, including elevating Fed Governor Michelle Bowman to be the bank's next vice chair for supervision. That's according to people familiar with the matter. Should we expect a very different Fed in terms of composition, in terms of policy, as a result of a Trump White House, or does the Fed remain independent, as it says in its mandate?
You're not going to see a whole lot of difference in the near term. There are no openings on the Fed until January of next year when Adriana Kugler's term runs out. So Donald Trump can't change anybody who is on the Fed unless someone else resigns in the meantime. Michelle Bowman is a candidate to become the vice chair for supervision because she's a banking representative, has served as a banking commissioner back in Kansas, has a background in it, and has been deeply involved in some of the regulatory issues that the Fed has followed. But the president could also decide to leave that post vacant for now. Once Jay Powell resigns, or his term is up, rather, as Fed chair in May of next year, that's when you might see a difference be made, depending on who President Trump would nominate to be chair.
All right, Mike, so you get back home, you're in the newsroom. Tim and I are like bothering you about like what we should be watching. I mean, obviously we've got the Friday jobs report. I'm just curious. So now that we've got through these Fed minutes, how are you thinking about what you mentioned the inflation report next week, also later this month. A lot of data before we get to the first Fed meeting of this year, and certainly before we get to the second meeting in March. So I don't know, how are you thinking about where the Fed is right now?
Well, I think the Fed is kind of on hold at the moment, waiting to see, like the rest of us, what's going to happen. Obviously, we're going to pay attention to the inflation numbers next week. And then immediately, Donald Trump says on day one, maybe day two, he's going to start announcing all of these policies that he's talked about. The market will have to digest those and figure out what it means for the economy. But they're already at this point sort of pricing in the idea that the Fed is on hold for now and may not cut a whole lot in 2025. Because these policies could be inflationary.
All right, great stuff as always. Safe travels, kiddo. Bloomberg News international economics and policy correspondent Michael McKee outside the Fed with the breakdown on the Fed minutes. Now let's get to another read on the U.S. economy. And Tim, this one's from the C-suite.
Delta Airlines reports earnings this week on Friday. Ahead of that, Delta CEO Ed Bastian is at CES out there in Las Vegas after giving a first ever keynote at the Las Vegas Sphere, talking about, Carol, how AI will upgrade the airline experience and more.
Right now, he's sitting down with our own Ed Ludlow, co-host of Bloomberg Technology. He is out there at CES in Vegas. Ed, take it away.
Hey guys, well, two Eds are better than one, as they say. And when it comes to Ed Bastian and his keynote at the Sphere, several CEOs came up to me and said that he set the bar so impossibly high on this presentation inside of that technology-forward venue. But Delta is thinking about real technology for customers in how they get to and from and inside the airplane. Ed, we have a lot to discuss.
Absolutely.
I want to talk about what you guys call multimodal transport. I'm going to set a baseline and say skeptical because I've been talking to Joby, eVTOL company, for a flying taxi company for a long time. I'm yet to see it.
Yep.
But on the Uber deal, very interesting. So basically a partnership where you got a Delta flight, you have an incentive to take an Uber to the airport. Sounds like a very good deal for Uber.
Yeah.
What about you?
Oh, it's a great deal for us too. First of all, thank you for having me. Dara and I have been talking about this for a while. 15% of all Uber rides are either to or from airports. So the financial incentive, as you say, for Uber to work exclusively with a large airline like Delta is important. But also as we continue to improve both of our premium experiences. So a lot of the focus is going to be going on the upscale opportunities and lift where Delta excels at. And I think Uber wants to work with us to learn about that. And then in turn, members of the Delta loyalty program and the Uber loyalty program drive incredible signups. And we've seen that with other great brands like Starbucks, for example. We blew the lid off the loyalty programs of both companies when we announced that a couple of years back. I think Uber, you're going to see a similar type of trend where people are going to pile in and say, I want to be part of the ecosystem you're building.
For those less familiar, Joby is a company that makes flying taxis, eVTOL, but they also want to operate a service. Loads of people will be watching and listening in New York City and also in Los Angeles, and our thoughts go to those in Los Angeles impacted by what's happening with the fires. The concept is that rather than take a very long car journey to the airport in high-density traffic, you take a hop on an eVTOL, you get off, and you get on, in your case, a Delta flight. It seems so far away still, Ed.
Well, we're talking about the next century of flight. So our theme is Delta's turning 100 years old this year. And we spent a little bit of time reminiscing about what the first 100 years of flight was. And when you think about where we were this time 100 years ago, where just the flight was just launching, to where we could end up 100 years from now, there's a tremendous amount of opportunity. So yes, in the immediate term, it's going to take some time. It could be 3 years, 5 years, 7 years before these things start to gain some scale. But we're already in the game with Joby. We're an investor, as is Uber, in the product. We expect in the next couple of years you'll start to see it in the skies, both in New York and LA. FAA and the regulatory agencies have been very supportive.
Yes, they have.
Of building the framework for the certification of the product. And we know there's great value proposition. Every time you're stuck, whether it's going out on a 1.5-hour car ride between Manhattan and JFK, and sometimes even to LaGuardia, or the same thing in LA. Delta is the #1 airline in both New York as well as in LA. We've got the infrastructure in place to be able to bring that in. Again, it's going to be a premium experience, which we specialize in. So I'm excited about where it's going. It's going to take longer than people would want it to take, but it's coming.
That's often the case at CES.
That's coming.
Those kinds of things.
But this is coming.
You have conviction.
This is not a question of if, it's just a question of how long it's going to take through the learning journey.
And that's why I'll check in with you every year until it happens.
Yeah, absolutely.
We have Delta's AI story, or an early version of it, Delta Concierge. You know, I'm someone that flies a lot. I rely heavily on an interaction with an app. Yeah. Within the app is a chatbot. It's automated, driven by AI. But often my frustration is I don't get the answer I want. I need a human. Is Delta Concierge going to work? And actually, does it drive new customers to Delta? How do they hear about it?
Well, first of all, we are operating at scale today. We have 200 million customers on an annual basis that we serve. We know so much about our customers. We have so much insight from them that we're working with companies like Qualtrics on the experience management front, or opportunities to continue to take and create greater ability to serve up to customers how they can get better control over the travel journey. You know, so much of the apps today are helpful, but when you really need them, as you say, it's sometimes hard to get through a lot of the barriers in terms of true self-service. So this is going to take self-service to a new level, where through voice, through experience management, through personalized journey, and our ability to build our technology personalized connection to that customer. And it's not just going to be about how do we get to a different flight if I've had a cancellation, or how do I move my seat, or how do I look at my schedule. It's going to be, you know, what do you want to do when you're there, and people that kind of come into our ecosystem. Potentially, do you want to take a Joby versus having to take an Uber? Do you want to have an opportunity to learn about what we are doing along the journey? All of that's going to be in a concierge model. And we just think about historically who concierges have been. They've been all-encompassing, there to serve, and that's what we can do with Gen AI.
Are you looking at AI for pricing, real-time pricing?
We are.
When does that happen?
We're already experimenting with it.
The #1 question I get for you every time, Starlink. And they look at your competitors and their pivots. Starlink, they want to see it in Delta.
Yeah. Well, we were with Starlink well before any of the other airlines.
I mean deployment and rollout.
In terms of exploring the opportunity, we worked with SpaceX for quite a few years. We weren't able to we were ready to go before they were. And so that's why we moved with Viasat. Viasat is already up and running. And all of the announcements you've seen around Starlink largely, and certainly some airlines, some of the small airlines like Hawaiian may be up and running now, but everybody else is still just starting on the journey. We're done with the journey. We're going to be finishing out the international rollout this year. And There'll be opportunities. If there's better technology to come, we can learn then. But it wasn't ready for us. We were ahead of the game, and we're going to stay ahead of the game.
Ed, final question. You put a lot of work and money into cloud migration, AWS, but the big story was CrowdStrike. I want to ask simply what the learning and lesson was there and the net result of what happened there.
Well, CrowdStrike is a situation where you pay top dollar to have what you believe to be the best-in-class defender of your surface, technology surface, and unfortunately they failed us. And so that will be litigated in the courts, and there will be some resolution achieved sometime. It may take a year or two. We'll see what happens. What we learned is that you can never allow the technology provider to have access into your internal core without your ability to ensure either they got the proper controls in place or you have the controls over them. And unfortunately, that was the case. And by the way, it wasn't just a case of Delta. It was a case with hundreds of thousands of companies around the world.
Ed Bastian, Delta CEO, I really appreciate your time here at CES 2025. Tim, Carol, back to you guys in New York City.
All right, so appreciated. Our own Ed Ludlow there at CES in Vegas. Of course, he is the co-host of Bloomberg Technology with the CEO of Delta Airlines, Ed Bastian. Shares of Delta, by the way, just up about 0.4% here, but some interesting things in terms of what they are doing, specifically with Uber replacing Lyft as their rideshare partner, but also AI and the use of artificial intelligence. Ed Bastian talking about that lot from the sphere, I should say, in Vegas. So interesting.
Yeah, and I think as our own Ed Ludlow pointed out, a big opportunity for AI is customer service. And when you get to the point where you don't have to talk to a human being anymore to actually fix your problem, you can do that through a smart chatbot, some sort of assistant. We'll see when that happens.
I feel like we're doing more and more, though.
Yeah, we're still here.
With
you
the
and
assistants.
I are still here.
We are still here, and we are going to get to a really serious situation out on the West Coast. Southern California residents there fleeing those wildfires that are expected to continue for a few more days. An update when we come back right here on Business Week.
The names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg. February 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
If somebody wants to use your product, Zepbound, how much does it cost a month?
You can buy Zepbound direct from Lilly for $3.99 for the starter dose.
$3.99?
No.
No.
This is a valuable innovation, David.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. It has been a choppy session, but right now we have got the Dow, the S&P, NASDAQ. They're all advancing. S&P up 9, little changed, up by about 0.1%. Dow Jones Industrial Average also higher, up 61 now. That is a gain of 0.1%. The NASDAQ Composite Index up 8, up less than 0.1%. The 10-year at 4.68%, with a 2-year at 4.27%. Spot gold up $11 the ounce, up 0.4%. West Texas Intermediate crude down 1.1%, 73.46 a barrel. And Bitcoin now down 2%, 94,520 on Bitcoin. Shares in some of Europe's biggest wind power companies are lower after President-elect Donald Trump said he aimed to have no new windmills in the U.S. after taking office. Among some of those wind companies, Vestas in Copenhagen trading lower now by 7.4%, and Ørsted shares down by 5.8%. Recapping, the S&P 500 index up 7, a gain of 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here in our New York studio here at Bloomberg headquarters. We are really focused, though, a lot of what is going on the West Coast. And right now, President Biden is at a Santa Monica fire station with California Governor Gavin Newsom being briefed on what is the most destructive windstorm to strike the LA area in 14 years. And that is really fanning wildfires and has set thousands of residents fleeing for their lives, with dangerous gusts expected to persist for at least another 2 days. Tim, we know already 2 are dead as a result of these fires.
With the latest, we turn to Bloomberg News energy and climate reporter David Baker, who has been following the story for us. He joins us from Northern California in the Bloomberg San Francisco Bureau. You heard it from Carol just now. 2 dead, a high number of significant injuries from the fires. Firefighters continue to struggle to contain blazes in Pacific Palisades and Pasadena as well. What can you tell us about the conditions over the next couple of days and the current conditions, David, that are creating an instance such as this that is just so perfect for these fires to rage on?
These conditions are indeed very bad, very dangerous. The winds are powerful. The just regular winds are powerful, but the gusts are even stronger, and they're going to continue at least through Thursday. We may have a respite over the weekend, but there's the possibility of another windstorm settling in on Monday or Tuesday of next week, with no rain in between here and there. So essentially for the firefighters, what they are trying to do is steer the flames away from homes and away from infrastructure as best they can. But with conditions like this, there's only so much they're going to be able to do.
Tell us about the ground. So much when we are often talking about wildfires, be it on the West Coast or nearby vicinity. You know, David, we're also talking about what makes it more difficult is that the ground has been so dry. Was that the case in these fires?
Yeah, the problem here is that the biggest problem here is that Southern California has had virtually no rain since spring. They haven't had even a ½ inch of rain recorded in downtown LA since April. And so as a result, all of the vegetation in the hills surrounding the city is bone dry, ready to burn. And when you have an event like this, these winds blow from basically the deserts out to the coast. They dry things out even further, and they're a little bit warm as well. So the conditions become perfect for spreading fires. So for the firefighters, they're trying to douse things along the edges of the blazes, but you've got to understand that all these bushes are just bone dry and ready to go.
David, I'm wondering about structural damage at this point. It's one thing for a fire such as this to rage in an area where people do not live, as often does happen during fire season. We know that. But what do we know about how much damage has been done in the greater Los Angeles area and what firefighters have or have not been able to do to protect structures?
We don't know too precise details yet about how many things have burned. We do know that the number of homes that are in danger are well into the thousands. And we even had, for a little while this morning, a fire erupt kind of close to the center of the San Fernando Valley, which is a big, heavily populated area. There was a small fire that got going in a grassy area there, and the firefighters were able to get on top of it. But we're talking about many thousands of homes, quite probably, that are in harm's way. And we're also talking about thousands of people who have been evacuated. The last count that my team was able to rough together was something north of 100,000 people, probably more than 125,000. And they're all on the move. It's like a small American city, all being forced to flee for their lives.
David, one of the other aspects of this in a big way is what the utilities are up to or what they are doing to maybe help prevent even further fires. I'm looking at some of the players that serve Southern California. Edison International is down about 13% as we speak. Sempra Energy, which owns San Diego Gas and Electric, has been down as much as 3.5%, still down about 3%. They, from what we understand, I'm looking at our live blog, have started to shut power off in some communities. What are we hearing about utilities and their efforts to maybe help rein this in or at least control it from further spread?
So the utilities could see this windstorm coming. They have their own meteorologists, and they focus very intently on this kind of thing this time of year. And they put in place plans to shut off power proactively to areas that could be very prone to burning. We have a long history in California of deadly wildfires that have been sparked by power lines either falling down in high winds or getting tangled with tree limbs in high winds. And so the utilities have become very cautious about this and will shut down power when one of these storms approaches. They started to do that yesterday, and in fact, they're still doing it right now. There are fears among investors that a couple of these fires, maybe all these fires, are in some way tied to power lines, but that has not at all been proven yet, and I haven't heard anybody in authority even suggest it yet.
David, as I'm a Californian and I grew up with fires. It was just a fact of life, and the idea that you'd find ash raining down at certain points throughout the year. It was kind of a normal thing. Indeed, they've become more frequent and more devastating since I have lived there. But I always wonder about building and rebuilding in these areas that are at such high risk. We've seen insurance companies push back, drop coverage in some of these areas. But is this going to be the final straw in some of these areas, or do you think people will rebuild?
It's easy to say we shouldn't build in these places, right? It's like telling people on the East Coast, you shouldn't build right down by the beach because sooner or later a storm's going to come and smash that house to pieces. It's very simple to say that. It's very hard to do in practice. People always want to rebuild their homes. They always want to go back home. They have a powerful instinct to do that. And a lot of the folks being burned out of the Pacific Palisades right now, these are not poor people. Many of them will try to rebuild. The insurance issue, however, we have not figured out a way to resolve that yet. And I don't know how these homes will get insured if they do get rebuilt.
One thing I wanted to ask you, and this was certainly some of the footage we saw earlier today of as residents in the area were fleeing their homes, some of them were abandoning their cars, and it made it very tough for emergency vehicles to get to where they needed to be to fight this fire. Any update on what we're hearing about that? My understanding is that various equipment was coming through and just clearing the roads of these cars.
Yes. There were essentially bulldozers going through some places, pushing cars to the side and shoving them together. I saw some footage from one of the local TV stations last night where you had some lovely vehicles that were just basically crushed together because the firefighters had to get through there. I understand why people felt the need to flee the way they did, but this is what firefighters have had to do in response.
Yeah. No doubt about it. All right, listen, we really appreciate the update. David Baker, Bloomberg News energy and climate reporter, joining us from our bureau in San Francisco. We are going to stay out west, though, to a lighter story, no doubt about that. We're going to head back to CES in Las Vegas and to some of those companies in the tech and media worlds changing how we consume and how we access content. And among them, Tim, is QuickPlay, which provides cloud solutions and platforms and services for OTT content delivery and more.
Here to tell us what they're up to is the CEO of QuickPlay, Paul Pastor, who has held executive positions at media organizations including Disney Plus and Hulu. Paul joins us live at CES in Las Vegas. Paul, great to have you with us. We're going to talk about what you do with regard to the OTT space, the over-the-top space over at QuickPlay in just a minute. But before that, would love your news on the consolidation news that we saw. Would love your views on the consolidation news that we saw a little earlier this week when it comes to the tie-up of Hulu Live and of Fubo TV. Curious about what your reaction to that as a former executive at Disney, somebody who worked at Hulu as well. What do you see as the strategy here?
Sure. Well, first, thank you so much for having me. And second, I know your last story was covering the fires in Los Angeles. As a prior Los Angelino and somebody in the media industry, my heart goes out to everybody and hope everybody's safe. Yeah. As it relates to the Fubo and Disney announcement, obviously this week, listen, the one thing we need to know and understand is this solved a very big problem for media companies. The Fubo lawsuit obviously was trying to ensure that media companies weren't able to bundle. And that would have devastating effects on these bigger media companies that still make a lot of money from cable. So for $220 million plus the combination of this venture with both Hulu Plus and Fubo, they've really solved a lot of problems both in the lawsuit and in driving scale in the industry, which will hopefully let them kind of build out new consumer propositions.
Paul, do you also think that decision by Disney to merge with Fubo and also launch its ESPN streaming product is kind of enough to, I guess you would say, future-proof its revenue from accelerated cord cutting, which we know continues?
Well, listen, there's still a long-term trend that, where we're seeing a decline in the total reach of cable. But this most certainly lets them launch the new venue opportunity where there is a strong value proposition behind sports and finding a level of aggregation that will really solve a consumer challenge of where do I find my sports and how do I watch them. So this is a win for consumers in that this product will begin to be launched, and hopefully we'll also find a path for these media companies to continue to address some of the reach concerns they have over the loss of cable subscriptions.
Yeah, so let's go there and give us an understanding of how you think they navigate this tricky terrain here. I mean, the cord cutting that we've seen over the last 15 years or so has just absolutely devastated the traditional pay TV providers and even those cable companies that have been carrying that content. These companies, apart from Netflix, are really trying to figure out what to do. What happens to the smaller content players now, the Warner Brothers Discoveries, the Paramounts, and the like, in an environment such as this?
Yeah, listen, I think every CEO and every person in a media company today is trying to figure out how do they future-proof their business. And what we can see and what we can tell, right, from all Gen Z consumption is that Gen Z consumers are going to YouTube and going to TikTok. They're watching a ton of short-form content. They spend 3 hours a day on YouTube and TikTok compared to 1 hour a day with broadcast and streamers. And this is a growing trend among all demographics. So personally, where I believe these media companies need to be focused is how do I begin to own the whole conversation around my IP and my content and think about developing a short form content and product strategy that really addresses these Gen Z consumers, the way that they like to interact with content, the way they consume it in these moments versus lean back experiences, the way they like to engage. I think that's the real opportunity for media companies today if they really want to think about their future and not ceding it to these other platforms.
So should Netflix be concerned because they don't necessarily have that short form content that TikTok has, that YouTube Shorts, that Instagram Reels has?
I certainly believe so. And if you would follow my LinkedIn post this last couple of weeks, you'll actually know I was challenging Netflix largely because of Beyonce Bowl. I'm a huge Beyonce fan, Cowboy Carter fan. I was super excited for having Netflix having the Christmas NFL. You too? See, you love it, right? Well, you go and watch the game, right? They made a huge push for people to watch this NFL game on Christmas Day. I personally, all I really cared about was watching the halftime show with Beyonce. 10 minutes after the broadcast, it was nowhere to be found. No one had thought about the fact that they needed to actually clip it immediately and post it and make it available for their consumers. Instead, I watched it on YouTube, right?
Wow.
So it created a huge opportunity for YouTube to monetize a huge event when Netflix didn't own the conversation. And if they had other tools and a product focused on shorts, they could have really owned the entire conversation, right? So it's not just about Beyonce, it's the behind the scenes, and most importantly, all the social engagement that happens around it. So I think that's a real opportunity for Netflix and all the streamers out there to be thinking about owning the conversation and making sure they're not just focused on long form, they need to have a short form content experience that's social-like.
All right, one last question about the broader industry, and then we want to talk about your company. We mentioned about Disney and Fubo doing their deal. I just want to get your thoughts, because you understand this space, you worked at Disney. What skill set do you think that the Disney board is likely to prioritize in searching for its next leader?
Oh my goodness! Well, if I had that level of insight,
well, what do you
10
think?
Years, I could have
but what do you
placed a couple of different bets.
What do you think? It's like this iconic media company. It's got great properties, and yet it's trying to figure out, what its world is for the rest of the 21st century and maybe beyond.
Most certainly. Well, I think at the very end of the day, listen, I think you need somebody who has a vision of what 2030 looks like and 2035 looks like from a consumer standpoint, and how technology is going to fundamentally change both the creative side of the industry and the distribution side of the industry. It is incredible when we look at the tools that are becoming available to everyday users. When you look at the AI technology that can take text and turn it into a video format, and we're in version 1 and version 2 of that, imagine what that looks like in 5 years. That blending and that differentiation between premium content and UGC-driven content is eroding very rapidly, and so you need to figure out ways to harness it, and you need a CEO that embraces that type of vision.
All right, so let's talk about your world. Tell us about, your company. We did a little introduction. It sounds like you guys are at this great cross-section when it comes to content, and not just traditional providers, but, it's health, it's security, it's a lot of stuff going on. Tell us about your world. What is it that moves the financial needle? Where's the growth?
Certainly. So listen, this has been we started the company 5 years ago, back in the early days of COVID. But we recognized that this was a moment where media companies were beginning to focus on consumers and streamers, right? And they built out their version 1 of their platform. We're a technology company focused on tier 1 media who's looking to build out streaming solutions that also can advance the overall consumer experience. So what you've seen is we support the likes of Yankee Sports Network, Madison Square Garden, and their joint venture. We support AHA Media, Allen Media Group, in delivering that overall consumer experience. What we're advancing in our conversation here at CES is how do we begin to really think about leveraging first AI tools to help companies develop shorts content, to leverage AI tools that can take live and VOD content, convert it into shorts, and then verticalize that to publish that into a syndicated or owned app experience. And second, to help them advance that social-like experience we were just talking about. That how do you build a destination where you can have an infinite scroll, interact with the content with likes, comments, emojis, to be able to share that into other platforms so the basis of the conversation starts on its own platform. Those are the types of experiences we're hoping to advance within the media industry and really help shape the opportunity for these streamers around new ad units, around driving promotion around their long-form engagement, driving promotion around their subscriptions, and fundamentally creating this virtual cycle of consumers leveraging or using their app on a daily basis, which really becomes the foundation for gaining mindshare and time spent with consumers.
So it sounds like you're making a bet that these companies that are your clients can actually build the audience within apps and then get consumers and get viewers and audience to engage there, and not just on the TikToks, the Instagrams, and the YouTubes. Is that correct? Because that seems like a really tall task.
That's right. Well, if you think about the IP that they have, so I'm saying, why don't you start with a destination that's built around your IP, right? And own the conversation. This is a very traditional way of looking at media in some respects. We've always had windowing strategies where content would start on one platform, then migrate to another, then migrate to another. Today, you could take content from live, premieres, from VOD, where you can say, this is exclusive to our platform. We're going to hold it for a window. Maybe it's 15 minutes. Start the conversation on my platform. Then I'll allow for it to be shared onto other platforms. But its foundation starts with yours. And if you can find a way to get the consumer to open up your app on a more frequent basis, right, and reach a new audience, like a Gen Z audience, then you can win the attention game.
Paul, how do you support it financially? Because that sounds like a lot of people competing for eyeballs and hits and so on and so forth, but also the traditional advertising model also competing for all of that. So how do you support it?
Certainly. So one is, I should say, the Quick Play just released research working with Gen Z Insights that showcased that Gen Z consumers said they would go and visit their streamer more frequently, 79% they would visit it more frequently if they offered a compelling shorts offering. And what they told us is what they're looking to see is reality programming, original content, highlights and clips from their favorite shows and their sports events. So there's a really clear, defined opportunity for the media companies themselves. Then in terms of monetization, right, now you're thinking about adding ad units into your short form experience and then promoting to that long form content experience where you can similarly monetize through ads. If you look at the subscription ads over the last quarter, coming off of the latest antenna research, the majority of subscription ads are coming through ad-defined subscription plans. So this tells you there's a huge opportunity sitting in the monetization space relative to ads.
So tiered, right? Like, so you're going to be able to pay for something so you don't maybe get those ads or something, right?
Well, everybody always wants the excuse of the ability to opt out. I would say that I look at shorts, though, as a way to think about it as a front porch. You make that available to all consumers, and then behind that experience in your long-form traditional streaming experience, you offer the opportunity to not have no ads.
Paul, where does AI come into this? Does it come into this in the sense of it makes it very easy to actually clip and share something, or does it go beyond that? And is there a way for AI to identify that moment that will go viral? Because editorially, people do that. People have to understand what really resonates with the audience.
This is a great question. So if we break apart the shorts opportunity into two component parts, I'll tell you about the application of AI. The first part is how do you take a piece of long form content or a live experience and say, what are the viral moments, right? And you can actually marry that with what's going on with Google Trends to actually take the piece of asset, leverage AI, append the metadata to it, and then say, actually, this matches a trending moment on Google. Let's publish in a short form vertical format into an owned or syndicated experience. So that's all AI driven. The second piece within that consumer experience that you may have as a destination sitting within your app, we're leveraging personalization, right? That's all AI driven, right? Which is to understand what are your consumer likes and dislikes, what do you engage with, how much time do you spend with it, and leveraging that to make it a more compelling experience for you every single time you log in. And then, of course, then applied to that is all the ad opportunity that sits within that, right? Because now we can also do contextual advertising because we know what the content is, along with the personalization. So you're getting a double hit on AI within the ad delivery component. So really, AI can be applied across the entire spectrum.
Cool stuff. Come back soon. Love to get an update as things move along through 2025. Paul Pastor, who's CEO of Quick Play, joining us there from CES in Las Vegas. Right now, let's get an update on the trade on this Wednesday. For that, we turn things over once again to Charlie Feller.
Hi, thank you very much, Carol. Choppy Wednesday right now. We've got the Dow Jones Industrial Average up barely, up by 11 points right now. Little change. Key takeaway, as is the case for the S&P 500 index. The S&P right now lower by a point, has been swinging between gains and losses. The Dow, the Dow higher, as I mentioned. NASDAQ in the red, down 29 now, drop there of 0.1%. 10-year 4.69% with a 2-year currently yielding 4.28%. Gold up $9 the ounce, up by about 0.3%. And West Texas Intermediate crude oil down 1.2%, 73.32 a barrel. Bitcoin right now down almost 2.5%, 94,130 on Bitcoin. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, REITs, real estate investment trusts as a whole, have underperformed the U.S. equity market by a lot over the past year. Carol, we know some of the continued struggles in the office market. We know the narrative around the shortage of U.S. housing. And then, of course, we all know what's happening with rates right now. That's not really helping that much.
No, exactly. For a look at the space, what's top of mind with us right now, we welcome John Worth. He's Executive VP of Research and Investor Outreach at NAREIT. It's the National Association of REITs, the industry and lobbying group of the global REIT industry and publicly traded real estate companies. John is here in studio. Welcome, welcome. How are you?
Thanks for having me. I'm great.
Well, it's great to have you here. I am curious, we are curious, what the discussion has been among your members since the U.S. presidential election and win by Donald Trump.
You know, I think one of the great things about listed real estate and REITs is that they've really enjoyed bipartisan support for over 60 years. REITs are really, part of the part of how the vast majority of Americans get access to commercial real estate. Today, we've got about 170 million Americans who have REITs in their portfolio. Most of those in their 401ks. So, I don't think there's any concerns about political risks for REITs in terms of a new administration. What we certainly have,
even a higher rate environment.
Well, I was going to say what we've certainly experienced
as a result of some of the
policies.
What
we certainly experienced is a bit of a higher rate environment here. Really, starting in September, and that really took hold in December and had a really meaningful impact on REIT returns in September. REITs were down 8% in September. They still ended the year up nearly 5%, and we had some good performance across different sectors, including data centers, office, healthcare, all delivering more than 20% in 2024. But yeah, rates have definitely been a concern, and it's something that as we look at our forecast, our hope is that we're going to get to a place where in 2025, where REITs are not, we're not seeing knee-jerk reactions to interest rates. If you look back historically over the last 20 years, what you see is over 12-month periods, REITs are actually positive in periods when the 10-year Treasury is rising in 75% of those 12-month periods. But during periods of monetary policy change that we're in right now, we see this negative correlation.
It's tricky, yeah.
I think in 2025, we may see us move back to where REITs are either neutral to positive to rates.
Well, what happens in your world if we don't get as many rate cuts as people initially thought a couple months ago? What happens if some of the policies from the next administration are indeed inflationary and we don't see inflation come down and we don't see response that would happen from the Federal Reserve if they were, done taming inflation?
Yeah, well, I think for commercial real estate, that's more problematic. REITs themselves are actually in a very good place to weather an extended period of higher interest rates. Right now, REITs have low leverage historically. They're at about 30% leverage. They have
as a whole?
As a whole, okay. The industry as a whole. When we think about the term structure of that debt, they've got about a 6.5-year weighted average term to maturity, and just about a cost of debt that's about 4%. So, and capital markets have been really open for REITs. REITs have been able to go out and issue unsecured debt in corporate debt markets. When the time is right, they've been able to go out and issue equity. So I think a higher rate environment has some comparative advantages for REITs, as other potential buyers are not able to get deals to pencil out. REITs may find some really nice accretive buying opportunities.
Office REITs already down about 5%. I'm just looking at one metric. That's the one that I think the elephant in the room that everybody wants to know about. What about for office REITs? And just got about a minute left here.
Yeah, I mean, the office environment, I think, is tough. But what we've seen is that
still tough.
Still tough. But investors are increasingly starting to differentiate between high-quality properties and low-quality properties. You see that in the New York market.
Is it because we're getting some transparency of some properties that people are either walking away, whether it's B or C, quality properties, and so when they mark down these properties, we get, again, some more transparency in the marketplace.
We're seeing some transparency in sale prices, but we're also starting to see investors understanding, and I think REITs are on the right side of this quality divide, that higher quality properties, and you certainly see this in New York, higher quality properties are doing quite well.
Absolutely.
In fact, we've got some REITs who are breaking ground on new offices because there's so much demand for that higher quality. And don't forget, office REITs were up about 20% last year. So the news is not all dire in the world of office.
Nope. It's location, 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 and tier versus tier versus tier.
And maybe those JP Morgan employees, Carol, are going to be going back to work 5 days a week. We know Amazon employees are now.
Brand spanking new property. It's pretty fancy. Exactly. All right, John Worth, thank you so much, and we appreciate your flexibility as we were dealing with a lot of news today. He's Executive VP of Research and Investor Outreach at NAREIT, joining us right here in studio. Still to come, everyone, might there be an easing in the caps again when it comes to state and local taxes? We get an update from Capitol Hill. Yep.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, this is among our most read stories on the Bloomberg on this Wednesday. A cohort of about 20 Republican House members from New York, New Jersey, and California were invited to meet with President-elect Donald Trump at his Mar-a-Lago estate Saturday ahead of a looming fight over an extension of his 2017 tax cuts. Members of his own party, as we mentioned, including New York Congressman Mike Lawler, already out saying a $10,000 cut is insufficient. Or cap, I should say.
The $10,000 cap is woefully insufficient. It's had a negative impact on states like New York. Taxpayers should not be penalized by living in a high-tax state. Ultimately, our Senate and House Republican majorities are going to have to work together. Nobody's going to get everything they want out of this. There's going to have to be a good faith negotiation if we have any chance of passing a reconciliation bill.
All right, that's Republican New York Congressman Mike Lawler earlier today with what our own insiders are saying. We head to the nation's capital and to someone who is privy to the conversations among U.S. congressional members. He is Bloomberg News congressional reporter Billy House. He's up at the Capitol. All right, Billy, I guess I saw this as someone who lives in the New York metro area. I'd love to see that cap go back to kind of where it was or move it up a little bit. Having said that, I'm just curious, is this just jockeying going on? Is this just chat and conversations, or is this some real negotiating that maybe is going to start?
Well, this is some real negotiating and important negotiating, because you might want to remember that what Mr. Lawler said right there is this is part of the reconciliation discussions as he and other lawmakers will go to visit Trump on this very topic down in Florida this weekend. Republicans have no wiggle room. They must basically, as we saw with the speaker election, get all on board on a huge reconciliation package on all kinds of areas for it to pass. And this is going to be one big wrinkle, because the left and right coasts and where you live are pushing for this salt cap dressing. But the middle of America is not so gung-ho that Westchester County residents or LA County residents want to see this disappear.
What are we talking about in terms of numbers here? What are we talking about in terms of numbers here, Billy? Because $10,000, as we just heard from the congressman, it needs to be way bigger than that. I mean, what are we talking here?
We're talking about a wide spectrum of ideas.
Okay.
New York Governor Hochul today said it should be eliminated completely. There should be no cap. That's her view, and some view of some Republicans. There have been other attempts, including by Mr. Lawler, Congressman Lawler himself, to somehow raise the cap for single or married taxpayers, and that didn't even make it to a vote last year. Just that slice of it, and he's reintroduced that bill today.
I don't know. You know, Billy, you've been doing this. You understand how to read the tea leaves up there, up on the Capitol. And I am just curious, for them to be, invited to Mar-a-Lago, it does feel like things happen at Mar-a-Lago a lot, and probably will through a second Trump White House. That might be sometimes in D.C., but more likely in Florida. Having said that, does it seem more likely that there is going to be some kind of significant change? Because it's kind of interesting. This is such an important issue, as you said, to the left and to the east and west coasts. And so I just do wonder, again, what the visual is on this that says, okay, something's really moving here.
You've asked precisely the right question. Again, it's a little bit like punching Jell-O. They must move. They expect this to be part of that massive package of government spending that with an eye toward Easter passage. But because of their very small, slight House Republican majority, they can lose only 1 or 2 votes, if that much. So then comes the deal making, and if you got half the country opposed to changing this cap, and Mr. Lawler and others in California and New Jersey and New York wanting to, somebody's going to have to give on something. So that's where the horse trading comes in with other matters. And so right now it's hard to say what's going to be traded, what's going to be dealt with, who's going to give in, who's going to give out, who's going to eat what. And that's where we are right now, very early on in the process.
I can't believe I'm even asking you a question about midterms at this point.
What?
The new class of Congress was just sworn in.
Clock starts
last week, but that's what happens every 2 years here. To what extent, if Republicans are not able to get a higher cap, does this potentially threaten their narrow majority come 2026?
I think a lot of things threaten that, but this is, I think you're correct, is one of them. A lot of people thought this was going to hurt them last year, but the 2017 Trump tax cuts, in which this was a part of this cap, expires at the end of 2025. So they've got to do something this year on it, or just it will evaporate. And again, keep in mind, this helps pay for government too. So you got to make up the lost revenue somehow. And so there's a lot of wrinkles. And of course, Musk's new partner, best buddy Musk is already threatening to send money to primary people who don't go along with the game here. So it's really up to Trump and how he presents this and what he embraces, I think.
Well, it's keeping us all really super busy and guessing. Love it, love it. Billy, thank you so much. Glad we could check in with you. Billy House, he's congressional reporter at Bloomberg News, joining us from the nation's capital. Be sure to check him on Twitter at House in Session, or just read his stuff on the Bloomberg terminal at Bloomberg.com. All right, for those who are watching on television, the close is coming your way in just a moment. Tim and I, though, do not go anywhere. Lots to come right here on Bloomberg Business Week.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
Hips don't lie, neither does the data. Inflation risk tilting back to the upside. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. The price action muted, but underneath, really interesting stuff happening.
Absolutely, interesting day today.
All right, let's get to some of that. So the S&P just pretty much flat on the day. The Nasdaq is down 0.1%, so not that exciting considering the moves we've seen in the last couple days. But that 30-year auction had the highest yield in over a decade that we got at 1 p.m. There was the takedown, but Treasury had to pay up for that. The yield only up by 1 basis point, but we are kissing 5% now at the end of the day, Romaine.
Yeah, the interplay between yields and stocks are really showing its strength here to start the year. 2 days of gains for stocks giving way to what could be 2 days of losses. Investors really trying to sort out the outlook for interest rates. The economic data so far has not been making things easier. That's, of course, ahead of a big jobs report less than 48 hours away and the release of the minutes from the Fed's mid-December meeting just about an hour ago. It was a behind-the-scenes readout that showed almost all FOMC participants voicing concern about an increase in upside inflation risk and saying the Fed should slow its roll just a bit on cutting rates again. Now, Morgan Stanley strategist Mike Wilson saying that the drop in stock and bond prices could actually worsen as a result. Basically, traders right now pinned up against the wall over the prospect of higher for longer inflation and higher for longer interest rates. The thinly traded 20-year Treasury offering maybe a taste of what's to come. It did trade above 5% earlier in the session for the first time since 2023. The 30-year long bond also flirted with the 5% reading as well. Friday's payroll report, that would add to the pain should that data come in stronger than expected.
Clearly, the bond market is on edge. This is not just about inflation. It's also about supply. So, again, I think we have to be prepared for an environment where bond yields are not necessarily quickly reverting to a level that would make the stock market comfortable.
And complicating things even further are all the conflicting reports about Donald Trump accelerating his tariff policies, an acceleration that could reignite inflation and reignite the financial market volatility that was a hallmark of his previous term. European auto and luxury stocks like BMW, LVMH selling off today, as did Chinese car makers like NIO, as did U.S. chip stocks like Cirrus, as did multinational manufacturing behemoths like Caterpillar.
Yep, AMD, onsemi, the whole kit and caboodle here. So this is what makes it so interesting. This is a chart that shows how many rate cuts are actually priced into the market for this year. And we're right at about 53 basis points. So let's just estimate like 2 cuts then for this year. But we haven't really changed that much within the last month, right? So that doesn't necessarily go a long way to explain that long end move, which means, is it a tariff-related kind of situation? Is it a supply-related situation? And my question remains, if it gets divorced from those Fed cuts, how do we think about that? So the Fed keeps cutting and the rate keeps going higher. What does that mean then for the underlying economy?
That is the big question here as we kick you off to the close here on this Wednesday afternoon. Lydia Bassour joining us right now. She's a senior economist over at EY. And Lydia, I do want to get your reaction to the minutes from the most recent Fed meeting. Minutes that seem to suggest that pretty much everyone on that committee right now is looking at the potential for higher inflation and, more importantly, the potential to maybe stand pat on rates. Was that your take?
Yeah, so no big surprise from the minutes. We got a confirmation that that the Fed is leaning towards a more careful approach when it comes to the rate cutting cycle. So we're unlikely to see that, a rate cut in January. And we also have that confirmation that participants are seeing, upside risk to the inflation outlook as having increased. And that's something that we had seen already in the summary of economic projection. We have a Fed essentially that's likely to be moving more carefully in 2025, especially as we start getting more visibility on the policy outlook and some of the policies that are likely to be implemented.
And it's interesting too, Lydia. We talk about the jobs report that we're going to get on Friday morning, and the idea of how resilient this market, the job market, has been. We've basically been averaging more than 200,000 jobs created really for the last couple of years now. And other than a couple of one-off blips because of weather and some other issues, that doesn't seem like it's abating. Does that feed into the inflation story?
Yeah, so when we look at the labor market today, we've had a pretty good year in 2024. We have, the economy that likely added about 2.2 million jobs. And that's in line with the type of job creation that we had seen back in 2018, 2019. So 2024 was really a year of rebalancing for the labor market. But when we look at conditions today, we're really seeing a frozen labor market with both employers but also workers in wait-and-see mode. We're looking at the hiring rates and the quits rate from the job openings report earlier this week at a 10-year low. So there is a lot less churn in the labor market. And employers are a lot more careful with their hiring, but also with their layoff. Mm-hmm. And that's confirmed with the jobless claims data, where you see that initial jobless claims are still historically low. Continuing claims continue to increase. Mm-hmm. So at the same time, this confirmation that labor market conditions have loosened and that there is less opportunities out there when it comes to job openings, but also when it comes to hiring from companies.
And then, of course, the big question marks are tariffs and immigration, right, when it comes to the labor market, but also for inflation. And the minutes did say that many participants were looking at President Trump's policies, specifically tariffs and immigration, and that they see that special approach, the cautious approach in the coming quarters. Lydia, how do you factor that in?
Yeah, I think the reality is that we know, Trump's economic agenda, but we don't have visibility. There is a lot of uncertainty surrounding the type of policies that will be implemented, the extent of these policies, especially on the trade and tariff fronts, and the timing as well. And when you look at the Fed, we didn't get more visibility on how policymakers have factored that in. We know that some policymakers have made some placeholder assumptions. Some others have not. So there is some real inconsistencies when you look at the forecast in the summary of economic projection. But when we look at some of these policies, our view is that we're going to get, a modest inflationary impulse from tariffs. We're not expecting broad-based tariffs, but we do expect to see some targeted tariffs. And we expect to see also more pro-business policies and some boost to business confidence that are likely to be lifting economic activity in the near term. So there are some offsetting factors when it comes to these policies, but we'll have to get more visibility on these policies, and we'll get more on that in the coming weeks and start to fine-tune some of these assumptions, and Fed policymakers will do the same.
And then you add on budget deficits and issuance. That's a whole other kind of situation. Lydia, are we going to be in a place, though, where the Fed cuts and long rates still move higher? And that divergence means the cuts aren't going to transmit to the real economy the way we're used to.
Yeah, that's a real issue, and that's something that the Fed is likely paying close attention to. If you look at the 10-year yields, they have increased significantly. They are somewhat higher than before we got those rate cuts by the Fed in 2024, 100 basis point of rate cuts. So when you think about financial conditions, we know that the Fed is looking at financial conditions, and the Fed doesn't want to see a more deterioration in the economy and in the labor market. The economy is in a good place. The labor market has moderated. It is right now has come back to balance, but there are some signs also of imbalance. If you look at the quits rate, which has come down, the hiring rate, which is very low. And so it is, very important to look at financial conditions and make sure that we don't get to a place where we continue to put downward pressure on activity.
Last question here, Lydia. I am curious on your thoughts here about consumer spending. We came into this holiday season at the end of 2024. Expectations were relatively high. And based on the numbers we've seen, it does appear that people went out and spent. It also appears that a lot of people put those purchases on credit cards. And I am wondering how much is really left in the tank for the average consumer. And I'm not necessarily talking about the high-end net worth folks, but just normal, everyday Americans.
Yeah, so when we look at the consumer spending data, there's clearly still some momentum going on. If you look at consumer spending growth in the fourth quarter, we're currently tracking at about 3% growth, which is quite strong. Now, when you think about the consumer outlook, I think it's important to keep in mind that we have a bifurcated consumer and that we have higher income households that are really pushing consumer spending forward. Now, as we look ahead, we do expect to see some moderation in consumer spending and the economy essentially converging back to trend in 2025. So consumers still in the driver's seat, but spending at a more cautious pace as interest rates remain quite elevated and as the labor market continue to soften as well. That means slower income growth and then slower consumer spending momentum.
All right, Lydia, thanks a lot. Really appreciate it. Thank you for joining us. Lydia Boussour, senior economist with EY. Let's turn now to Treasuries. Amundi and Citi's Wealth Division joining a growing chorus saying the 10-year Treasury yields could rise to 5% again this year, a level, though, that would create a buying opportunity. And we saw just this today with that 30-year bond auction. For more on this, we're joined by Gennady Goldberg, head of U.S. rates strategy at TD Securities. Gennady, good to see you.
Good to see you.
Are you in the 5% 10-year camp?
I think in the short term, you have to keep all options on the table. I think it's possible that we can touch 5%. I do also think this is actually a very good buying opportunity for kind of a longer term investor. We think the year is going to be divided into kind of two halves. The first half, we've got the Fed on hold, so we do expect them to stay put. And then in the second half, as growth starts to slow down, as you guys were just talking about, certainly we'll start to see rates drift a little bit lower, not quickly, but I do want to be positioned long over the course of the year.
So you don't see a point where you're going to have Fed cuts and the long end move higher like we have seen?
So the curve will probably steepen, but it doesn't necessarily have to be, kind of a twist steepening of the curve where the front end comes down and the long end goes up. All yields will probably fall, so I do expect the 10-year to finish the year lower, but I do expect the curve to steepen. Term premium will continue to kind of push a little bit higher. So there are going to be multiple dynamics within the curve.
Well, part of those dynamics, too, is also where inflation goes, right? I mean, 5% is great, assuming, inflation isn't 5% as well. So how do you balance that? I know it's hard to make an inflation prediction right now, given we're kind of at this inflection point, but I'm sure you've had to try to model something.
Yeah, I mean, certainly, the big question is Trump tariffs, right? And how much they add to inflation, how quickly they come in, what products they're on, who they're even imposed on. Are Canada and Mexico included in that? Yeah. And certainly some of the more pessimistic scenarios can push inflation sharply higher. Yeah. Our expectation is they will probably add about a percentage point to inflation, and that's why we have the Fed remaining on hold in H1, looking through whether they're going to be unanchoring inflation expectations.
That's interesting too, because when we were looking at the Fed minutes that came out about an hour ago, they talked in the Fed minutes about how a lot of members basically put placeholders for their inflation and economic targets, primarily because of the uncertainty around the new administration. So my question then, really, as an investor, do you have to wait until Trump makes good on some of those promises, or do you take those promises he made on the campaign trail and assume they are going to be reality?
Well, the question is which ones, right? So I think a lot of investors are holding off until they get a better sense of what's actually implemented. As we saw in the press conference yesterday, there are going to be new promises that are made. I think a lot of investors are saying, let's wait a little bit, let's wait a little bit, let's wait a little bit. Yeah. And that's why you're seeing that lack of buying that's come through. It started last year. People were saying, let's wait until the Fed. And then they were saying, let's wait until Trump comes into office. And now I think it's really until payrolls, until CPI, and until Trump comes into office, and then you'll actually get a little bit more clarity. People hope. But I do think, I agree with you, I do think these rates are already attractive. It makes sense to get in now.
Yeah, that press conference is crazy. By the way, we have to have a conversation at some point. Is Greenland going to be inflationary to the U.S. if we buy them?
I don't know. I listened to the whole thing. We brought it to you on Bloomberg Radio. So, it was a lot. There was a lot of stuff, substantive and otherwise, but it kind of all mashed together. So is this what we learned? Like through the auctions this week, the 3, the 10, the 30, is 5% going to be that cap now? Because we're seeing buying come in when we get near that point.
I think it has to be a bit of a cap in the short term at least, simply because if you're looking for rates to go past 5%, you're either expecting a massive amount of issuance, which really nothing has changed on that front. I think a lot of this move higher in rates has been growth driven rather than issuance driven or issuance expectations driven. And I do think you have to figure out how much of this has been, the tariffs as well. So look, I do think 5% is an attractive level. Is it the cap? Probably in the short term. Unless you expect the Fed to hike rates, which again, as we're penciling out rate cuts, that becomes a greater possibility. I still think that's a very low probability for the rest of this year. So
when we take a look at the credit market for a second, we've seen some high yield issuers start to issue on the front end or in the belly of the curve rather than the back end, because the back end is getting too pricey with which to do that. What does that do? That's a very weird thing, right? Usually you want to term out your debt.
You do, except that everyone kind of wants rates to come down, or at least on the issuance front, and you're seeing very tight spreads in the credit sector out there because you don't have a lot of supply and a whole lot of demand for investors looking for very high all-in yields. That's why credit spreads have done so well. The problem is you have a lot of companies that want to issue in the front end and everybody who wants to buy in the back end, right? So there's a bit of a mismatch. It hasn't gone too poorly. The market's doing just fine, and there's a huge amount of supply out, as there always is in January. But it is actually helping to push long-end rates up a little bit higher as well because there is that amount of supply out there.
So you are believing in the price action. You think that what the Treasury market is reflecting, or I should say the bond market overall is reflecting, is a relatively accurate, or at least as much as we can believe it to be accurate?
I mean, it's always accurate. The question is, does it stay? And does it continue to move higher? Or, there's certainly folks out there looking for much higher interest rates from here. I think we're towards the top of the recent range. Right. So I would be a buyer around these levels.
But going back to your comment, too, about how the Fed probably is going to raise interest rates unless there really is some huge, resurgence in inflation. At 4.5% or 4.25 on the lower bound on the Fed funds rate, is that enough, do you think, to tackle inflation? I mean, let's just say they stand pat there. Do you think that would do the job?
Yeah, I don't think policy is easy at any point. I mean, we're all talking about, whether it's us or the Fed, we're all talking about the level of restrictiveness of policy. No one's talking about how easy policy is. And certainly there are some problems of transmission. I mean, you've got, something like 70% of the country having locked in a mortgage rate of below 5%, right? That's not going away anytime soon unless rates fall dramatically. So really what we're talking about is how restrictive is policy, and is it enough to actually slow down inflation? I think it is over time, and I think that's why the Fed is becoming a little bit more cautious, because they want to keep rates slightly higher for slightly longer to try to get that inflation lower down to 2%.
All right, great stuff, man. One of the best on Wall Street, Gennady Goldberg, head of U.S. rate strategy over at TD Securities, kicking us off to the close here on this Wednesday afternoon. When we come back here, we're going to talk about consumer staples. Remember, they hit a record high as a group back in November. It's been, a water slide down since. We're going to talk with an analyst over at TD Cowen who issued a slew of downgrades, warning that 2025 will be an even tougher year for the sector.
Plus, revisited auction markets. Is that a word? Revised?
It is now.
Oh, auction market. All right. Trends from 2024 carrying over in 2025. We're going to focus on what to expect out of Christie's for this year. We'll break it down with Bonnie Brennan.
I'm looking forward to that conversation. Also looking forward to our conversation with Will I Am. He's out at the CES conference in Las Vegas alongside Jensen Huang, alongside another host of celebrities with a new big product here. We're going to tell you what it is a little bit later in the show. Stick with us. This is The Close on Bloomberg.
Do you think it'll be the case where someday you would be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
All right, let's get a view from the sell side. These are top calls, the big movers on the back of analyst recommendations. We're going to start off today with Warner Music Group. Guggenheim trimming its price target to 40 from 44, not because of anything the company itself is doing, but because of what the dollar is doing. The analyst saying that the surge in the greenback will likely lead to an incremental FX drag on revenue for Warner Music, which gets more than half of its revenue from outside the U.S. Shares down 5% on the day. Next up, AMD, a downgrade to reduce over at HSBC. The price target slashed by almost half to 110 from 200. The analyst, Frank Lee, says the chip maker just doesn't have the chops to compete against NVIDIA. He calls AMD's AI GPU roadmap less competitive and says it likely won't be able to penetrate the market as much as anticipated. And finally, shares of cereal company WK Kellogg back down to the lowest level since July. TD Cowen downgrading its recommendation to sell today, given what the analyst calls the company's uninspiring lineup for new products. He says that the 2023 spinoff from Kellanova has yet to improve the company's competitiveness in the challenging breakfast cereal category. Those shares down 8% on the day. Those are some of our top calls. And well, we want to stick with that last one there because TD Cowen is actually saying that overall 2025 is shaping up to be a tough year for consumer staple brands. The analyst also downgraded J.M. Smucker as well as Kimberly-Clark down to hold. For more on those calls, Rob Moskow joins us right now, analyst and managing director at TD Cowen. Let's start off with Kellogg first, Rob, because I was more intrigued by this, given that I thought this whole spinoff and the separation of these companies was supposed to improve their competitive situation. It's been over a year now. What's going on?
Yeah, I mean, that was a key component of the downgrade, is that when you spin off a business, the idea is that management becomes more focused, you have a focused sales force, and you have the resources you need that maybe the parent company wasn't willing to put in to execute in a category. But our data shows that Kellogg's market share was down in 2024, and most importantly, in fourth quarter, market share worsened across multiple brands and most importantly across the broader portfolio. So I think they finished the year in worse shape than they thought, and that tends to color, in my experience, what management teams tend to say about the future. So I think this is just a little bit worse than they thought, and as a result, I lowered my sales growth estimates below consensus.
Is this a Kellogg problem, Rob, or is this an industry-wide problem?
Well, it's an industry-wide problem, and the WK Kellogg is kind of like right in the center of the issue. The packaged food industry has been losing consumers. Our data shows that there's been acceleration in the shift to the fresh aisle. Perishables are up about 6% this year. Center of the store is only up 1 or 2. I think what's driving that is just more and more consumer awareness about the health benefits of fresh. There's also pricing. Price-value relationships have been better managed. And I think that the GLP penetration is starting to make a difference too. And then you add, the Make America Healthy initiative on top of that, it could be another log on the fire.
Right, and you have the Surgeon General's warning on alcohol, so just like the warnings just keep piling on. Rob, is there a company that's doing well? Like we've seen a lot of repackaging of stuff that says healthy for GLP-1 diets, et cetera. Is there one company doing all this successfully?
I haven't seen much evidence of like repackaging processed foods into GLP healthy making a big difference. Where you do see a lot of strength is in the convenient nutrition category. So companies like BellRing that make protein shakes, or Simply Good Foods that makes shakes and bars and chips. They seem to be doing much better, and for obvious reasons. It's high protein, it's low sugar. And frankly, it's much of what the GLP users want in order to maintain their health.
Rob, where could you be most wrong in your call? Like, where's the biggest crack that you're monitoring?
One thing is valuation. A lot of these stocks are trading already at their all-time lows on multiples. So sometimes just a little bit of good news can cause valuation multiples to correct. And then also on WK Kellogg specifically, their margins are unusually low. And they are putting a lot of money into the supply chain to modernize the facilities, upgrade things, and improve the cost effectiveness. So if all of that works, like margins could be a lot higher. They're well below their peers. But my concern is that the company's had a lot of labor relation problems in the past. They're closing facilities. This normally causes execution problems, and I think there could be some here.
All right, well, let's try to end things on a bright spot, because you're not completely down on this sector, Rob. I mean, you're upgrading McCormick, you're on Coca-Cola, you've got conviction plays for companies like Unilever and Freshpet. What are they doing right that the other companies aren't?
Well, I am a big fan of Freshpet. They've disrupted the pet food industry with a packaged fresh format that's taking share from dry. They're the only one that can do it in the brick and mortar stores. And there's just tons of headroom here for more and more distribution and more consumer awareness. This is a niche concept that is now more and more mainstream, and I expect them to keep growing at like a 25% rate. I upgraded McCormick. I think McCormick is the one that can benefit the most from consumers eating more produce, eating more protein. When people cook from scratch, they need those flavorings in order to spice up the meals. So the execution's improving at this company. They've made some packaging changes. They've made some, they've narrowed their price gaps to private label. I think they're doing the right things, and I expect sales to accelerate.
A very wise investor, Rob, once told me years and years ago that it doesn't matter how bad the economy gets, people are still going to have their spices to season their food. So that's one thing that I guess technically is supposed to be recession-proof.
Let's hope so for my rating.
Sake.
Yes. Thanks. Yeah.
All right, Rob, thanks a lot. Rob Moskow over at TD Cowen. I just want to point out for 1 second, there was a really interesting piece, a Business Week, that talked about Chick-fil-A. Did you see this?
Yes.
I mean, food.
Yeah.
Chick-fil-A is squeezing 2,000 lemons a day. First of all, that's an insane amount of lemons. And that now they have an army of robots to do it.
That's good. Our senior producer, I think, squeezes about 200 lemons a day.
Yes, and it
she
takes
does that
her
all by hand.
forever. She's out
I'm
there
serious.
for like 25 minutes.
This is it. I mean, she comes in at like 7 a.m., but we don't see her until like 9
It's true.
She's squeezing lemons here. But that's good. So how do the robots do?
I think they do okay, but they're not like a robot arm. It's like a machine that like squeezes the lemons. But can you imagine being a worker having to squeeze lemons?
So it's just a lemon press.
Pretty much, yeah.
That's less sexy.
Yeah, but you know how hard it is to squeeze those things? Like when you do key lime pies, you have to squeeze the limes. It's hard.
I would never make a key lime pie.
All right.
That's insane.
I make a really good key lime pie. All right, coming up, we're going to talk about art auctions with Christie's American President.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Min-Sung, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Just about 3:30 p.m. in New York. This is the countdown to the close. I'm Romaine Bostic.
And I'm Alex Steele. Equity markets not really going anywhere fast. It feels like we're going to be on hold now with equity markets closed tomorrow. We'll be on hold for that Jobs Friday on 8:30 a.m.
Yeah, absolutely. And this is a market, of course, that has been sort of really focused in on what's going on with rates and what's going on with the Fed and the economy. You kind of forget, though, the economy is much larger than just this universe of stocks and bonds that we talk about every day.
And even though equity markets might be going nowhere fast, you still have alternative investing still super popular. And one big part of alternative investing is the art market. And 2025 is shaping up to be a very exciting year for that world. Many experts anticipating return to pre-COVID levels, demand among collectors and more private transactions for contemporary pieces. Christie's, one of the most prominent auctioneers in the world, is hoping to capitalize off of all of this. Here in studio with more is the president of Christie's Americas, Bonnie Brennan. Bonnie, great to see you. Thank you for coming in. So describe to me 2024 and then what you expect 2025. What would be a word to sort of categorize both?
I think what we saw was challenges but resilience in 2024. We had obviously some uncertainty in the political field here in the U.S., and so we saw some people sort of hold back. What I think we saw in the back half, certainly post-election, was increased confidence. Stability breeds confidence, and we're very optimistic about that continuing in 25.
Where do you think you're going to see the most action?
I think really it's a global market. We've seen a lot of new buyers from around the globe. Asia, while it has had its challenges, we still continue to see great interest from buyers there. The Middle East, we just incorporated in the Kingdom of Saudi Arabia. The growth of wealth in India has created some strength in that market. And right here in America, America, we have so many great masterpiece buyers and collectors right here in our backyard here in New York. We had some extraordinary moments last year at the very highest levels, and I think when we had those works, they sold really well. The challenges of last year is we just didn't have that many, and we're really hopeful that we're going to unlock supply in 25.
Well, that's what I'm curious about on the supply side. Like, what traditionally unlocks that? I mean, is it just when you have someone either passing away or getting to the end of their life, deciding they want to liquidate, or maybe they run into financial problems? Like, what's usually the catalyst for somebody to take their art collection and come to Christie's?
Well, often in our market, we talk about the 3 Ds: death, divorce, debt.
Forgot about divorce.
Yeah, there's that.
But certainly estates are some, motivated sellers. That said, we have a lot of estates who can liquidate other assets. They're not necessarily pressed to sell their collections, particularly in uncertain times like we saw in 24. So you saw fewer estates come to market. The ones that did come to market performed very well because there was demand. We just had limited supply. So I think you're going to see, yes, there will be great collections. I'm very encouraged by the pipeline of business that we've seen already. rally early in the year for May, I'm also thinking that those discretionary sellers are going to come back to the market.
So, I mean, last year, I mean, you guys had about $5.7 billion in global sales, which was down about 6% from the previous year. Was that down because of the number of transactions, meaning the number of sales, or was it down because of the value of those sales?
It wasn't really about the number of transactions, it was about the value of the consignments. We had a great Magritte that we sold. It was the only picture last year to sell over 100 million. Came from a great collection, Mika Erdogan's collection. It was only going to come to market once she passed away. So, we definitely had some great moments across different categories in the back half of the year. The Magritte, a great moment in luxury. We sold a wonderful diamond, setting a new record there. So I would say cross-category people are seeking quality. When there is uncertainty, there is sort of that flight to quality and known names.
I'm wondering, what do I learn when like the banana thing like sells for a lot, right? And I mean that in that, like, as someone as a market participant, that to me feels like a meme stock. Like, we're all going to bet on GameStop. Here's a banana that you got to change out with a piece of tape, and yet that's going for a lot of money, and that feels to me like a meme thing. Is that true, or am I totally misreading the situation?
I think what that really told us, Alex, is we have a very varied market of buyers. You know, it speaks to what we were talking about diverse age brackets, and really what is our business doing to respond to the next generation of buyers? And you saw somebody in a new industry buy that work. Right. You know, somebody in
to that
crypto.
point, though, too. I mean, we all could, of course, joke and make fun of the guy who bought it, but it gets to this idea of how people view art, right? Like what traditional, maybe we would all love to have a Magritte or a Monet or Renoir or something, but some of us, we like more contemporary things. So how do you sort of balance that between kind of old school art that is still very much in demand with kind of this newfangled stuff that could be easily dismissed as just a gimmick?
Yeah, I think we are a company that was started in 1766, but our challenge is maintaining heritage but being innovative and being responsive to what people want. We saw great demand for the banana. We have to be thoughtful about NFTs, about digital art. You know, there's a greater demand for things that we weren't even selling 5 and 10 years ago. So being good listeners and being responsive. And I think you'll see even within the contemporary market, there are certain artists, we saw great market strength 2 years ago, some softening last year. And so just be nimble and flexible about what we're offering to make sure we're answering what clients really are looking for.
How hard is it for an auction house to value some of those new types of art, like a banana on a wall, or even just, the idea that you've had a lot more contemporary artists that were kind of outside the realm of sort of the high auction society have now sort of entered that realm. And we've seen some big missteps. Sotheby's had a big one a couple years ago where they completely just misjudge just how much a certain painting would go for. And I am curious how you do that with artwork that doesn't have the track record to be able to say, okay, we think we know exactly what this is worth.
Yeah, so I think that's really hard when you have exceptional objects. Sometimes there is no precedent. The way we come about pricing is based on past performance. Sometimes we don't have like objects. So we have to be brave. We have to also educate and articulate, why is this worth that much money? Why is this copy of the Declaration of Independence or a dinosaur fossil, why is this so special? That's on us.
Back to the banana. You said it was a crypto guy who bought it, right? So I'm wondering how much art is going to be related to alternative investing, like the crypto market. Like, what do we learn about how other assets in the market are performing, and then how art will perform as well?
I think it's all interrelated, right? We are having conversations all the time, and our market is impacted by the ups and downs of the different, whether it's the equity markets or what's happening in the crypto field. We sold that Beeple for $69 million. Now, 4 years ago, that was an extraordinarily strong market, that we had a bit of a sort of crypto winter where NFTs and digital art sales were down. I think the banana was a conceptual work by one of the greatest conceptual artists, Maurizio Cattelan, but I think that, we're in the infancy of digital art, so I'm very hopeful for what the long-term future of that field will be.
All right, it's an exciting year ahead. Bonnie, appreciate you stopping by. Bonnie Brennan is the president of Christie's Americas.
I'm sure it's not actually called the banana, right? Like it kind of.
It's called the magician, or is it the magician?
It's probably called something other than the
comedian.
The comedian. Yeah,
There
I'm just
you
gonna
go.
say the banana.
Ask the expert.
Yeah, my bad.
Still here. Thank you for staying by.
It's very nice to see you guys.
I am curious, though, too. I mean, we talk about artwork, and there's been a lot of talk here also about architecture, if you will, which is art in and of itself. Art Deco.
Yes, it's bad.
You're a fan of this?
I am a fan of Art
Deco. I didn't know
Deco.
it went away. What happened?
I don't know, but apparently it's back. If it was away, it's now back. In Paris, Art Deco is apparently enjoying a resurgence in decor, fashion, and more. A new generation is appreciating the style's glamorous roots. I got married at the Carlisle. There's like nothing more Art Deco in New York than that.
You got married in the Carlisle? You are like the absolute New Yorker.
I am.
Right?
It was so cool.
Yeah.
We stayed in the Roger
Did you
Federer
take the
suite.
subway there too, and you know, the whole thing?
No, we took it with my wedding dress in tow. That'd be
yeah.
trickier.
All right.
What would be the style you would pick?
I don't know. I mean, I was thinking about this. I don't think I have a style. I mean, I just happy to have
You
a
have
roof
style?
over my head, and well, I mean, in terms of like architecture, I don't know. I guess I was never really all that. But I will tell you this: if you ever go to my hometown and you are a Northwestern grad, Chicago, Illinois, take one of those architectural boat tours. You will learn more about the city in that hour than any other thing anybody else can tell you.
As long as it's not cold, I will do that.
You know, there's a
date.
summertime. I mean, it only lasts like a month and a half, but,
Sure.
but there's a summertime in Chicago. All right, coming up here, we're going to get back on track here with the focus here on some of the big movers of the day. That includes eBay. It's our stock of the hour, and it's up next. This is Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything. Names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
All right, let's take a look at shares of eBay. It is our stock of the hour, up more than 10% here on the day, best day in at least 2 years. This after we learned Meta Platforms has offered to publish listings from eBay on its Facebook marketplace service. Now, eBay's listings would be available in Germany, France, and in the U.S. This is part of an effort by Meta to comply with an EU antitrust order. Jess Menton, who covers equities for us here at Bloomberg, joins us right now to talk a little bit more about this. So I guess this is kind of like, somewhat of a concession decision? I mean, it's like, it has to do something, so fine, put eBay on there?
So they had to do something within 90 days from this ruling a couple of months ago, but they are going to try to fight it. So it shows you that Facebook in some ways still thinks that what they were doing was still all right. So I was looking through the sell-side analysts to see who they thought kind of like a win-win here. And it was interesting for Citi because they felt like it would benefit both Meta when it comes to the Facebook marketplace, but then more so when it comes to eBay, just given that it's kind of hard to track when you're thinking about how many people are actually on this platform because people go off to pay on this. So even say, for instance, if you're going to buy this and you're on the site for eBay on the Facebook marketplace, if you go through to purchase, you have to go back to eBay to do it. So they're going off of platform. So actually, Facebook Marketplace actually has around 1 billion active kind of users that are going through and looking at it monthly. But if you want to get more of a comparison for what it's like for eBay, the latest quarter data that Citi had looked out, it was actually maybe 100 million active buyers that were on it. So significantly less than the amount of eyeballs that would be on Facebook Marketplace. So that's why they think eBay would benefit more so from this, obviously.
So, dumb question. If I'm on there and I go to eBay through Marketplace, Meta or Facebook doesn't get a cut of what I buy, right? Because I go off site and there versus like an Instagram or Pinterest.
Exactly. So that's kind of the key issue there, where it could still in some ways affect Meta in that regard. And that's why they wanted to keep things where people on Marketplace more eyeballs on what they want, less so when you have to leave that platform to pay elsewhere.
So the idea here too, so getting back to the rally in eBay, is this going to have a material effect on their bottom line? I mean, are we able to assess that?
So far, and we will have their earnings in the next month or so, but the big thing, the last earnings report, when we heard from them at the end of October, they actually had kind of a tepid sales forecast for the holiday quarter, just given the dynamics. So it's hard to see what the print like this would mean when you have something like this, but that's what's going to be key on that earnings call and what management says, because this could be something, and especially Citi, they actually have a buy rating on the stock now, and they have a 75 price target on that. So that's actually a 19% rise through yesterday's close. Also, Baird has an outperform rating too. They feel like the competitive overhang is actually going to be somewhat removed now.
Interesting. I mean, it can't hurt them.
Right.
I mean, that's the thing. Like, so how do you price it in? I don't know, but it's certainly not going to hurt eBay from this.
So it seems like it's more of a win, obviously, when it comes to eBay for now. And we'll have to see what happens when it comes to Meta trying to fight this.
Romain looks skeptical. We'll leave it there. All right, Jess, thanks a lot. Bloomberg.
I like eBay, though.
Do you?
Yeah, I've never used Facebook Marketplace, but I use eBay pretty frequently.
Really? What was the last thing you bought on eBay?
I actually bought a couple Christmas gifts.
They do more like collectibles now and refurbished appliances.
Yeah, if you're looking for something unique, like say collectibles, but even like just regular non-collectible stuff, you'd be surprised what you can find on discontinued products.
He's setting me up because I buy Warrior Cat figurines for my daughter on eBay, and they cost a fortune, and I can't wait to sell them eventually and make thousands and thousands of dollars. All right. Anywho,
that's your retirement plan?
That's my retirement plan, selling her Warrior cats. You guys know what I'm talking about. All right, we got about 15 minutes to the closing bell right here in the U.S. We're going to break down the non-market action today with Adam Turnquist, Chief Technical Strategist at LPL Financial. We'll break down what the setup looks like as we head into Friday jobs number 8:30 a.m. This is the close on Bloomberg.
Somebody wants to use your product, Zepbound, how much does it cost a month?
You can buy Zepbound direct from Lilly for $3.99 for the starter dose.
$3.99?
No.
Okay. No.
This is a valuable innovation, David.
In this facility, which is part of your
$2 billion investment in the last 2 years. It's a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on-site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
When we look at conditions today, we're really seeing a frozen labor market with both employers but also workers in wait-and-see mode. We're looking at the hiring rates and the quits rate from the job openings report earlier this week at a 10-year low. So there is a lot less churn in the labor market.
Lydia Bassour there over at EY. A conversation here about the economic conditions, of course, with that big jobs report just up ahead, less than 48 hours away, and of course on the back of that Fed minutes report that we got about 2 p.m. Eastern time.
But market's doing a whole lot of nothing, trying to inch its way into the green, but there's a lot of negatives kind of weighing on it. Not only the Russell, but also tech in the terms of semis. I mean, you got AMD with that double downgrade. That's really weighing on the SOX index, the Philadelphia Semiconductor Index, and also you got the utilities underperforming in the S&P. Edison International, one of the worst performing stocks in the S&P, of course, the utility provider that has a lot of exposure to those LA wildfires.
Yeah, absolutely. If you're looking for bright spots, we were just talking about one, eBay having a phenomenal day, and of course keep an eye on Fannie and Freddie up for yet another day. As we count you down to those closing bells that are just about 9 minutes away, let's bring Adam Turnquist into the conversation, Chief Technical Strategist with LPL Financial. And I guess the big talk right now, Adam, is whether we're in some sort of lull and we got a reset in the rally, or whether this is an actual inflection point where we maybe can see something a little bit less.
Hey, good afternoon, Romain. Thanks for having me. I think if I'm going to pick between those two options, I'm going to go with the lull. We came into 2025 on a down note. Of course, we got that negative Santa Claus rally. We were a little bit overbought coming into December. As we look at things technically, market breadth was deteriorating well before that December 18th FOMC meeting. We saw fewer and fewer stocks participating in the latest leg higher. Of course, that power of the Mag 7 was doing most of the heavy lifting. That's come off the boil as a lot of those names are overbought. So right now, it looks like we're just in pullback territory. Haven't had a lot of technical damage underneath the surface. Breadth's still holding up okay, but really pointing to maybe a deeper pullback here for equity markets and potentially a buying opportunity back into this bull market.
There's been a lot of talk that some of the, I guess, stasis, if you will, that we've been seeing in market is folks really trying to wait for the new administration to come into Washington on January 20th and to start to see some of these policies and how they're actually going to affect the economy and, more importantly, affect equity prices.
The resiliency and the excitement around this bull market has been surprising, and that's been a big factor. I think the market maybe got a little bit ahead of itself with pricing in some of those expectations for a new administration, bringing less regulation, more pro-growth, of course, tax policies as well. And now it's going to be a waiting game, and we're going to be waiting on Washington to deliver on those. And as we know, in Washington, things can be volatile, and it can take a little longer than expected. So I think that's really going to be the playbook here for 2025.
Hey, Adam, I mentioned this with Romain just a moment ago about the stocks index, the Philly Semiconductor Index, getting hurt by AMD today, but it's not performed particularly well. I look at the moving averages, and they've converged in a way that I'm not entirely sure I've ever really seen before. What is going on here?
So we call that a ascending triangle formation, if we're going to put a description on that. And semiconductors, for as much attention as they get, they have really gone nowhere over the last several months. And on a relative basis, as we look at things from an asset allocation standpoint, they've really been an underperformer, which is a little bit of a concern when you think about the leadership of this bull market. From the origins, it has been semiconductors leading. That's what you really want to see in a bull market. It's often considered a leading economic indicator. Well, they've kind of stalled out here. And for now, benefit of the doubt is it's a consolidation phase. Maybe we'll see a breakout to the upside. I think that would be a good sign for the bull market as well.
If we break below all these moving averages, and it doesn't look like it's going to take that much to do that, what kind of downside could we see?
So I think you could challenge the August lows, the 200-day moving average, for example, on the stocks, not too far below current levels. Of course, we'll be watching what NVIDIA does. That has been the poster child of AI and the leader of the semiconductors, really setting the tone. And it's had a brief breakup to record highs following the CES, going into CES, and of course we backed off since then. But we'll be watching for leadership there to see if that's going to move higher here from current levels.
I'm curious, Adam, about the correlations that we're seeing in the market. Of course, the breakdown in some of the single stock correlations within the indexes, but also the correlations, the negative correlation with the bond market and bond yields, and how much investors should be paying attention to that.
I think it's really about the bond market right now, and I think going into Friday here with the non-farm payrolls report coming up, it's going to be a big test, for example, on the 10-year coming into key resistance at the April highs, the number there, 474. I think if we get a upside surprise on Friday, especially if some of those average hourly earnings tick up, we're going to see the 10-year breakout through those April highs. And then the conversation really changes to more of the 5 handle on the 10-year. Are we going to go back and challenge those 2023 highs again? And I think that's going to spook equity markets and likely trigger some further downside for the broader U.S. equity market.
Absolutely, and estimates right now on the terminal for 165,000 jobs created in the month. That would be slightly below the average. But of course, we've seen these surprises to the upside with this economic data. And it gets to the point, like when you look at the Fed minutes, you look at the fast Fed decision, it does seem like most of the members were concerned about a reigniting of inflation. And obviously, a lot of that ties to a strong labor market. If we did get a little bit of an uptick in inflation, I'm not saying we're going back to 8-9% on headline CPI, but if it did tick back up or at least hold where it is, would that have a material effect on equity prices?
On the short term, I think so, and we're seeing that play out already. You can see break-even 2-year yields moving higher. Some of the longer-term inflation measures more anchored around 240. If you look at, for example, 10-year break-evens. But on a near-term basis, I think the market is going to be spooked by any type of inflationary signs. We got a glimpse of that in the ISM prices paid index that jumped earlier this week to the highest level since early 2023. Market did not like that. Fixed income market did not like that. But to your point, in terms of why inflation might tick higher, it's because better than expected economic data is driving that. And that's what the Fed talked about in their minutes today, talking about less downside risk to the employment or the labor market, and also better consumer spending habits. And that's not really pointing to a recession. And I think that's really going to be the big factor for equity markets for this year. The recession, no recession. We're still in the no recession camp. going into 2025 here.
All right, Adam, got to leave it there. Adam Turnquist, Chief Technical Strategist at LPL Financial, counting us down to the closing bells. Alex, with just about 3 minutes to go.
Yeah, talking about correlations, you take a look at that 30-year, for example, from 84 until like the recent change in the last few months, it's been straight down. And now we're really in a different world, a different trend channel for the bond market. And those correlations, as you brought up, will be totally pivotal to where the equity market goes.
Yeah, a 20-year that traded above 5% for the first time in more than a year, and a 30-year that just flirted with that at one point. And we'd be remiss in not pointing out some of the volatility we saw in equities today. You had the S&P going through a variety of changes from gains to losses, and at least right now, it looks like it actually might finish the day in the green.
I mean, yeah. Now we wait for 8:30 a.m. on Friday and that jobs number.
A full breakdown of all of today's market action starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through that closing bell. A global simulcast, it starts right now. Scarlett Fu in the TV studio. Carol Massar, Tim Stenovic in the radio booth as we parse the most crucial moments in the day. I am not okay, Carol. You know that. I've never been okay.
He's better than yesterday.
Oh, man, I know, but you sound worse.
Thank you,
That's
Carol
so sweet.
We're concerned,
I appreciate the pep talk.
We are concerned.
But guess what, Carol Massar?
What?
I mean, we started the day, markets looked like they were going to finish the day in the red, but as we get closer to the bells, kind of poking back into the green, at least for the Dow and the Russell and the S&P.
Yeah, rather pokey, right? And almost call it unchanged. I've been looking at some of the energy names and utility names in particular that are in fact impacted by those West Coast fires, Southern California fires. Edison International, man, it is down about 12%, and you've got Sempra Energy down about 2%. So some concerns about, obviously what's going on there and their ability to handle the fires, but also the impact on them as well.
But not much conviction in today's trade at all. I mean, you look at the S&P 500, searching for direction for much of the day, moved between gains and losses, Scarlett, more than 24 times today?
Yeah, well, everyone's waiting for the jobs report to maybe kind of give us some sense of what's to come. But I suspect that won't be until January 20th when you really get a sense of what the incoming president will do with executive orders that will hint at the sequencing of his policy that people will really be able to make some more permanent bets.
I'm still really weirded out by the weakness in the semis, seemingly sort of out of nowhere. And you look at the moving averages, it's just weird. They're like all converging. It doesn't look really good. It looks kind of ugly.
Yeah, interesting day here in the markets. We talk about quite a few sectors actually in the green, but unfortunately the ones that matter were in the red. The net effect of it all is a market that we're just going to kind of call this one relatively unchanged. The Dow Jones Industrial Average is going to finish in the green. It's up by about 90 points, but that's only about 0.2%. The S&P 500, which spent most of the session in the red, is going to close in the green, higher by about 9 points or 0.1%. The Nasdaq is going to finish in the red, but only by less than 0.1%. And the Russell 2000, that was your primary laggard, but that was only down 0.5%.
All right, that's your read at the big board. Staying with the S&P 500, guys, despite little changed on the day, you do have about 290 names to the upside, some with some significant gains, Scarlett, and 209 names in the S&P 500 to the downside, also with some significant losses.
Yeah, and if you look at the sector breakdown, very much tilted to the green. You have 8 sectors gaining ground, 3 in decline. But what's notable here is that no sector moved more than 0.75%. Healthcare, materials, and consumer staples each gaining about 0.5%. They're the best performers. The worst performers are communication services down 0.75%. Energy and utilities basically unchanged at this point.
All right, guys, let's get to some of the individual gainers. Number one gainer.
Are these going to be good, Carol?
They are now.
Stay tuned, TBD. Your number one gainer in the S&P 500 is eBay. This is a good one, finishing the day with a gain of just almost 10% here, rallying after Meta Platforms offered to publish listings from the online auction company on its Facebook Marketplace service. We talked with our Poonam Goyal. She said, just keep in mind, this is a test, so we're going to have to watch to see if ultimately this is something longer term. But right now, investors really liking it and kicking that one up to the upside in a big way. Hey, GE Healthcare Technologies, this was a top gainer in both the S&P 500 and NASDAQ 100, a gain of about 3.5%, upgraded to buy over at Jefferies, which encouraged investors to take advantage of a recent pullback in the company's share. They did raise the price target to 103 a share from 95. GE Healthcare finishing the day at $86 and change. And this one, a small cap mention. I might get some digs from Romaine as a result. Accolade, ticker is ACCD, and this share price surging 104%. This is after Transcarent agreed to acquire the healthcare services company for $7.03 per share in cash, representing a total equity valuation of about $621 million. It's just a reminder that stuff's going on. We have a lot of news coming at us from different areas, from D.C., from Wall Street, and so on and so forth, but some deals are happening going in and around the news cycle. That's why I mentioned it.
We've also been watching those devastating fires out there in Southern California, where thousands so far have evacuated. It's having an effect on some publicly traded companies as of right now. Edison International down more than 10%, the worst performer in the S&P 500 on a percentage basis today. It fell today the most since March of 2020. This is a result of what's happening out there in Southern California. Edison International Southern California utility is the largest in the region, though analysts do note that so far there haven't been any reports on utility equipment being involved in these fires. The company shut off electricity to about 136,000 homes and businesses in an effort to prevent wildfires and warned it may need to cut power to additional customers. Shares of Lyft falling by more than 6% today. This after Delta Airlines announced that it would replace the ride-sharing company and link its SkyMiles loyalty program to Uber a little later this year. So the new agreement is going to allow customers to link their Uber and SkyMiles accounts and then earn miles for eligible rides and deliveries. Morgan Stanley analyst Brian Nowak out with a note saying that the loss of Delta partnership poses risks to Lyft's growth strategy and achievability. Rigetti Computing, did you guys see what happened with quantum stocks today? Quantum computing stocks? Okay, this one down by more than 45% today. Among other companies that fell linked to quantum computing, NVIDIA CEO Jensen Huang said that very useful quantum computers are likely decades away. D-Wave Quantum fell more than 30%, Rigetti Computing falling more than 40%. Though we should note last year, this stock in particular was up by close to 1,500%.
Oh, wow. Okay, so resetting some expectations there. I'll let you finish today, Tim. It feels like a big moment for me. All right, taking a look at the bond market. You're seeing buying in the front end. You're seeing a whole lot of nothing happen in the long end. But there were the levels that we hit that were something. So the 20-year at one point hit 5%. We had that 30-year auction. 4.9% was the yield there. It was a strong bid to cover. The stops were the highest since 2007. It just shows like you hit that number, you hit near 5%, and there are buyers that want to come in for that. So it's going to be really interesting. The bond market is open tomorrow. It closes at 2 p.m. Equities are closed, so definitely watch that space in the long end.
All right. One of the things we are watching, or one of the spaces, is out in Vegas, right? CES, some really cool technology. We're all tech obsessed. On our radar, it's not at CES, but how about some lemon squeezing robots that are saving Chick-fil-A about 10,000 hours a week? Sounds kind of cool.
Yeah, so folks at Chick-fil-A, the folks who work there, were squeezing 2,000 lemons a day. Now they have machines squeezing as many as 1.6 million pounds of fruit, and there's hardly any human help. Makes me think of what they've done at Chipotle over the last few years with the Autocado.
Oh, right, for guac, yeah.
Exactly. Yeah. Moving the human out of there so then they can focus on other things, and you got the robot making the guac.
You know, this facility is bigger than the average Costco store. And you guys know I'm obsessed with Costco. So that's roughly 190,000 square feet. And then it ships all these bags of juices to the Chick-fil-A stores where there is a role here for workers. They add water, and they add sugar, and they make the lemonade.
I don't know. Can I just say something? I mean, the way we say it, like robots, it feels like they're like robots that are squeezing lemons, but it just looks like giant machine presses, no?
Yeah. What was that you were just doing? Can you
robot. Robot. For those on radio, I'm doing a cool thing
like
with
auto plants. Those auto plant robots?
Yeah, but it looks like just a huge, like, you know, presser.
Like an Elon, like humanoid robot, right? Like with hands.
It's not that.
Good
yeah,
stuff.
Exactly.
Well, speaking of robots and speaking of technology, you know, CES is showcasing a lot of smart dashboards, a lot of, you know, extra things that I don't know anyone is asking for.
Yeah,
do you want your dashboard to talk to you?
I don't.
And tell you all kinds of information as you're trying to keep your
I don't
eyes
want my
focused on
husband
the
to
road?
talk to me and tell me information while I'm trying to
How
keep my
about
eyes on the
interior
road.
lighting to reduce your motion sickness?
Do I need that? I don't know.
Or AI-powered voice assistants that are telling you where you're going?
Do I trust them?
I don't know. That's a good question. Romaine, you up for this?
I don't know. I'm too weak to talk. I'm sorry. I'm verklempt. Sorry.
You know, Romaine is not feeling well when you don't hear Romaine.
Can we get a robot to wheel him out when we're done?
I would love
Rather
that,
than wheel
actually.
Scarlett in, can we wheel
Squeeze me some lemon.
Oh, nice one.
Lynn says some hot tea. Can the Chick-fil-A robot do that?
But to Scarlett's point, I feel like, remember when CES was like, this was the next tech thing and you were never going to see it unless you were at CES? Now it's like, who asked for that? Like, who's asking for these things?
Kunjan Sabani was on our program earlier, and I asked if he had a chance to walk the floor and check out some gadgets, and he shared some with us. He said he was really focused on the pet mental health gadgets, the pet wellness gadgets.
How did they do that?
Stuff that was totally out of reach for him as a consumer, and he's like, you wouldn't believe what they have here showing off for pets.
Yeah.
Who reviews the product, the pet or the owner of the pet?
For the pets. Haven't you seen like on Instagram, like those little pets in the like little pet spas and things?
No, I really haven't seen that.
He gets a different feed than we do, yeah.
Advanced civilization, right? Our pets are, I want to be my pets when I come back.
I would just like my dog to stop eating, the Christmas tree needles off the floor. How about that?
Well, apparently you can go there. Maybe there's a machine that can help them do that.
All right, we could go so many different places.
You get mental health counseling for that.
All right, guys, that's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.
A lot more coverage coming up here on Bloomberg Television. We're going to take a look at the economy and whether the economy and financial markets maintain that momentum through 2025. That's the million-dollar question. According to Raymond James, we discuss with the Chief Investment Officer, Larry Adam. This is Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. Let's take a look at where markets ended the day. The S&P 500 did hold that 5,900 level, but only higher by about 0.2%. That's actually an improvement, though, over what we saw over most of the trading day with the stock, with that index, I should say, oscillating between gains and losses. We thought we were headed for another day in the red. Now, quantum computing stocks, they did have another day in the red, down about 21%. This after some comments, just really off-the-cuff comments by Jensen Huang here, that the revenue forecast for quantum computing are still way, way off in the future before this becomes much more of a viable business. You saw a lot of names in that space like Rigetti sell off here in the cash session. But of course, all of this links back, of course, to what we've been seeing in the yield space. 4.979 right now on a 20-year, unchanged at the moment, but at one point during the trading day, it did trade above 5% for the first time since 2023. The 30-year bond also flirted with a break above 5%, and that correlation between stocks and bonds, higher bond yields, could be the big story of 2025.
Absolutely. It hasn't happened just yet because stocks are holding up, but we'll see how it all shakes out. Let's take a look at some of the big movers in equities. We're going to start with eBay, up for the biggest gain in the S&P 500 after Meta offered to publish eBay listings on its Facebook Marketplace service. Of course, this is to comply with EU antitrust orders, but this does help raise visibility for eBay listings, which could lead to higher revenue and gross merchandise volume as well. Edison International down about 10% for the biggest one-day drop since 2020. The company operates Southern California's largest utility, and of course, those wildfires in the LA area being fanned by strong winds is certainly a big challenge for this utility to address. Now, our top story this hour is about the new year and new challenges. Romain talked about rising bond yields. They're climbing, not just in the U.S., but also in the UK and Japan, as central banks grapple with the threat of inflation reigniting. And driving all of that, of course, is the unanswerable question of how Donald Trump moves forward with enacting trade and economic policy, which then determines how the Fed and other policymakers around the world respond. In the meantime, you have companies and entrepreneurs moving forward with their plans, in this case of integrating AI into their products and services. We're going to head live to Las Vegas and the CES later in the program.
Yeah, we're going to get to that in just a moment. But here on this January 8th, a look ahead here to what folks are really expecting for 2025. Tony Roth over at Wilmington Trust joined our show yesterday. He compared this year to a game of chutes and ladders. Our next guest says, well, it will also be like a game. In his words, like deal or no deal, writing, quote, we think the recessionary bad cases, such as a Fed-induced over-tightening cycle, a crash in consumer spending, and plummeting business spending have been taken off the board. What remains are the good cases that should support economic growth. Pleased to say that the man behind that quote joins us right now. Larry Adam is the Chief Investment Officer at Raymond James. All right, let's get right to it, Larry. I was not a big fan of deal or no deal, but I get your analogy here. Is this a good thing or a bad thing?
I think it's a good thing because a lot of the positive good cases for the economy remain on the board, if you will. We still think, even with some of the data that's been coming out, that inflation continues to further decelerate this year. When you look at the drivers of economic growth, they remain pretty solid, meaning that the consumer, I think, is going to be resilient. I think we're going to see some big uptick in spending when it comes to businesses because AI, not only does that help the economy when technology companies get the robust revenue from companies spending on it, but don't forget the productivity gains that get amassed when companies do employ AI. And then I do think the government will continue to spend. Keep in mind that when you look at all the fiscal money that's been put aside from the CHIPS and Science Act and the Inflation Reduction Act, only 25% of that money has been spent, which means conversely that 75% of that money is still out there, sitting there waiting to be used, and that'll help support this economy going forward. So we think this economic expansion continues throughout all of 2025.
Well, will that economic expansion be enough to really lift the stock market that is already sitting near record highs, coming off a phenomenal 2 years? And just to continue with the game show analogy, when you look at the S&P, when you look at some of the individual stocks, is the price actually right?
So when you look at the price is right, if you will, I do think that when you look at the PE multiple, we've gotten as much PE expansion that we can expect. So the good news is that we do think that earnings are going to grow this year by about 13%. And that's on the back of that solid economic growth. But I do think that investors are going to have to dial back their expectations. We don't think you're going to get that 20% plus. Our target is 63.75. If you look at all of the major banks out there, that tends to be on the lower end. So we are a little bit more cautious as we go into this year. And I think that's supported by history. I mean, keep in mind, we're in the third year of this bull market that we're in. And historically, in the third year, you tend to get more muted performance. Keep in mind, when you have two back-to-back years of the market being up 20% or more, that third year, it's only up on average about 8%. And then if you look at the presidential election cycle, whether you want to call this the first year or the fifth year of President Trump's term, regardless, it's up either 6 to 8%, and you tend to see more volatility during that type of environment. So I think we're consistent from a both fundamental and a historical perspective, being more cautious this year.
Okay, but how do the rising rates that we're seeing in the U.S. and around the world fit into this picture? 5% yields are here if you look at the 20-year, and I know that not everyone cares about the 20-year, but certainly that would be the next level to watch for in the 10-year. And if today's auction proves anything, when rates are high enough, there is enough demand for that, and at some point, that's going to remove the appeal for equities.
So it is a concern that if rates continue to go higher, I know there are a lot of people out there that think that rates could spike even as high as 6 or 7%. We are not in that camp. First of all, from an economic growth perspective, while I do still think the economy is going to be resilient, it is going to step down to about 2.4% this year versus 2.7% next year. I mean, this from last year. I do think that inflation, as I mentioned, is going to decelerate further towards the Fed's target of 2%. And then when you look at demand, it still remains pretty healthy. If you look at bid to cover ratio for most of the auctions this week, it's still 2.5 times more demand for each auction that's coming out. And anecdotally, as you guys have pointed out, when I talk to investors in that 4.5 to 5% range, that becomes very attractive. Mm-hmm. And then when you look at U.S. rates in a global context, 4.5 to 5% is incredibly attractive when you look at the options over in Switzerland, where it's less than 0.5%, Germany, where it's about 2.2%, Japan, 1.6%. So I still think we're going to get a lot of demand coming not only from retail investors, but also foreign investors. And I think we're probably at the upper end of the range that we see rates going this year. We think we actually end the year lower at about 4.5%.
Okay, but in the meantime, that demand from international investors in particular will continue to help lift the dollar as well. Where do you want to be in terms of allocation to equities, growth equities at that, versus rate-sensitive equities and fixed income overall?
So when it comes to the equity market, we want to be in the sectors that, first of all, have good long-term thematic trends, where we have catalysts where earnings growth can be driven. And when I look at it from that perspective, the 3 sectors this year that will have the best earnings growth are going to be technology, industrials, and healthcare. They have well above what the market is expecting for the S&P 500. And in an environment where you have elevated valuations, you got to be where the earnings growth is. From a U.S. versus international markets, we prefer the U.S. markets because we have better economic growth here. Earnings growth in the U.S. is going to be double what you see in both Europe and Japan. And then let's keep in mind that the most dominant companies in the sectors that we like, technology, healthcare, they reside here in the U.S. And I think technology is going to be a theme that's going to be around for years to come, as this AI trend is still in its very early stages.
All right, good stuff. Larry Adam is Chief Investment Officer at Raymond James. Just a quick mention here that we did get some earnings, Romain, from Jefferies, the boutique investment bank. 93 cents a share was the reported number for the fourth quarter EPS. Analysts were looking on average for $1.04, but that was the consensus of 2 analysts' estimates. So take that with a grain of salt. Net revenue, $1.96 billion, higher than the anticipated $1.83 billion. And notably, if you look at the investment banking business, revenue rose 73% year over year, a record quarter in advisory as well.
Yeah, some of the commentary in the release, though, is decidedly positive about the outlook going forward. No hard numbers here, but seeing maybe potentially an uptick in activity here. And just a reminder, too, of course, that these earnings coming down the pike, a reminder here that the start of the earnings season, the official start, kicks off just about a week's time here when we start to get the major money center banks. All
right, coming up next on The Close, potential Trump tariffs drumming up uncertainty. We're going to discuss all this next with Jean Sheehan-Zaino, political science professor at Iona University. This is The Close.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Potential tariffs drumming up uncertainty. There are reports out that President-elect Donald Trump is mulling an emergency declaration for a new tariff program. Joining us now is Jeannie Cianzano. She's political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. Jeannie, I feel like every time we follow this story, it changes form in one way or another. Donald Trump reportedly met with Senate Republicans today, and his stated preference has been one big, beautiful bill that covers all of his policy proposals, whether it includes tariffs, immigrations, tax cuts, whatnot. But there's clearly now disagreement on what the strategy should be going forward.
That's right. At one point, they were saying a mega MAGA bill. And now, you're absolutely right. It's hard to keep track because one minute you hear that Donald Trump favors that one bill, and I think he probably favors it. But as we heard yesterday when he spoke from Mar-a-Lago, he said he would be open to 2. Then I heard Representative Lawler on Bloomberg today saying, no, Donald Trump favors 1. And of course, then we hear reports out of the Senate today that it is back to 2, which we know is the favored position of many senators. So, I think the reality is this. Donald Trump doesn't care either way, whether this is 1 bill or 2. That's not in his wheelhouse. He is not concerned about that. He wants everything he promised on the campaign trail to pass, whether it goes through 1 bill on reconciliation or 2. And he would like the Senate and the House to fight that out. The reality is they're going to need his leadership to do that, and that's why he was on the Hill today. But I don't think we have any more clarity now than we did a few hours ago. And quite frankly, Scarlett, I don't think we will until they get together and figure out how they can do this. And to me, one package seems like a huge uphill battle, but I do see from Mike Johnson's perspective why that is the only way he can see to get this passed.
I mean, you use the word leadership there, and we know that Trump, to a certain extent, is kind of a singular figure in terms of how he operates in Washington. But you also know, Jeannie, from your time overseeing everything in Washington, is that, he can't do this all alone. And I am curious as to who is really going to be his Sherpa in this process. Is it going to be Mike Johnson? Is it going to be the Senate Majority Leader, Senate Leader, or is it going to be someone, one of his advisors in the White House?
Yeah, it's interesting because he has put a team together pretty quickly. But as we know, Voight is very experienced at this, but he's got some people who are less experienced. So it's going to be interesting. That said, it is his second time doing this. He's entering for his second term. He knows what the stakes are. And I love the fact, Romaine, you used the word Sherpa. I would like to imagine he would have a guide of that kind in Congress to help push this through. But the reality is, look at what happened last Friday with Mike Johnson. It was really Donald Trump who drove that so Mike Johnson could get his position. One ballot. So I don't know who his Sherpa will be. I think Donald Trump feels like he is going to be driving this because he is now the Republican Party.
So, Jeannie, you mentioned Mike Lawler, the New York Republican. He also reintroduced a bill to increase the SALT deduction cap to $100,000 for single filers and $200,000 for married couples. This is something that, of course, captures the interest of our audiences in New York, New Jersey, Connecticut, and California, those high tax states. What is the likelihood that this is going to be the sticking point of any big, beautiful bill?
You know, the reality is because there is no room to maneuver in the House with Republicans with the narrowest margin in 100 years, that any issue can be the issue. And SALT is one that has come up and up over and over again over the years. You know, as Mike Lawler said today on Bloomberg, this was a pay-for the 2017 tax bill. It is woefully low at $10,000, as any New Yorker or somebody from California, New Jersey can tell you. That said, there is pushback from members from other states, like we heard Lindsey Graham say. Why would I help members of the New York delegation? Because, in fact, it is the state of New York that's such high spending that has made this an issue. And so I think we're going to see battle lines drawn here. And I think, you know, Mike Lawler may want to run for governor. He is really putting his name behind this.
Hey, Jeannie, we got to leave it there. Always great commentary. Jeannie Shanzano, political science professor over at Iona. Stick with us. A lot more coming up here on the program as we take a look back in history and that 1982 legal decision that broke up AT&T into 7 regional telephone networks. That's coming up next here on The Close on Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Only on Bloomberg. Context changes everything.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 120 countries across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Let's take a look back at this day in history. January 8th, all the way back in 1982, AT&T, one of the last true corporate monopolies, agreed to divest its 22 local Bell telephone networks as part of a sweeping antitrust settlement with the U.S. Justice Department. Now, it fundamentally changed the communications industry and, ironically, made AT&T bigger and more sprawling than before. Now, you need to understand that in the 20th century, AT&T, which traces its roots back to the 19th century, was the dominant phone company. Its long-distance network was the long-distance network. Its infrastructure unparalleled by any rival. And that made its service so essential to both the public and the military that the government for decades effectively exempted AT&T from antitrust scrutiny. But that changed in the 1970s. Amid suspicion, AT&T's Western Electric manufacturing unit was inappropriately funneling money to subsidize AT&T's less profitable divisions. Now, AT&T had never really disputed that. In fact, it actually claimed it was a so-called natural monopoly. That's where its dominance wasn't intentional, but rather a byproduct of its low prices relative to would-be competitors. And those low prices wouldn't exist without the profit subsidization practices it had employed. And to be fair, regulated monopolies like AT&T, they weren't uncommon. Think about power companies like Con Ed, sports leagues like the NFL, or even the Postal Service, each of them protected from antitrust lawsuits with the implicit assumption that for certain essential industries, a monopoly can be more cost-effective for both the company and for consumers. It wasn't that idea itself that got AT&T in trouble, but rather how it executed on that idea. A decade-long antitrust battle ensued, with settlement finally reached in 1982 on this day, and the AT&T Bell system eventually broken up in 1984 into 7 baby bells. And that brings us to our question of the day. How many of those 7 baby bells still exist as standalone entities? The answer? Just 3. Verizon, Lumen Technologies, and SBC Communications, which in an ironic twist would acquire its former parent company, AT&T, in 2005 and take on its name. And something else happened on this day, Scarlett Fu.
Yeah, that's right. It's the Consumer Electronics Show in Las Vegas. One of the announcements, in fact, coming out of that event is Florida State University partnering with Meet Kai to create an AI-powered education platform. We're pleased to say joining us now for more on this platform and the partnership is the Meet Kai Chief Business Officer, Peter John Alexander. Peter, it's good to speak with you. Thank you for speaking with us today. So you and Florida State University building this AI-powered education platform. It's to provide students with hands-on experience in a controlled environment. What does the platform do exactly? Just walk us through it.
Yeah, well, one, it's great to see you again, and thank you so much for having me back on. We have a few exciting announcements here at CES. One, obviously, is Florida State University, which has been a fantastic partner. The goal of the platform is to create, what we believe is the next phase of higher education or just education in general. We believe that the convergence of AI and these immersive type experiences will be fundamental into the future. I think specifically as it relates to the platform, we're working with the College of Social Work, and the idea is to say, hey, this is a interesting and a necessary part of society, and in some cases are putting people into risky environments. Let's take the risk out of those environments. Let's ensure that we can properly train and educate these individuals and recreate kind of spaces, whether it's uncomfortable living situations or comfortable living environments, but you're still looking for key factors that could be a potential problem. Adding the AI element of having this kind of immersive and interactive opportunity to speak with people that you can create based off of any gender, any race, any demographic, any language, and put people into these environments. So when they do go out into the field and they are interacting with individuals, there is, that preset understanding. I have, hours and hours and hours of experiences, so they're ready to kind of take on the challenges that are in front of them.
So the AI is creating unique scenarios for the students to operate in and to respond to, as opposed to determining the rollout and the sequencing of the training. Is that right?
That's exactly right. I think what's special about, this specific, sector, and you can also apply it to, let's say, nursing or counseling, a lot of different avenues, is that, there's a lot of, let's call it, recordings that have been done, right? And you can see kind of how interactions have been before, what videos are like, what are the reports. So you can kind of create these different narratives of what people have gone through in real life, recreate them in these types of environments and better prepare people for what's going to happen. The other aspect that I think is really unique as well, that we're also launching here at CES, is the wearables component. Yeah. And how that can kind of take advantage of using these type of immersive and AI experiences. I'm actually wearing one of these devices right now.
All right, I'll hold that thought for 1 second. In conversation with Peter John Alexander over at Meet Kai, some breaking news crossing the Bloomberg terminal involving NVIDIA and the U.S. policy toward chip exports. We're now learning that Joe Biden, the current president, is going to further curb NVIDIA and AMD AI chip exports. Now, this, of course, is sort of a final push by a president who will be out of office in less than 2 weeks' time. So it'll be interesting to see whether this actually rolls over into the Trump administration. You're seeing NVIDIA shares in the post-market trade take a slight leg down about 0.8% right now. We're going to try to get you some more details on this, and we'll get back to that story as soon as we can. Meanwhile, let's bring Peter back into the conversation. Of course, the Chief Business Officer over at Meet Kai. And Peter, I do want to talk about the use cases for this technology. When I think about this, and I think the last time we talked, we talk about training, firefighters to be able to, you'll see scenarios in buildings, or police officers and military. That makes sense to me. Outside of those areas, what are kind of the main sort of either professions or subject matters where this can be applied?
So one, it's a fantastic question. I think it depends on the specific industry. If we're looking at the AI and the immersive experiences, that's, I think, exactly right. I think you can add an interesting layer of, sports, anything where there's kind of, a mobile, where you have to go through specific environments in real life. Being able to bring that into safe and controlled environments will always be critical. But to take it a step further, specifically, let's call it with wearables, which is the new platform that we launched. You brought up some really interesting examples, whether it be security, whether it be for retail, whether it be for manufacturing. The ability to kind of take these types of devices, these types of experiences into the real world is extremely relevant. If you look at retail for a very simple use case, being able to have glasses like these, 36 grams, front-facing cameras, the ability to have AI and AI on the edge, you take, a brand new employee to a store, they're now able to kind of converse across a variety of different languages. They're able to wayfind in a store and know exactly where an item may be. They're able to do price lookups, checkouts. They can even give constant updates without them knowing about, hey, there's low inventory in this section.
Yeah.
Ping someone to the back, they can go refresh. So there's so many different ways that these technologies can work together.
Hey, Peter, we got to leave it there. Appreciate you taking time. Peter John Alexander, Chief Business Officer over at Meet Kai. Just real quickly, we do want to update you on that story about NVIDIA, the Biden administration expanding the curbs on exports of AI chips, something that would affect NVIDIA and AMD. Of course, the outgoing president of the United States issuing this right now. And again, this is according to people familiar with the situation that Bloomberg has spoken to. We've reached out to the White House for comment. We do want to go back to CES where Peter was sitting. He was out there presenting his products, and so too was will.i.am, the music artist and tech entrepreneur, unveiling a collaboration with LG Electronics. Let's take a listen to what he had to say.
Yeah, so XBoom is a family of audio products from one product called the Grab, which is portable. We have the Bounce, which is portable as well, but gives you a little bit more, punch when it comes to the audio, the depth and the projection of the audio. We have the Stage, which is like, pro level quality speaker for buskers and karaoke lovers. Love that product. And then the Buds. So the Buds are pretty lightweight, awesome quality, and it's been great working with LG. And all these family of audio products are differentiated from all other speakers because they come equipped with radio.fyi, which is exactly what that is. It's AI reinterpretation, reimagination of radio.
Just kind of explain to us the actual sound, because these products were already in the LG lineup, more or less, but they came to you with an idea of improving the sound and making a unique sound. So what was that process, that creative process for you? What were you trying to achieve?
When you're at the level of LG where everything is at the level, their technology is superb and supreme. But they came to me for perspective. They came to me for that final fine tuning on EQing the expression, the emotion of the speaker, and also the audio package, how the speaker sounds, all the on sounds, the off sounds, the volume sounds, all of those things that add color to the speaker. It's like when you open up your Apple laptop, there's that beautiful chime that when the computer is awake, that took a lot of perspective, a lot of thought when it comes to the frequency, the key that it's all in. And so we did, my team and myself, we did all of that work, and then we laid in the AI layer.
How do these new products, these new XBoom speakers and headphones fit in with the AI radio service that you launched?
Oh, awesome. So on the speaker itself, there's this heart button. You activate this heart button to access radio.fyi. And when you have like software encoded into the firmware, that it's a button away for a conversation with the world's information, as deep as you want to go deep, as wide as you want to go wide. It's a beautiful marriage between hardware and software.
What's been the reception at the CES show? You've probably had a chance to check out the exhibits, the new products, the new technology that different companies are rolling out, including LG and others. I'm curious as to how XBoom by will.i.am fits in with everything else that you're seeing that's on offer.
So first off, this is like technological Disneyland. So for all the technocrats and all the lovers of gadgets and, gizmos, this is the place for those folks. And we had a pretty busy booth, a lot of press, a lot of folks that are interested in XBoom and curious about the radio.fyi that is coupled with the XBoom products. And it's been great. It's been overwhelming for me. The day one, I was up from 4 o'clock in the morning to 2 a.m. We had a great celebration event. Jason Derulo was there. He's a part of the movement that we're starting with, radio.fyi and DJ Head. We had an amazing cast of folks. Hit Boy, awesome producers, songwriter. And what's awesome about radio.fyi is that people will create stations. We know what an album is. We know what podcasts are. We know what playlists are. To be able to make AI radio stations and, deploy them with this distribution partner that we have with LG, with XBoom, series of products, is going to be freaking fantastic.
And our thanks again to will.i.am, creative artist and tech entrepreneur, for joining us from CES in Las Vegas. My question is it going to be able to pair automatically with my iPhone?
Yeah, I don't
That's what it comes down to.
Yeah, well, I don't know. I feel like that's more Apple's problem, but that's a whole other conversation. But it gets to this idea, too. This is a very crowded space when we talk about Bluetooth speakers and headphones. Everybody's trying to come up with a better way to do these things. Maybe this is it, but, look, he was an early investor in Beats. He gets a lot of credit for that. He had a partnership with Apple at one point years past where he came out with some earbuds that got discontinued for a variety of reasons, and it'll be interesting to see if this sticks.
All right, well, I continue to keep an eye on that. In the meantime, we're keeping an eye on how the markets close on the day. Stocks erased earlier losses to close up about 0.2%, but the real action was in the bond market, where the 20-year yield did top 5%, and the UK 10-year bond yield also reached 4.8%, the highest since 2008, along with a big drop in the British pound. This is the close on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. Right? It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors. with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
All right, let's go back to the breaking news about the Biden administration's plans to limit the export of AI chips from the likes of NVIDIA and AMD. Joining us now for more on this developing story is our very own Ian King. And Ian, this is according to people familiar with the matter. Exactly what does this new directive really do when it comes to AI chips?
I mean, this is another way of kind of slicing the cake and creating more restrictions. What has happened up until now has been, look, hey, this is a chip beyond a certain capability, can't be sent to such and such a place. What this is doing is a more broad sort of swipe at restricting the spread of computing power, of the use of AI power, of saying to certain nations around the world, hey, if you're with us, then you can have access to this. But guess what? If you're not, we have to control where this computing power is deployed.
I am curious, Ian, does this have a material impact on the companies, on their bottom lines, these restrictions?
Yeah, I mean, the obvious answer is going to be, first of all, is this going to get implemented? Secondly, we'll have to wait and see, as it will, take a lot of time to sort of pass how these restrictions will affect what companies do. And clearly, they're going to look very closely at what they can get away with. And we've seen in the past, with these restrictions, you see an initial essential shutdown of shipments to certain places, and then sort of gradually comes back as the lawyers work out what they can get away with. So it's going to be probably choppy to start off with.
It's going to be choppy to start off with. Ian, with your decades of experience covering semiconductor companies from Asia as well as the U.S., what does this mean for the Asian chip makers? Does this put them in a better competitive position?
Not really, no. I mean, they're part of, as we know, Scarlett, they're part of the same food chain. We've got Samsung Electronics in South Korea. It's doing well or not in this business because it's supplying NVIDIA with memory. TSMC in Taiwan, it's doing well or not because it's making chips for NVIDIA or AMD or even Intel these days, right? So everything is kind of interlinked. You would have to look at some of the indigenous efforts in China if they're capable of getting to that capability.
All right, Ian, we have to leave it there. Ian King, of course, covers all things chips for us. The Biden administration making a last-minute effort here to further restrict the export of AI chips to some of our adversaries here. We should point out here that there is a regulatory process that does take place that would give the incoming Trump administration, starting on January 20th, the ability to rescind this if they so choose. So something to keep an eye on over the next couple of weeks. Meanwhile, when we come back, we are going to get you an update on those wild fires. At least 3 separate fires now burning in California, down the Pacific coast, inland to Pasadena, and affecting some of the most costliest real estate in the country. We're going to give you an update when we come back. This is Bloomberg.
Names that move markets are on Bloomberg.
Our budget proposes an additional $3 trillion of deficit reduction over 10 years. And I think that's necessary to make sure that our fiscal path is sustainable. Now, Congress hasn't done anything, beyond what I've mentioned to improve the fiscal outlook, and I think that's a shame.
Nobody covers business like Bloomberg. The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything.
Somebody wants to use your product, Zepbound, how much does it cost a month?
You can buy Zepbound direct from Lilly for $3.99 for the starter dose.
$3.99?
No.
Okay. No.
This is a valuable innovation, David.
We're continuing to keep our eyes on what's going on in California. Heavy wind gusts are fanning massive wildfires in and around Los Angeles. It's already being called the most destructive windstorm to hit the area in 14 years, and at least one of the fires, remember, these are 3 separate fires, at least one of them now being called the most destructive in the history of Los Angeles City. Alex Stone, ABC correspondent, joining us right now from the Los Angeles area. And Alex, give us an update here. How much progress has been made in trying to tamp down these fires?
Unfortunately, they have not been able to really make any progress because of the intense winds. But you can see that the winds have died down considerably, and that's exactly what the forecast said they were going to do compared to earlier today. Early this morning, there were 100-mile-per-hour winds where I'm standing right now. There were embers that were flying down, live, glowing embers down this street, and buildings were being set on fire. But even without that wind, there are a number of buildings that continue to burn. Just down the street from me, there are home after home that are burning right now. This home back here firefighters have tried several times to put water on it and just continues to flare back up. They have a lot of work left to do. We still do not hear any air attack up. There was one water-dropping helicopter that went over a couple of hours ago. The hope was that was going to be the moment that we began to hear air attack getting on this, but then we haven't heard anything else. It's just been too dangerous to get helicopters and planes up above it. Yeah. And on this fire and the others that are burning here in L.A., they still have a lot of work left to do.
Alex, what can you tell us about federal resources being directed towards the L.A. region?
There are now firefighters coming in from Arizona, Colorado, Utah, Oregon, Washington, Nevada. They are all heading this way right now. The National Guard is being deployed for those who have been trained to fight wildfire and go along with the firefighters and get up on the line. They need a lot of help. They're out of resources right now. They're out of fire engines. They just don't have enough manpower at this moment to fight the flames that are sparking up. So this is going to be really an army of resources coming in. We will begin probably later today or tomorrow to see it in the air as well. Every available air resource, helicopters and planes, they are on order right now, we understand. It's just a question of when it's safe to fly.
All right, Alex Stone with ABC News reporting live from Altadena, the Altadena section of Los Angeles, as the city tries to contain those wildfires and remain. We know that the president has also directed the DOD to deploy assets like U.S. Navy helicopters from San Diego to try to help. in this effort.
Yeah, and absolutely. And the president was coincidentally actually in LA for something completely unrelated to the wildfires, so he is making his way back to Washington now. So the government responds to this. And we should point out, I thought the video was really great because I think we kind of forget this is really affecting some very densely populated areas. So unlike some of the other wildfires that have plagued California, which tend to be in more rural areas, this is really getting very close to some of the more densely populated areas. And we spoke with will.i.am a little bit earlier about his headphones, but he's a native of the Palisades area, went to Palisades High School.
Yeah, and this is what he told us about the fires that are impacting his neighborhood.
I'm blown away by, the devastation that's happening there. My high school burned down. I went to Palisades High School. I have lots of friends out there. It's just broken, so prayers and all the best for folks that are going through some pretty hard times in LA.
Yeah, will.i.am there reflecting here on the devastation. We do not yet know the complete toll in terms of casualties. We do know, though, at least 1,000 buildings now have been burned, and now some of the assessments of the damage are already in the $50 billion mark. Remember, this is pretty pricey real estate, too.
Absolutely, and of course, we've seen people try to leave, and the traffic that's resulted in Pasadena, a highly, highly dense area.
All right, we're going to wrap up our show on that somewhat dour note, and we do want to point out here that the close will not be airing tomorrow because it will be effectively a national holiday here in the United States of America. The state funeral for the 39th president of the U.S., Jimmy Carter, that state funeral will, or coverage of that funeral will begin right here on Bloomberg at 9 a.m. New York time.
And we should mention, of course, that the stock market would be closed, so the NYSE and the NASDAQ are closed for the day because of the state funeral. The U.S. bond market will be open, but it will close early at 2 p.m. Eastern time.
And we will, of course, have full coverage of Jimmy Carter being laid to rest. Our friends over at Balance of Power, that's coming up next. Stick around. This is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate?
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostic in Detroit, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
President-elect Donald Trump heads to Capitol Hill to meet with Senate Republicans as lawmakers look for answers on the path forward for his legislative agenda. We'll have more ahead with Republican Congressman Brian Stile of Wisconsin.
Plus, Trump turns to the Supreme Court to try to stop his hush money sentencing on Friday as the DOJ seeks to release part of special counsel Jack Smith's report on Trump's efforts to overturn the 2020 election. Attorney Deanna Paul will weigh in this hour.
And Bloomberg's David Gura with us in Washington today sits down for a wide-ranging exit interview with SEC Chair Gary Gensler. We'll bring you part of their conversation. Thanks for being with us on the Wednesday edition of Balance of Power here on Bloomberg TV and radio. Kaylee, we've got our eyes on Capitol Hill today. Donald Trump expected to arrive. There are questions about whether he might visit the rotunda as well, where the remains of Jimmy Carter lie, at least for another 24 hours here. His funeral is set for tomorrow.
Indeed, state funeral is tomorrow. Of course, all of the living presidents, former presidents and current, are expected to attend, Donald Trump included, but President Joe Biden as well, who is, as we speak, traveling back from California, where we heard him speak earlier at a fire station in Santa Monica about the fires that are ravaging the L.A. region.
We're prepared to do anything and everything as long as it takes to contain these fires and help reconstruct and make sure we get it back to normal. It's going to be a hell of a long way. It's going to take time, but we're in it. The federal government is here to stay as long as you need us, everything you need.
Let's get an update now up first on the devastating fires in the Los Angeles area from Bloomberg's climate and energy reporter David Baker. He joins us from our San Francisco bureau. And David, this is remarkable, seeing these images of flames essentially in downtown L.A., Malibu, the Palisades, the Getty Villa. These are areas that a lot of people across the country recognize. What's the latest on the size and scope of these fires, and what's next?
Well, in terms of the scope, they keep growing. They have not stopped their forward progress, and we probably won't see anything like that for a couple of days. Collectively, they're above 23,000 acres right now. And while California has had much bigger fires than that in the past, we haven't had bigger fires than that in our major cities. Typically, we've had this problem in rural areas, smaller cities, suburban areas. But the big problem here is this is striking right near the heart of L.A. We have in particular a fire that's burning in the Pacific Palisades, close to the coast, that is marching towards Malibu, which already had to evacuate about a month ago for another fire. And we have another fire to the northeast of downtown that is bearing down on Pasadena. And that also has the potential for a lot of damage. Between all of these fires, we have more than 125,000 people evacuated, and they're trying to find other places to stay, hotels where they can move their families, friends, family members that they might be able to move in with. We've heard of people like fleeing to vacation homes or just going to visit their parents halfway up the coast because that's what they can do. So everybody is scrambling right now to get to safety, and it has really upended life in the city.
Well, of course, our thoughts are with everyone who has been affected and could be in harm's way at this point. We'll look forward to your continued reporting on this. Bloomberg's David Baker, thank you so much. President-elect Trump is expected to meet with Senate Republicans in Washington this evening, meantime, with lawmakers looking for clarity on how he'd like to move his legislative agenda forward. Joining us now for more is Bloomberg's Dan Flatley. So, Dan, he's going to meet with Senate Republicans specifically who are in favor of a two-track scenario, if you will, compared to the House one big bill. Are we going to get an answer finally?
Well, we don't know. I think we may get an answer. Whether that's the final answer, I think, only time will tell. Trump was asked about this yesterday. He's talked about it, on Truth Social. And what we know at this point, basically, is that they can't come up with an exact strategy for how to do this. There's discussion of doing 2 separate bills. There's discussion of doing one beautiful, big, beautiful bill. All of that is kind of on the table. But what is really important here from Trump's perspective is that he has a very ambitious economic agenda that he wants to get through. He can do some of it on his own through his executive powers, like tariffs on some goods. That's a big part of his agenda. But tax cuts, he needs Congress for that. And in order to do that, you have to sort of do things in sequence, right? So one of the thoughts is to do tax cuts first, to move that up to the start of the agenda, and then, see what Trump does on tariffs, what revenue you can get there, how are you going to pay for all of this stuff? You need to raise the debt ceiling as well. There's a lot of different things in the mix here. But that's what we expect Senate Republicans to discuss with President-elect Donald Trump this evening, as well as what he wants to do on the border and how are they going to do that, because that's a huge priority for the president-elect as well, and also for many Senate Republicans. So we're expecting that Trump will rally with his troops, so to speak, but that he will also have to soothe some concerns about how all this is going to be paid for, how it's going to move, and what kind of support he'll be able to rally for all of that. So it's going to be very interesting to see what happens or what comes out of this meeting today.
That part we do know. That meeting set to begin a little bit less than an hour from now, assuming that it's on time. Bloomberg's Dan Flatley, thank you so much. President-elect Trump has also asked the Supreme Court today to get involved in his hush money case and prevent the sentencing that is scheduled for 2 days from now. The 41-page filing is Donald Trump's effort to derail the case before his inauguration, of course, on the 20th. Joining us now, Bloomberg's Texas bureau chief, Julie Fine. It's good to have you, Julie. What's going to happen on Friday?
Well, essentially what they're asking, this is a final effort, like you said, Joe, to get rid of this before the inauguration. It's an effort, however, to get the Supreme Court involved with a state case. So the judge has already said that President Trump will not face any jail time for this. So the question is now, if the Supreme Court decides, all right, let's throw this out before we get there. No matter what happens on Friday, we're talking about the court and the court of public opinion. And in this case here, President Trump simply wants this to go away. And the Department of Justice does not want a different case to go away. That is the probe into President Trump overturning, or his efforts to overturn, the 2020 election. Now, of course, the Justice Department wants to say that this is an issue. They would like the release of those documents. However, a judge in Florida has decided to have a temporary order. That temporary order, of course, bars the release of that report. However, the Justice Department, in their last-ditch effort, is saying all they want to do is release the part of the report that has to do with overturning the 2020 elections. It does not have to do with the missing documents case. That's the part that they want to get out in public. So again, time running out on that one as the Justice Department is about to change. So a lot of legality still going on for President Trump as he gets ready to take office.
All right, Bloomberg's Texas bureau chief, Julie Fine, thank you so much. Coming up, we'll go live to Capitol Hill ahead of Donald Trump's visit there this evening. Republican Congressman Brian Stile of Wisconsin is next on Balance of Power on Bloomberg TV and radio.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. It's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, and it's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I think you're going to get the big ticket items done. It's going to be the secondary issues that are going to be much, much harder. And we need to lower, I think Republicans need to lower their expectations on being able to achieve that in a timely manner.
That was former Congressman Patrick McHenry on the early edition of Balance of Power today on the reality he sees for Republicans in the 119th Congress. Joining us now on Bloomberg TV and radio for more is one of them, Republican Congressman Brian Stile of Wisconsin, chair of the House Administration Committee and member of the Financial Services Committee, is live with us from Capitol Hill, where we have just seen President-elect Donald Trump's motorcade arrive ahead of what is expected to be a paying of respects to former President Jimmy Carter and then, Congressman, a meeting with some of your colleagues in the upper chamber, Senate Republicans, on the path forward for budget reconciliation. And I wonder, from your purview in the House, knowing what we've heard from your Speaker, Mike Johnson, about the preference for one big bill, if you actually expect that could be the outcome advocated for by the president-elect after tonight, something definitive.
Do one bill, because I think it's easier to do one big negotiation than it is two tough negotiations. That said, at the end of the day, what are we actually concerned about? Getting the policies across the line to get this country back on track. And so whatever vehicle is needed to actually get these policies through and across the line is the actual play call that we need to make. I think one tough negotiation beats two tough negotiations, but we have so much work to get done, in particular at a period of time where taxes will rise if Congress doesn't act, and a need to secure the border. Those are the top two issues that are in front of us. We're going to have to get a lot of work done to move those across the line.
The conventional wisdom is, Congressman, it takes a lot longer to write the tax legislation, and you could buy yourself a couple of months to do that while addressing the border now. That people who elected Donald Trump want to see that happen first and as soon as possible. Is this going to delay the process to deal with the border as you wait to handle taxes if it's one big, beautiful bill?
Well, I think it's important to remember that the president can act in executive action, taking significant moves forward as it relates to the border on day one. Again, he can reinstate stay in Mexico, restart border wall construction, end catch and release, end abuse of the parole system, all through executive action. In many ways, this is simply unwinding what President Biden has done in return to the President Trump era policies that were securing the border just 4 years ago. And so a lot of action is going to take place in securing the border right out of the gates. Further legislation is needed to make sure that we have the funding in place, that we have the men and women of Border Patrol not only funded, but also hired and engaged. And so there's a lot of work to be done that does require congressional action. I'd love to get that done as soon as we can. I understand the argument to move quickly on that, giving us time to negotiate the tax bill. But again, at the end of the day, what really matters is we get both border security and taxes done. I'm of the view that one bill, one tough negotiation beats two. But either way, I'm more focused in on getting the policies done than I am getting tangled up in the process negotiations that this town loves to talk about.
Well, and of course, this town is dominated by two political parties, so I do wonder about the role of Democrats in all this, sir. We spoke with Democratic Congressman Jake Auchincloss of Massachusetts on this program last night, and this is what he had to say about the way in which the Speaker might need to work across the aisle. Take a listen.
I think Mike Johnson is going to find that it is a lot easier to count to 218 when you have a pool of 435 votes rather than a pool of 220 votes, especially because the bill that they want to do on a reconciliation pathway is going to explode the deficit.
I think his suggestion there, Congressman, was this notion that there are a lot of conservative, fiscal conservative Republicans in the House who may not take kindly to some of the things that could be in this bill. Are Democratic votes going to be required?
Well, the whole reason we're having this discussion is the 60-vote threshold in the Senate. Republicans have majority control in the Senate, but under Senate parliamentary procedure, as we know, you need to get 60 votes, which requires Democrats in the Senate to come on board. Reconciliation allows us to move forward with 50 Republican votes in the Senate, and I think at the end of the day, we're going to get a lot done with, unfortunately, with Democrats not joining us to move forward on that legislation. Other pieces won't pass the Byrd test in the Senate. It's going to require, most likely, Senate votes in the Senate, or Democratic votes in the Senate. That said, I think there's a lot of stuff that both parties can look at and come together on. We saw earlier this week the Reagan-Riley bill that would actually deport illegal immigrants that have committed crimes. We saw a number of Democrats coming on board with that bill, a bill that I think could actually now pass the United States Senate. A handful of Democratic senators have said they support it. If we're putting forward in the House common sense, conservative reforms, I think the American people know that those are the right moves. We're going to see Democrats come along. In other areas, maybe less partisan in nature, digital assets. I think we have an opportunity to bring Democrats on board with conservative policies, making sure that the United States of America is leading in the digital asset space and not simply giving our authority away to other countries who are moving forward in the legislation in that space.
Well, Congressman, assuming this is going to be the path for taxes reconciliation without Democrats' involvement in the House, let's just talk about your family conversation within the Republican conference, because it's not just extending the 2017 package, it's other items, including salt. And we spoke earlier with New York Congressman Mike Lawler today on Bloomberg, who's introduced, in fact, reintroduced a bill to raise the salt cap to $100,000 for single filers, $200,000 for married couples filing jointly. You know this is a big deal for our audience here on Bloomberg. Here's what Lawler said about the issue today. Congressman, let's listen.
The $10,000 cap is woefully insufficient. It's had a negative impact on states like New York, New Jersey, and California, three of the high-tax states where this has most acutely impacted. Certainly, we have a coalition, and given our small majority in the House, it's certainly a powerful coalition.
Congressman, what happens, though, when you leave New York, New Jersey, Connecticut? What do voters in your district think about this idea of raising the salt cap of any magnitude, especially this? Why should the people of Janesville cover the property taxes for people in Greenwich, Connecticut?
I think that's the right question to be asking. Why should hardworking Americans be subsidizing jurisdictions that choose to apply high taxes to themselves? It was correctly noted there by my colleague Mike Lawler that New York, New Jersey, and other states in the Northeast Corridor in particular have incredibly high state and local property taxes. They do that because they place those taxes upon themselves. Allowing hardworking Americans or forcing hardworking Americans to subsidize those high taxes of individuals in high tax jurisdictions simply removes the impetus for them to address the high taxes that they have in the first place. If an individual in New York or Connecticut or New Jersey wants to have a high level of service and wants to vote in liberal Democrats to raise their property taxes, so be it. I don't think that hardworking Americans should be subsidizing that. At the end of the day, what we need to be focused in on is the tax code is pro-growth policies. And in particular, two policies stand out that we need to make sure we have our eyes on, and that's the R&D tax credit the R&D tax credit and other pro-growth policies to make sure that we're investing in the United States of America, we're bringing jobs here, we're growing the economy, and in so doing, revenue will increase.
Congressman, it's great to have you and appreciate your being with us here as a member of the new Congress. That's Republican Congressman Brian Stile of Wisconsin. Janesville, Wisconsin, Kaylee, 65,000, almost the same population as Greenland.
Yeah.
About that.
Greenland in the news this week.
Absolutely.
Donald Trump finding that a pretty attractive asset for national security purposes.
They don't have salt there either.
I guess not.
Coming up, Bloomberg's David Gura's conversation with SEC Chair Gary Gensler. An important conversation up next on Balance of Power at Bloomberg TV and radio.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Weekdays at 9 a.m. Eastern, only on Bloomberg.
This is Balance of Power on Bloomberg TV and radio. Today, outgoing SEC Chair Gary Gensler sat down for an exit interview with Bloomberg's David Gura, who asked him about the criticism he's faced and whether the environment has changed for regulators.
I think it does change. What we do here at this great agency is look out for everyday Americans, people just trying to save for a better future and try to move through things that help them, like we've done, like even shortening the settlement cycle from 2 days to 1 day. Might sound geeky behind the scenes, but it means you get your money 1 day faster, for instance, or getting privacy notices. There was no federal rule that you needed to get a notice if your data was hacked, and we put in place some rules to do that. So we're looking out for everyday Americans, trying to lower the cost of the markets to trade stocks, to trade the bonds.
Let me ask you about one facet of that $120 million trillion.
It's a big number.
It's a T, with a T, and that's crypto. And you often will point out it's a small sliver of that total multi-trillion-dollar package. But you came into this job, you gave a big speech in which you analogized the crypto world to the Wild West. I guess that makes you the sheriff. So as you get ready to hang up your spurs, is it less of a Wild West? I'm really belaboring the metaphor, but is it less of a Wild West than it was as you leave this office?
Look, I came in, my predecessor, Jay Clayton, who was in this office, had also tried to address this new emerging part of finance. And as you say, it's less than 1% of our overall financial markets. But it was then when Jay was trying to address it, and he brought 80 enforcement actions in this area. We've brought in about 100 in our 4 years. It was consistent. It's maybe about 5% of what we do in our law enforcement. That means there's 95% in a sense, unfortunately, about other things, scammers and fraudsters and so forth. But in this field, it's rife with bad actors. And let me just split the field into two just for a minute. The public knows a lot about Bitcoin, which is, depending upon its market value on any given day, is 2/3 to 80% of the market value of crypto. And then there's everything else, or some people say Bitcoin and Ethereum and everything else. These 10 or 15,000 projects, they're raising money from the public, and the public's investing, or the public's investing, hoping for a better future. I've been around finance for over 4 decades, and everything in the markets trade on a mixture of fundamentals and sentiment at any given time. But I've never seen a field that's so much wrapped up in sentiment and not so much about fundamentals. And these 10,000 to 15,000 projects, many of them will not survive. They're like venture capital investments. They're not going to survive. But there are also a fair number of small pump and dump schemes and other things in this. And of course, we've lived through a few years where, they became notorious, but they're in jail. The Sam Bankman-Frieds and the CZs and the Do Kwons, where tens of billions of dollars were lost by investors.
Gary Gensler in conversation with Bloomberg's David Gura. Really something, Kaylee, you covered Gary Gensler in the SEC for some time. You used to help to anchor our crypto coverage. Fascinating to hear him talk about building on what Chair Clayton did in the prior administration.
Yeah, trying not to cast all of the blame entirely on himself, as he obviously has drawn a lot of ire from the crypto industry, which is facing a different reality now that Paul Atkins presumably will be confirmed to be the next SEC chair. And a lot of things that Gary Gensler pursued could meet their end under an Atkins SEC, including climate disclosure, some of the rules he had proposed for hedge funds and others.
Seems happy, though. Seems relaxed.
Yeah.
He's packing up the office.
Spurs.
You can see our full conversation, of course, by the way, on the internet, on the terminal, and check out David Gura's Big Take podcast. We'll have a lot more of their conversation, in fact. We've got our eyes on Capitol Hill, Kaylee, where Donald Trump's motorcade has arrived. For the meeting that we've been describing, there's a live view of the carriage entrance at the U.S. Capitol. Donald Trump and his advisors arriving for a meeting with Senate Republicans, but expected to pay respects to Jimmy Carter, still lying in state in the U.S. Rotunda. We'll have special coverage tomorrow. Jimmy Carter's funeral at the National Cathedral here in Washington. Coming up on Balance of Power, President-elect Trump asking the Supreme Court now to intervene in his hush money case sentencing. We'll take a closer look ahead on Bloomberg TV and radio.
It's this ongoing challenge of what do they charge that's right for their business model. 90% of what they're going to make in life is coming from the road, so it's their financial business. But where do they find that line where it's accessible, the fan feels connected to them, they don't feel like they're over-gouging. And it's slowly moving up over time, and that creates a lot of the social news and tension that exists in that what is the right price that you can deliver supply to demand and keep fans happy.
Right. And you guys end up sort of having to bear the brunt of it, even though, as you like to remind people, you don't actually set the pricing. And but when I say you guys, I mean Ticketmaster.
Our job is ultimately to put that show on, figure out how to sell and fill every seat, and yes, probably take the punch in the head when someone's mad about the price, or we kind of live in this rinse and repeat every 10 times a year, let's call it, just to reset the game here. 95% of shows don't sell out. You don't hear about those. Those are priced under $100. Everyone is happy they got a ticket. There's no drama. Unfortunately, those 10 times a year, when you have 10 million people trying to buy 1 million Oasis tickets, there's no nice way to tell 9 million passionate fans, sorry, the store is closed.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Because I did nothing wrong. By the way, I did absolutely nothing wrong. If I did something wrong, I wouldn't be standing here right now because I've won all these cases. Nobody's ever won so many cases as I have against the Justice Department. I mean, Jack Smith had cases all over the place.
Donald Trump yesterday at Mar-a-Lago, his news conference, as the president-elect now asks the Supreme Court to halt his hush money case sentencing, which is currently set for Friday. This is new today. Joining us, Deanna Paul, associate at the law firm Walton, Mocht & Heron, former assistant district attorney for New York. Deanna, it's been a minute. Welcome back. We'll pick up where we left off here, I guess, in terms of Donald Trump's legal saga. But this is an important development today. What does it mean for the sentencing on Friday?
It means that we have to wait and see what the U.S. Supreme Court does with regard to the sentencing Friday. I think there's a reason that they say justice delayed is justice denied. Justice Merchan from Manhattan, he said in his ruling that, jury verdicts are really important, and jury verdicts are the first step in the appellate process. And so the conviction is really what is key here. And in order for that to become finalized, the sentencing needs to happen. Then the president-elect has 30 days to file an appeal. But without that, it's not final. And so this status as a felon can't really move forward and become a finalized status without the sentencing on Friday.
Which might be exactly what the president-elect is trying to avoid here, Deanna. And yet prosecutors had suggested it would be okay to put this off until Trump is out of office. And so I do wonder if this does happen now and this process plays out while he's still president, is it really going to go anywhere when he will literally be sitting in the White House for the next 4 years?
Nothing will happen while he's in the White House for the next 4 years. One of the arguments that his attorneys actually made both in their arguments to the New York court as well as to the U.S. Supreme Court, is that presidential immunity should apply to him as the president-elect. It's a novel, it's a novel argument. It's never been raised before. We've never been in a situation like this before. But the notion that he shouldn't be taken away from transitioning into the presidency because he needs to prepare for this criminal sentencing is somewhat of a ridiculous idea. He was found guilty in May. So that's, 6, 7 months ago. He's had more than ample time to prepare for his sentencing. And Judge Merchan has made it clear that he's sentencing him to an unconditional discharge. And what that means is that there's no strings attached. He's not going to prison. He's not going to have to pay a fine. There's no probation. He's literally a free man after sentencing on Friday. And so there's no time from the president-elect's schedule that will be taken up, but for the sentencing on Friday.
Well, so are we to believe then that 4 years from now, presuming he is only going to serve another term here, there'll be authorities waiting at the gates of the White House to extradite him to New York?
Not extradite him, but, administrations change, judges change, the priorities change, and in 4 years, it's hard to imagine that this case will just be kind of sitting around in 4 years waiting to sentence the then former president to an unconditional discharge.
Of course, this is not the only development or potential development we're watching when it comes to the legal issues of the former president. There's also been, in the last day, a lot of news surrounding whether or not the special counsel, Jack Smith, is going to be able to release a report on his findings of the federal investigations and ultimately indictments of Trump when it comes to both the classified documents case in Florida and the election subversion case here in Washington. Deanna, how exactly is this going to go from here? The DOJ has suggested it wants to release just the election subversion part after the judge in Florida blocked the release of the documents part. But is this ultimately up to an appeals court? Can the DOJ act unilaterally here? What's going to decide whether this comes out?
I think this is a question that a lot of people are asking. What it really comes down to, the president-elect he always has been very skilled at using the legal process to delay things. He did it brilliantly with the Manhattan case. He's, delayed the sentence up to the point where we're days away from his inauguration, and that might, inevitably delay the sentencing forever. And the same thing with the Jack Smith case and, his other litigations.
Well, what happens to a special counsel report that is complete but never sees the light of day? Is there some warehouse like in Raiders of the Lost Ark where this goes? Do they delete it? Or do we see this in some sort of book years from now?
Probably in some sort of book or in some sort of library. At some point it will be released at some point. We saw something similar with Matt Gaetz recently, but I don't have the answer for that. I don't think anyone really has the answer for that as we're sitting here today. But hopefully this does get resolved before Inauguration Day, and Jack Smith is able to release the report, since that's what he thinks the just thing to do is in this matter.
Well, we still have 12 days to go until Inauguration Day, but on Inauguration Day, the president-elect has promised pardons for those convicted of crimes related to the riot at the Capitol on January 6, 2021. This is something that House Minority Leader Hakeem Jeffries spoke about today on Capitol Hill. This is what he said, Deanna, and we'll have you respond.
Pardoning a violent mob that attacked the Capitol as part of a concerted effort to halt the peaceful transfer of power, seriously injured more than 140 heroic police officers, threatened to hang Mike Pence, assassinate the Speaker of the House, and hunt down members of Congress is the height of irresponsibility.
Deanna, you used to be an assistant district attorney in New York, and I wonder, as a prosecutor, your view on what mass pardons like this for people who in some cases were violent offenders, assaulting police officers, what that would potentially signal to people who would be thinking about that kind of behavior in the future as to whether or not it is appropriate and they would face repercussions for it.
I think that we're living in an unprecedented moment where hearing things like that, and at the same time hearing the president-elect and other people talk about weaponizing the justice system, are very much at odds and are not the things that we think of when we think, as certainly as a former prosecutor, that your job is to do justice, and the different ideas are very much at odds with each other.
I'm curious, Deanna, there's a question about whether Donald Trump goes with an across-the-board pardon on the J6 offenders, or whether they go case by case. Do presidential pardons, if it's a case by case situation, person by person, do presidential pardons provide precedent potentially in court for the others?
As in for future presidents in office?
For the rest of the J6 rioters, if they're not all pardoned, could they not use the example of the other pardons to help their cases?
They can certainly point to it in court. I think a presidential pardon is something that the president does, but they can certainly go to court and argue that this happened for people in similarly situated positions. So
yeah,
I don't think it would be good precedent.
All right, Deanna Paul, associate at the law firm Walton Mackin Heron. Thank you so much. Of course, also former assistant district attorney in New York. We appreciate your time. Coming up, we'll have a preview of Donald Trump's meeting with Republican senators this evening. Our political panel will join us next on Balance of Power on Bloomberg TV and radio.
You talked about how governments are not looking at healthcare and investing in healthcare as much as they should. What's the message you'd like to send to those governments?
Well, I think a healthier population is always going to be more productive. It's just that sometimes the political will isn't there in some of these countries. So I hope that they can keep this as a priority, because a workforce that is 20 or 30% down during a pandemic or an outbreak, or there's certain diseases that keep spreading, is not healthy, it's not productive. And if you want everyone to perform at their best, and you want healthcare costs to be down, you don't want to be burdened with insurance costs and other costs, I think it's important to invest early in health, in child health, in women's health, and I hope that continues both in India and other parts.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Welcome back to Bloomberg TV and Radio. This is Balance of Power live from Washington, D.C. I'm Kaylee Lyons alongside Joe Matthew. And we have our eyes on Capitol Hill this evening, where President-elect Donald Trump arrived just moments ago, as he is expected to pay respects to former President Jimmy Carter, who's currently lying in state in the Capitol Rotunda, and then head into a meeting with Senate Republicans about the path forward for his legislative agenda. So joining us now for more on that note is this evening's political panel, Maura Gillespie, founder and principal at Blue Stack Strategies and Republican strategist, alongside Kevin Walling, vice president at HG Creative and Democratic strategist. Welcome to you both. It's great to see you here. Maura, if I could come to you first as the Republican on this panel. Republicans don't seem that they are entirely aligned on how they want to pursue immigration, energy, and tax reform. And it doesn't seem like Donald Trump is of a firm mind on this either. How quickly can he actually come to a decision? Do you think it could happen tonight?
I think that it's really important they have these conversations in private. I wish they had done this previous to making any announcements about a great one big bill or two bills. You know, that's a conversation that needs to be had internally. I think it adds to the confusion and then this idea that Republicans can't get it together and they are chaotic when they have these public disagreements. And so it's really important they're having in-house conversations right now about what the path forward looks like and how to get the votes they need in such slim majorities that they have here in Congress moving, looking ahead. They need to get a bill done. And I do believe that this first year for President Trump coming in is the most crucial. And so how can he get a win on the table, put a win on the board soon? It's, this is where that really is the focus for both president and for Congress.
We spoke earlier today with Patrick McHenry, former Republican congressman, used to chair the House Financial Services Committee. He's seen this movie before. He says if Donald Trump wants one bill and tells them, they'll get it done. Have it in two bills, they'll get it done. But if he doesn't tell them anything, nothing will get done. They need direction, is the idea here, Kevin. Will they get it tonight?
Well, potentially we'll see that play out tonight with the president right now, with breaking news that he's on Capitol Hill. I think to Mara's point, you do have that divide. Obviously, Mike Johnson, Patrick McHenry's former colleague, wants one bill, and the Senate is looking at more likely two bills to break out the border, energy, and taxes. But it is a question of what can pass. I think there's universal agreement from what I've seen on the Republican side that the House needs to move first, and the Senate will react to that through the reconciliation process. But to Mara's point, a lot of this has to happen behind closed doors. I think you see a more engaged, more serious Republican caucus. You saw it right after they were sworn in. They went to Fort McNair here in D.C. for that retreat to talk through this process, because timing is of the essence, because then we're going into March with government funding deadlines, the debt ceiling deadlines. There really is a short time frame for them to move either this first bill or two bills.
Donald Trump is just speaking to reporters on Capitol Hill right now, saying we're looking at one bill versus two bills. Whatever we do, it's going to be great. We'll get it done. So I'm not sure we're provided any more clarity with those statements. We'll see if this changes throughout the course of the evening. My question is, Kevin, we've been framing this as basically something entirely for Republicans to figure out, and that only Republican votes will be advancing this legislative agenda. But we saw more Democrats yesterday voting for an immigration-related measure in the House, the Laken Riley Act. There's tax reform measures and a SALT cap potentially being lifted. That could be good for blue states like New York and California. Should we entirely count Democrats out of this equation?
It's a really great question, and you saw those 9 Democrats sign on to the cloture vote. I think they're gonna bring that up for conversation. It was on Friday. Now it's moved to Thursday, and you saw Hakeem Jeffries, the leader of the Democrats in the House, signaling in his introduction of Mike Johnson when he passed the gavel to him a willingness, as long as Democrats are at the table, to be involved in that process. Mike Johnson's majority is about to get a lot smaller by 2 seats come January 20th, and this new administration taking over. So I think it's in their interest to bring Democrats to the table to get something done, similar to what we've seen with government funding fights in the past.
Just want to mention quickly what we're looking at here, a live view of the U.S. Rotunda in the U.S. Capitol, I should say. President-elect Donald Trump and First Lady Melania Trump have arrived at Jimmy Carter's casket in the middle of the reviewing here. This is a moment that we didn't necessarily know was going to happen in advance of his meeting with Senate Republicans. As we look at that live view, the catafalque, the platform that is holding the casket right now, the same one that was used for Abraham Lincoln, there is great history and tradition at play, which is something that we wanted to take a moment to bring you here on Bloomberg. As we spend time with our panel, Kevin and Maura Gillespie, he's going to go from here into this meeting. He already, by the way, spoke to the Speaker of the House. You worked for a former Speaker, John Boehner, and there is always a concern about being jammed by the Senate. Who goes first?
You know, it's going to be a matter of who has the plan, like you just talked about, who's got a path forward. Because I think when you're breaking it down by issues, yes, a lot of these members, there are ways to work together. Several of the members that you mentioned, the Democratic Party, their districts were won by President Trump. So they're going to look for ways to find common ground. They're going to want to support a package that helps their constituents as well. Because I think a lot of times we find ourselves, it's easy to silo, and a lot of the conversation has been all Republicans need to get on board with whatever plan it is. Yes, but there should also be an openness, as Kevin pointed out, to engage with members across the aisle and to find ways to bring them over, because I think if you do end up doing one big bill, you may lose some of those Republicans. And so you're going to want to find things that can entice Democrats across the aisle to come on board and to vote for that package. So, you know, whichever side comes with the plan first, that's what you're going to see going forward.
Well, we also have questions about whether Democratic votes are going to be there for some of these nominees for the second Trump administration that are beginning their confirmation hearings next week. We've got Marco Rubio on the deck. Pete Hegseth is going to be getting his hearings on Tuesday. Maura, all of this just days ahead of Donald Trump's inauguration. Is this going to go smoothly, or is this going to be the first taste of potentially a nominee who can't actually make it through the U.S. Senate?
I think Marco Rubio's smooth sailing. You know, there are a couple that have not raised any flags, and you've heard Democratic senators who said, yep, they've got my support. You know, we'll still go through the process of the hearing, but I don't see any issues coming, you know, ahead of it. That's for, you know, a nice majority of them, but there are a handful that have not had successful meetings on the Hill. Their Senate meetings have not gone well. I'll say that a couple that I've heard of are Tulsi Gabbard. Kash Patel is a concern for many. And yes, Pete Hegseth and his stance on women in combat is a problem for not only Democratic senators, but Republican senators as well. So I think that it won't be a sure thing to get them all through. And even with the threats of primaries, some of these senators, they're not up for re-election until 28, which is the end of the Trump term. So it's going to be tough for a few of these nominees, but by and large, you'll see them get through.
Well, based on the 33-page letter issued by Senator Elizabeth Warren that included the 72 questions she would like to ask Pete Hegseth in the Armed Services Committee hearing next week, it's going to be a ripper. When you start looking down the line, though, John Thune needs your help, Kevin. He says, Democrats tell me the one or two I can confirm on day one. That seems to be the Secretary of State incoming here, Marco Rubio, and Elise Stefanik, ambassador to the UN.
And likely John Ratcliffe, too.
Will they get that done?
I think so. I think they'll get those three by day one. Obviously, this was a priority of the Trump transition, right? He wanted a fairly full cabinet in place. And to Mara's point, you have a lot of Republican institutionalists, right? You have a lot of issues with paperwork not being turned in, for example, waiting for the FBI background checks. You had a meeting yesterday of the Republican Senate caucus where they talked about this very issue, whether we're going to proceed, especially those committee chairmen, with these hearings. And there was a lot of pushback in terms of wanting a full picture of these candidates with their FBI background checks. I think those three will likely sail through on day one. Saw Bill Cassidy raising concerns now as the incoming chair, as the chair of the Help Committee with RFK Jr., for example. So I think you had all these ambitions with the Trump transition, naming all these folks very early on the process. We talked about this last year, late last year, with all the flurry of nominations.
Rapid fire.
And not many of those folks will actually be in place come January 20th.
Well, we'll have much more coming up with Maura Gillespie and Kevin Walling. Our panel stays with us as we move our conversation to President Biden's recent interview with USA Today. The exit interview, what he had to say about the election. It's next on Balance of Power on Bloomberg TV and Radio.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
This is Balance of Power on Bloomberg TV and radio. Thanks for joining. I'm Joe Matthew alongside Kaylee Lines in Washington. We're spending time with our panel as President Biden sits for an interview with USA Today, the big exit interview, saying that he believed he could have won the presidential election in November based on polling that he saw. When asked directly, though, for more, if he had the vigor to serve another 4 years as president, he responded by saying in part, quote, "I don't know. Who the hell knows? So far, so good. But who knows what I'm going to be when I'm 86 years old," unquote. I guess that would go for all of us as we bring our panel back in, Maura Gillespie and Kevin Walling. That was the problem, though, Kevin, right? He couldn't promise the American people where he'd be at 86 years old.
Yeah, I mean, this was the interview with Susan Page was, obviously very candid, went on for an hour. That's a Joe Biden I actually like to see. Who the heck knows if I'm going to be around here? I think that was the Biden that won in 2020, kind of being frank.
But he thinks he could have won again.
God love him, to quote the president, back to the president, if he thought that. I'm not familiar with any polling that showed, especially in the wake of that debate, and I'm the biggest Biden guy out there.
Yes, right.
Who knows how that would have played out, but the polling was not there when the president decided to step back, and I don't think it would ever recover heading into November.
It was interesting as well when he was asked about what he regretted. He actually talked about things that he accomplished, but that no one was going to actually see the fruits of for some time. Things like infrastructure, for example, which was the conversation when he was still in the race we were having at beating a dead horse with, this notion that people were not yet feeling it. Will history reflect more kindly upon him, Maura, than the American electorate did over the last few years?
History tends to. I mean, we look fondly back on several of our world leaders and our American leaders more fondly after they've left office and realizing, how good it was before, and we didn't see it in the moment. So I'm sure there will be aspects of the Biden administration that we currently don't see as being fantastic for us that maybe will be, in years to come. I think that there is a issue, though, with how much time he'll have truly to see that kind of unfold. And we have presidents now that are, with Jimmy Carter's passing, and then you have Biden and then Trump, they're not going to have that much time in their post-presidency life to make a legacy for themselves. So really it does come down to what happened during their presidential years. And that's going to end up being their legacy because there won't be as much time, hypothetically, to really make a mark in their post-presidency years.
That's a great point. Kevin, he referred to the polling that he saw. Do we think he was shown the full picture when it comes to research and polling in this campaign when he was still in the race?
Yeah, I mean, it was widely reported at the time that he has an insular group of aides, and it's unclear, what was breaking through that core group of really loyal folks around the president that had been with him from the get-go. John Anzalone is a dear friend of mine, a political consultant and pollster who was on his first campaign, successful for 2020. He's been with him since the 80s in his first race for the presidency, and not necessarily involved in the re-elect. It was a very top-level driven operation around the president for the re-election effort before he bowed out. And I think we'll get a clearer picture in the months as folks write their books and talk more on the record about their experiences at the end of the Biden administration.
All right, Kevin Walling and Maura Gillespie, thank you so much for being with us. Of course, tomorrow it won't be President Biden's legacy we're speaking as much about. Instead, it will be the legacy, as Maura mentioned, of former President Jimmy Carter, whose state funeral will be tomorrow. Talk about a post-presidency. That is one of the things he will be remembered for, and we'll have special coverage of that state funeral beginning tomorrow at 9 a.m. New York time, and we'll have a special edition of Balance of Power beginning at 12 noon Eastern.
Special day tomorrow. Markets will be closed, but we will be here with important news and hope that you'll join us here on Balance of Power. With Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
After each day, do you look at how they're doing each day, or do you look at them each week, and how much time do you give them before you say, you're not doing so well?
I mean, we look all the time. So, I have screens on my desk that, staring at all day long. But it's not exactly like that. I think one of the things people don't fully appreciate in this model is you're really building businesses. So we look at every strategy as a business. So you have the long-short equity business, or macro business, commodities business, quantitative business, and you have business plans for that strategy. How do you become world-class in that strategy, which is, multi-year, multi-decade, undertaking, and you want to get better and better every year. And so then you go down to the team level. What team do you need to have this particular exposure? What is their edge? How are they going to get better year to year, month to month, right? And so then you go to the hiring of the team, the analysts, the infrastructure, the risk management, and you're constantly trying to improve the process and the people in each of those facets all the time. And so you're always looking at them on an absolute basis, how are they doing, and on a relative basis to other people in that strategy, and you're evaluating it, every quarter, every year. But to answer your question, we usually look for a couple years of performance to make people decisions, unless something is really off.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones. I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're
do it for fun.
Ready? Go.
Morning from our world headquarters in New York. I'm Manus Krenning.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
This is the Asia Trade. I'm Paul Allen in Sydney, where markets have just opened.
I'm Heidi Stradwatts. The top stories this hour. Asian stocks are set for a cautious open as traders look to Friday's US jobs report. The latest Fed minutes showing officials are eager to slow the pace of rate cuts. Treasuries rebounding on a solid 30-year auction.
A Bloomberg scoop. The Biden administration set to further limit exports of NVIDIA and AMD AI chips in a final salvo against China's tech ambitions.
Also ahead, we're live at the Malaysia Economic Forum in Kuala Lumpur to hear exclusively from the country's finance minister and the Maybank Group CEO.
And I'm Min Min Lo at the Morgan Stanley Asia Wealth Summit in Hong Kong, where we'll speak exclusively with the bank's wealth management head, APAC Wealth Management Head Vincent Chui, about their key investment themes in 2025.
Let's take a look at some of the key themes when it comes to today's investing agenda and how traders will be watching. And we've, of course, got sort of the end of the week with the US data that, of course, we're going to see sort of potentially, real meaningful implications for what we're seeing across bond and FX markets. But for China, we're also getting CPI numbers as well. And, of course, this sort of, big promise of heavier stimulus as we headed into the end of the year hasn't quite sort of materialized yet in terms of meaningful economic support. We've had those PMI numbers, for example, that were quite a drag as well. And this set of CPI numbers really comes as we, get into, I guess, sort of the danger mentality, right? Is this the start of a deflationary spiral? Is China already in that confidence spiral? We know how hard it is to sort of pull it out, not to sort of overdo comparisons with Japan, for example, but that confidence, the deflationary mindset is really front and center here. Bloomberg Economics basically saying that we're seeing, no inflation. So quite a bit of this lingering deflation risk is what's at stake here for China.
Yeah, deflation definitely a live issue there, and inflation still a very much a live issue in the United States. We were looking forward to getting those Fed December minutes in terms of just how close that decision was to continue cutting rates, and it was close. The minutes show an eagerness to slow the pace of easing due to those higher inflation readings, strong spending, reduced risks to the labour market. The economy in the US is looking strong. So we had a number of Fed members in those minutes, including placeholder assumptions in their projections about upside risks to inflation going forward. All of that said, though, the Fed Governor Chris Waller sees inflation continuing to cool, and he supports more easing. Let's hear what he had to say.
My bottom line message is that I believe more cuts will be appropriate. If the outlook evolves as I have described here, I will support continuing to cut our policy rate in 2025. The pace of those cuts will depend on how much progress we make on inflation, while keeping the labor market from weakening.
Well, it was a pretty subdued day for US markets. We did have the S&P up modestly. We see futures a little bit softer going forward. The Nasdaq was pretty much flat, and Nasdaq futures also looking a little bit softer as well. You mentioned it was a strong US 30-year auction. We did have the 20-year yield briefly touching 5% as well. But US equities cash markets going to be closed tomorrow. It's a national day of mourning for Jimmy Carter. Take a look at the oil price. It slipped after failing to breach the 200-day moving average, but short-term fundamentals do suggest a tighter market going forward. US crude inventories fell by almost 1 million barrels, and of course there's a cold snap in the US which suggests stronger demand, but longer term the market's still tilted towards oversupply. Heidi.
Yeah, cold snap, but of course we're also watching those terrible wildfire developments in LA as well. But Paul, this is a setup as we get into the start of trading this Thursday session. Caution is the name of the game, isn't it? We have Aussie stocks coming online just in the first few minutes of that staggered open, about 0.25% softer there. Really looking pretty muted across the region. Wall Street traders really refraining from any big bets, and that looks to be the trend as we head into Asian trading proper.
Well, the Biden administration's planning further restrictions on the export of AI chips from the likes of NVIDIA and AMD, and this is in a final push to keep advanced technologies out of the hands of Russia and China. For more on this, let's bring in Bloomberg's Mackenzie Hawkins. So, Mackenzie, in terms of the new regulations, there's going to be 3 tiers of restrictions. What are the details?
So basically, for the past several years, the United States has been restricting the shipment of advanced semiconductors to a host of countries with a pretty heavy focus on China. And over the past year, you've seen the scope of those controls begin to expand. The latest rules, which are set to be published as soon as Friday, cover chip shipments to the entire world. There is a small group, a tier 1 group of the U.S. and 18 allies that would be relatively free to ship AI chips to data centers in those countries, which include places like South Korea, Taiwan, and Germany. Then there's a very restricted list of about 24 countries that includes places with which the U.S. has an arms embargo. Think China, Russia, Iran. But everyone else, so most of the Middle East and Southeast Asia, large parts of Latin America and Africa, fall into Tier 2, where there's a maximum limit on the total amount of compute that can be shipped to any one country. But companies headquartered in those places can apply to bypass that limit if they meet U.S. security and human rights standards. So it's a super complicated rule. Basically, the U.S. is trying to control and have an American footprint on the diffusion of American AI chips around the world as countries race to build their own AI capabilities.
Mackenzie, given that sort of being tough, the hawkishness towards China and some of these other foreign players is sort of quite widely supported, depending on, regardless of which side of the aisle you're talking about, are we expecting that these measures will stick around even in the Trump administration?
It's certainly hard to say. Trump is an unpredictable character, but there is bipartisan support for this type of movement in Washington. We saw the bipartisan House Select Committee on China, the top Democrat and Republican, writing to the Biden administration in support of these types of rules. Pottinger, who was Trump's deputy national security advisor, wrote an op-ed in the Wall Street Journal earlier this week in support of this type of framework as well. But time will tell when Trump takes office on January 20th.
Bloomberg's Mackenzie Hawkins there. And as we mentioned just a few minutes ago, we do get China's December inflation numbers in a couple of hours' time. Economists expecting CPI to have weakened closer to 0. Meanwhile, the latest Fed minutes showing that officials are deciding to slow the pace of easing on these elevated inflation risks. Bloomberg's global economics correspondent Enda Curran joins us now for more. And so, very much a tale of two economies and two very different situations. But let me start off with China, because we're having a big conversation about the sort of whether China is looking down the future of being potentially repeating what we've seen in Japan. That deflationary spiral, the sort of confidence trap, is there evidence that the Chinese economy and households are already stuck in it?
Well, today's numbers are expected to confirm, Heidi, like you say, that the China inflation story really isn't going anywhere. Consumer prices heading back towards 0 territory. Producer prices already negative. And that suggests a couple of things. Most importantly, that all of the policy traction that the authorities have tried to push through, all the policy measures the authorities have tried to push through the economy over the past few months haven't yet gained traction. And that's going to be a real worry for the rest of the world as well, because there is some concern that China might become a significant source of deflation. Now, that's politically sensitive in terms of, we know, the overcapacity debate and China exporting goods at cut prices around the world. So there's a global spillover angle there as well. But there's also the economic growth angle in terms of if China continues to stutter, that's not great for the rest of the world. Now, within the numbers, there's obviously some seasonal impacts. There's the impact from vegetable prices, as always, around this time of year. But I think for the rest of the world, looking at the China inflation data today, it does not suggest the economy is gaining traction. And it does suggest there's a lot more pressure on the authorities to put more money and support into the economy in the year ahead.
Yeah, so as Heidi suggests, is this idea of Japanification still avoidable, or is China already there in some respects?
Well, obviously, you know, it's a popular talking point. The evidence does stack up, at least on a kind of a, you know, headline basis. You look at demographics, you look at the real estate story, you look at where the debt trajectory has been going. But the authorities do have significant levers still to pull, Paul. I mean, they have said this year, for example, they're going to put a lot more money into the economy, and they're probably expected to still set a fairly ambitious growth target, suggesting that even leaving aside the skepticism around those numbers, it suggests they're going to have to put some real support on the ground. The NPC in March, I think, will be critical as a signal both for China's own people and for the rest of the world, just how serious the authorities are. But let's not forget that, you know, they probably are holding their powder dry because, like everybody else, we're waiting to see what specifics come out of the new Trump administration in terms of China policy, tariffs and trade restrictions and everything else. So they're probably holding to see what comes out of that. But by all accounts, there is a lot of attention on the NPC, and the authorities are expected to show that they're going to spend a lot more money this year to prop things up.
And of course, we're very closely watching the Fed. What did you make of, I guess, the sort of nuance in terms of where they're likely to go and kind of resetting the expectations for the pace of easing this year?
I think Heidi, the minute today, confirmed that the Fed now want to, you know, probably go and hold for a while. They've cut by a full percentage point since September. These minutes were for the December meeting when they cut by 25 basis points. By all accounts, the officials were getting a little bit uncomfortable about that because things are holding up pretty well here. There's still pockets of services inflation that hasn't gone away. The jobs market is fairly robust. We have figures coming out on Friday morning expected to show unemployment holding steady in the low fours, 160,000 jobs added in a month. That's pretty good. And we had some numbers on the services side of things this week showing pretty decent expansion there. Some people saying the manufacturing side of things is probably bottoming out as well. So all told, the economy is holding up. There's certainly a school of thought that they don't want to be cutting much further from here until they start to see inflation get back on that trajectory back towards 2%. But, you know, that's the here and now. We know we're going to significant policy change in just 2 weeks from now. It will be a new administration. They will be pulling different levers. Near term, it's not expected to completely upset the positive growth story for the US. But, you know, second half of this year, maybe into next year, people are warning there may be more inflation pressures building, and the Fed are signaling that they're ready to go and hold down. Just wait and see how things play out in the coming months.
All right, Bloomberg global economy correspondent Enda Curran there. Well, advisors to President-elect Donald Trump are said to be considering Michelle Bowman as the Fed's next vice chair for supervision. Michael Barr has said he will step down from the vice chair role while retaining his seat on the Fed's board of governors. Trump's advisors have also begun drawing up a short list of potential replacements for Chair Jerome Powell. His term ends in May 2026. Heidi.
Still ahead, Paul, destructive winds are fanning wildfires in Los Angeles that have forced thousands of people to leave their homes. We'll bring you a live update from the scene next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Take a look at what we're watching as we head into a pretty muted start to trading here in Asia. In fact, we're seeing Australian stocks extending losses of about 0.6%, lower there in the first 15 minutes or so of trade. Chicago Nikkei futures also looking pretty lackluster there as well. S&P futures also looking like we'll see that tone of caution as we head into the end of the week with potential for a jolt from those jobs numbers. Well, Morgan Stanley is hosting its annual Asia Investment Conference in Hong Kong. It brings together investors, top leaders in business and finance. Our China correspondent Min Min Lo is there and standing by with our next guest. Min Min.
Hey Heidi, joining me here is the head of Asia Pacific Wealth Management at Morgan Stanley, Vincent Chui. Vincent, so great to be here today at the 10th anniversary of your event. I understand you're expecting a very good turnout today, 400 investors from around the region coming here. And I want to start with the big picture first because we are about 1.5 weeks away from Trump's inauguration. Markets are bracing for a lot of volatility this year. So where are your high net worth clients looking to put their money in this year?
So first of all, thank you for coming to our Asia Wealth Summit. This is our 10th anniversary. It's a very big event for us. 430 investors, more than 60% of them are not based in Hong Kong. So we are happy to welcome them to Hong Kong. Now, yes, I think we are entering into a period of volatility, but at the same time, the macro environment is actually pretty robust, particularly in the US. For people in this part of the world, particularly in the ultra-high net worth asset owners segment, I think they're very much focusing on how to diversify and hedge their risk in this part of the world, since many of them are entrepreneurs. So for them, actually, that diversifying into the US, into the high growth sector like AI, like healthcare, is critical for them.
Okay, so it looks like that US exceptionalism story is still very much at play here, but some are saying that the fact that S&P actually did really well last year, over 20%, notched so many record highs, is that going to actually be a hurdle for us to see further upsides there? And also, are your clients worried about tariff risks at all?
I think that when we look at global markets, particularly in the US, is no longer as important to look at the index, S&P. I think within S&P, actually, that you have this distinction between the high growth sectors and relatively speaking, lower growth sectors. If you look at the high growth sector, coming back to the what I mentioned about AI ecosystem, healthcare, and also digital asset, for example, those are super growth area, which I think can justify the valuation to continue to expand. Now, on the other hand, you're absolutely right. Many of the relatively speaking lower growth sector, which benefit from S&P rating actually expansion, they might be at risk. Now, tariff, yes, it will affect many of the Asian companies, but at the same time, I would argue that many of the policies which is being pursued by the new administration will bring, perhaps, relatively speaking, better political stability in this part of the world. So you have to counter both the balances. But coming back, think about Asia Wealth, where they want to send their money. Yes, for their business, they might actually that they have to think about the challenges of tariff. But for their own personal and family wealth, they can diversify away.
Okay, and we can't be in Hong Kong and not talk about China. And over the course of last year, we have seen foreign investors pull huge amounts of money out of China. And you add to that this year, there is depreciation risks as well. How are you advising your clients to position for China?
Well, I think when you look at the market, of course, you have to look at the economics, you have to look at company fundamentals, you have to look at valuation as well. Our view is that China is, at this point, very inexpensive, and I think the Chinese market and the Chinese policies are coming to the stage there where I think that we are bottoming out. But at the same time, when you think about investing, you have to look at relative opportunities. So yes, China is bottoming out as a market, but at the same time, from a global investor perspective, the U.S. is still providing better growth-adjusted return. So therefore, I think opportunity cost-wise, I think that China will take a bit more time to attract global investors.
I want to speak a little bit about your line of business, because in the private wealth business, we have seen last year, for example, many banks going through restructuring and layoffs. Do you think we are at the end of that cycle now, and are you looking to hire this year?
I think the cycle or the secular growth of this sector, particularly in the ultra segment, is still very strong. In the affluent segment, is still very strong as well. So, but I think there is a observation of what I call the wallet concentration. I think over the last few years, I think investors have learned about the importance of counterparty risk, about focusing on large institutions. So therefore, when there is crisis in the market and when there's incidents in the market, people actually stick to the larger players. So my observation, indeed, I think there has been some restructuring within the sector among some players, but I think the top 5, 6 players, global and local, I think are doing very well. But if you are the smaller players, subscale, it's actually quite difficult, despite the secular growth in this sector, to generate profitability.
So what are you looking at in terms of actual growth in assets under management, for example, not just in terms of valuations, but new clients, new money coming in?
Well, we are in a very, I think, fortunate position. We focus on the most important ultra-high net worth segment in Asia. We have 140 RMs. I think most of them are very market savvy and very experienced people. I think it helps those clients to diversify their risk away from the region if that's what the clients want. Well, for us, actually, that if we can grow from 140 to say 200 RMs in the next few years, I'll be a very happy man. I think in our segment, that's perhaps the right number. But I think for many of the other players, I think it is challenging in terms of justifying the cost expansion and trying to find the profitability.
So which market in Asia do you think is best primed for growth in terms of wealth? Just very quickly.
Without any doubt, Greater China region.
Okay, thank you so much. That was Vincent Trey, head of APAC Wealth Management at Morgan Stanley. Back to you, Heidi.
I'll take it from here, Min Min. That was our China correspondent, Min Min Lo, at the Morgan Stanley Asia Wealth Summit in Hong Kong. Wildfires in California have killed at least 2 people and burned some of the wealthiest neighborhoods of Los Angeles County and forced tens of thousands of people to leave their homes. We can cross now to ABC News reporter Alex Stone, who's in Altadena. So, Alex, what's the latest?
Well, we just got an update that now 5 people are dead on this wildfire, with many more who have burn injuries that they were unable to get out early this morning and late last night when the fire was exploding. You can see behind me, firefighters have just really knocked down what was a raging house fire here, and they're having to do it with only one engine 116 there, that typically you would have many more engines battling a house fire, but they just don't have any more resources and no more water to give as they're waiting for help to arrive. This has been continuing to move, even though the winds have calmed down considerably since this morning when it made it so difficult for people to get out. Still, the fire has been moving from home to home and neighborhood to neighborhood, and many homes have been burning. So there is a lot of work left to go. Still, there is help arriving, coming in from other U.S. states that will be coming here to help out the local firefighters. But for now, it is a lack of manpower. They don't have enough engines. They don't have enough firefighters.
Alex, we're here in Australia where it is also wildfire season, but that's because it's high summer. Is this sort of condition that we're seeing in LA unseasonal, and how quickly could we expect it to ease and perhaps people start to go back to their homes?
Yeah, we're in winter right now. This should be the rainy season here in LA, and it is not. And so this is not normal, but there really is not one fire season here in LA any longer. It is year round. And so we do see fires in January and in February. But for something like this would be unusual at the height of fire season, let alone for this to be in the middle of January. This is pretty unprecedented in a number of different ways. The 100-mile-per-hour wind, it happening at this time of the year, people unable to get out. There are so many aspects of this that is not a normal fire here in LA. And firefighters, they say that there is no end to the fire season here in LA any longer.
Alex, you mentioned earlier that there is a water shortage as well. How much of this is due to drought? How much of this is due to poor planning?
Well, the last couple of years, this area had actually gotten a fair amount of rain and was doing quite well. But this is a dry year this year, and the rain from the last couple of years, it was not helpful in this because that caused a lot of the brush to grow high. And without the rain this year, that is now dried out, and a lot of that is burning. But this comes down not so much to, how dry it is plays a role, but this is really about how windy it has been. The 100-mile-per-hour winds this morning, there was no way that firefighters could stop anything in that kind of wind. It was incredibly dangerous, moving much faster than humans can run, and there wasn't anything firefighters could do.
ABC News reporter Alex Stone there joining us from Altadena, California. We appreciate your time and please do stay safe out there. Another story that we're following this moment, and relief teams in Tibet have shifted their focus to resettling survivors of the earthquake that killed at least 126 people and injured almost 200 others. Tents, quilts, stoves and other relief items are being delivered to people whose homes are uninhabitable or unsafe. State media reporting that more than 46,000 people have been relocated. More ahead on the Asia trade. This is Bloomberg.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. It's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, and it's sometimes you look at it and you marvel and you think about, how was this created? And was I the person that was behind getting this thing done?
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Well, let's take a look at how we're tracking on the ASX. The entire index is lower right now, but the worst performing stock is Star Entertainment, off a whopping 23%. The casino has been warning that it's just got $79 million left in cash, which is less than it's spent in the past 3 months. It's struggling to attract customers and cut costs as well. Star sent a statement to the ASX on Wednesday. It has spent $107 million in the 3 months to the 31st of December. Star operates casinos here in Sydney, Brisbane and the Gold Coast as well. We have more ahead on the Asia trade. This is Bloomberg.
loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The top names in business are on Bloomberg.
The question is, if you lower taxes and use it to reduce the debt, the question is how stimulative those activities are, and that's where the Treasury Secretary appointee has got to figure it all out, because he's got to call the balls and strikes about how it all fits together. We got to realize that the impact we have if we don't get this debt back in line.
Nobody covers business like Bloomberg. Context changes everything.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Take a look at what we're watching when it comes to some data just crossing the Bloomberg. Japan labour cash earnings, they're coming through a rise of 3% for November year on year, beating estimates of 2.7%. We're seeing real cash earnings falling, though, 0.3%, a little bit less of a decline than the over 0.5% fall that was being perceived by economists. Cash wages from the same sample seeing a gain of 3.5%, and the same base regular full-time pay at a gain of 2.8%. There as well. So potentially when it comes to the same sample gauge that's closely watched by the BOJ, seeing perhaps a little bit of a surprise there, and how the BOJ will potentially translate that. Wage growth, though, broadly accelerating in November. We had that annual increase in minimum wages and also just a broadly tighter labour market there as well. Bloomberg Economics saw an increase in cash earnings to really have picked up, and that is in fact what we've seen in these numbers as well. Adjusted for inflation, expectations was to see a little bit more of a wider drop from the previous month there. So really watching the sample changes, given that that is the measure that's preferred by the Bank of Japan, and sort of leads us as we continue to watch for what the BOJ's tightening strategy will be in the new year. Let's bring in our Bloomberg Tokyo economy and government reporter, Erika Yokoyama. So a bit of a mixed bag when it comes to the data. What will the BOJ be looking at, and the broader sort of takeaway from this lot of numbers?
I think today's data are fairly positive, actually, because they are in line with the BOJ projection. Nominal wages, base salaries, and other stable measures are all pointed to the same direction, steady wage growth, and they are beating a consensus as well. So I think this is an encouraging sign for the BOJ as it considers the timing of the next rate hike, including in January. And as you said, one concern is the real wages that keeps falling. But this time is particularly because it's due to the policy factor. The government halted the utility subsidy, accelerating inflation. But BOJ is also looking what's ahead, especially on development related to Shunto wage negotiation underway before making a decision.
Yes, so those are getting very near indeed. How are wage negotiations shaping up so far?
So I've got the impression that the negotiation so far has been quite positive. For example, like some large company, including retail giant Aeon or other life insurance companies, are proposing a 6 to 7% wage hike. But in addition to these early signs, apparently BOJ Governor Ueda wants to see some more one-notch compelling sign regarding the wage trend before making decisions. And actually, we can probably see some signs today as the BOJ is set to hold the branch manager meeting and also release a regional economic report. And we can probably see some further insight into the latest wage negotiations situation, especially at the regional level.
And it's, politically, it's an important agenda for Ishiba too.
Yeah, that's right. Absolutely. So Ishiba has repeatedly said the wage gain is one of his key policy focus. And of course, like public satisfaction over economic state will definitely influence stability and longevity of Ishiba's minority ruling coalition, especially ahead of the upper house election in the summer. And Ishiba has already compiled the economic packages, which includes measures to support the wage gains, and also he's been meeting frequently with business and union leaders to amplify his call. So I think it's now time to see how these efforts have been received by the key players in wage negotiation as well as the public.
Bloomberg Tokyo economy and government reporter Erika Yokoyama there. Let's take a look at how we're setting up. It is looking like a pretty muted session for Japan when we get to the open in just under half an hour's time, as Nikkei futures look pretty receded at this point. Dollar yen has kind of just been sticking around that same 158 handle that we've seen over the past couple of sessions. Potentially, though, the yen could be facing more pressure with the domestic sort of data points very much key here, as well as, of course, these changing expectations of what we could see from the Fed as well. So certainly watching JGB futures there as well. We could see a pretty volatile session. The earnings data that we just went through printing higher than forecast. We also have a potentially challenging 30-year bond auction to be pricing later today as well. Also a little bit from a former BOJ policy board member, Makoto Sakurai, saying that the BOJ will raise rates in March, putting it at about a 70% likelihood, but then expecting a slowdown over the next few years. So, Paul, still a great deal of sort of consternation as to how the Bank of Japan navigates this.
When we do get going in Japan, we'll be keeping an eye on Seven & I as well. Stock-specific story there. Third quarter earnings expected to show an operating profit declining 22% due to a weaker retail business, although we are expected to see signs of recovery in convenience stores in Japan and North America. The actual numbers, though, probably going to take a back seat to the broader backdrop, and this is Seven & I trying to fend off that takeover bid from Couche-Tard. Still no real firm plan on how to do that. Latest now from the corporate front. Bloomberg has learned Constellation Energy is close to acquiring Calpine in what would be one of the biggest ever deals in the power generation sector. Sources say the talks could value Calpine at about $30 billion, including debt. A deal may be announced in the coming weeks. Shares of Constellation plunged as much as 11% on that report before clawing back some of the losses. BlackRock says it's letting go of about 200 employees. That's about 1% of its staff. The job cuts are part of the company's efforts to realign resources, and it comes after it committed more than $25 billion for acquisitions to expand its reach in private market assets and data. The firm says the recent acquisitions will help them hire about 2,000 people this year. Tencent has repurchased the most stock in nearly 2 decades, buying back almost 8 million of its Hong Kong listed shares over 2 days. The stock has taken a hit since the Pentagon blacklisted the WeChat operator for alleged links to the Chinese military. Tencent has said it will work with the US Department of Defense to address any misunderstanding. Coming up on the Asia trade, fears that the standoff over South Korea's impeached president could turn violent as his supporters and security team shield him from arrest. We're live to Seoul next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Malaysia's second finance minister says the country's growth is set to exceed 5% in 2025 thanks to strong foreign direct investments and support from state funds. Speaking exclusively with Bloomberg, Amir Hamzah Azizan says Malaysia's new special economic zone with Singapore will benefit both countries.
It is important to recognize this was not an overnight thing, right? It's been something that both countries have been focused about building alignment, because the most important is to align, to agree that this is possible, and therefore understanding what are the complexities of making it work and what facilitation we can do. And the facilitation could be things in terms of agreeing priority investments that need to be done, facilitation in terms of easing the movement of goods that cross the borders, facilitation in terms of easing the movement of people across borders. And I think that investment that we all did in trying to get that alignment done eases the next stage. Yeah, but if not, it's an idea, then you suddenly run into bureaucratic blockages along the way. The second thing then is actually making sure that incentives which are given, they actually focus about the right things that we want to do. And we saw with the rollout of the GSEZ that tailor-made incentives are matching the desired growth areas in that segment. So in the GSEZ, they've broken down different zones that are prioritizing things such as logistics, manufacturing, digital, leisure and tourism, and all these things. So when incentives are given, they're not given blanket. They're given targeted in order to push that, because then you kind of coalesce the ecosystem in the right form along the way. So I think we've now put ingredients that will facilitate the quick realization of things along the way. And prior years of investments have also come to play, right? Malaysia's infrastructure, whether you talk about roads or rails, are getting better. The connectivity in terms of RTS is growing along the way, and it's building the ease of motion along the way. So again, what's happened is that it's moved from paper ideas to fundamental infrastructure things that are really going to make things activated. So I'm confident that as this thing goes out and announcements are done, discussions are on the ground now to actually realize the first round of investments coming.
But Minister, it is about return on investment. How soon do you think you'll see that return?
Well, I think if you ask people, how did Malaysia look at the data centers, for example, right? 5 years ago, it's very scarce, and I think. But today, Malaysia is enjoying the capacity, actually realizing the growth in the data centers, because we have the availability of power, water, labor, space, and so on. So I think that conditions actually is being built up when we talk about the GSZ. Again, move away from what we put on paper, but understand is the infrastructure, the zoning, the things are putting, facilitating that. And I think that base condition is the big change for Malaysia. And I think from a Singapore point of view, I think there are tremendous benefits whereby both parties can gain in terms of pushing segments of businesses in the right zone and helping complement each other to position both countries better.
And of course, jobs is a focus. 100,000 jobs, highly skilled jobs. How do you think those jobs can be filled? Is Malaysia prepared to fill those jobs?
I think Malaysia is learning along the way in terms of how to accelerate the building good talent along the way. The E&E sector has proven that we can do it. And so when we started in the 1970s, it was a new skill set, right? But over the years, we've added in TVET trainings, we've added in tertiary training and so on. We created pipelines of people that can serve the industry. Now we're trying to migrate that in terms of the same methodology into a JICZ sort of methodology, and we're putting incentives to allow facilitation. So if you see our knowledge worker incentive that we put in, a lower tax rate in order to attract knowledge workers to come to Malaysia in order to facilitate accelerated growth along the way. At the same time, commitment put in order to train locals to be able to support the businesses that are coming up.
Malaysia's second Finance Minister Amir Hamzah Azizan there speaking with Bloomberg's Haslinda Amin. You can catch the full interview at 11 a.m. Hong Kong time on Insight with Haslinda Amin. We do have some breaking news when it comes to these labour negotiation developments with US dock workers. The US Dock Workers Union and port employers have reached a deal to avert a strike. That the parties' pact is subject, though, to ratification, but they have reached a deal to avert a strike. And this deal is in the form of a tentative pact for a new 6-year contract. We've seen sort of some of the details saying that this 6-year master contract, with both sides agree on all items for this negotiation. They continue to operate under the current contract until that ratification. But very pleased, obviously, with the result. That's according to the International Longshoremen's Association. We had been expecting that meeting to come together for this new labour contract. That deadline was set for January 15th. That would have triggered a strike that could have halted half of the country's container volumes. We saw a point of contention being the use of semi-automated cranes at port terminals, but clearly a lot of these sort of issues have been resolved and a tentative pact has been reached. So really averting, Paul, what would have been some significant consequences for the economy, particularly as we've seen retailers already putting in place some contingency plans to minimise the impact on consumers and, of course, pricing and inflation.
Well, let's get to some other stories that we're following. The Chinese government has pledged to deepen its anti-corruption drive across a broad sweep of industries, and this is a sign that President Xi Jinping's campaign against corrupt officials will roll on for the foreseeable future. The nation's graft watchdog ended a 3-day meeting by singling out the finance, energy, tobacco, pharmaceutical, sports and construction sectors, as well as state-owned firms. Australian rents jumped about 7% in the December quarter. That's the slowest pace in 3 years. While nationwide prices reached a new high, the pace of growth is easing due to increased availability. Moderate rent increases are expected this year, helping put a Reserve Bank rate cut in play sooner rather than later. Now, in terms of that, we've got money markets pricing in a 70% chance of an RBA cut in February. That meeting taking place on the 17th and 18th of next month. This is after November inflation data did show some further easing towards the target band. We've got stocks a little bit softer today in Australia. The ASX off about 0.4%. Star Entertainment, the worst performing. It's really taking a beating, off by more than 23% due to a cash crunch. Available cash on hand for the casino operator now just $79 million. We've got a softer Aussie dollar as well, still holding on just above 62 US cents. We do have retail sales numbers and trade data for the month of November coming out soon, Heidi.
Well, Paul, we continue to watch South Korea, with investigators still trying to figure out how to peacefully bring impeached President Yoon Suk-yeol into custody after their first attempt failed. Yoon has been barricaded in his residence in Seoul, surrounded by crowds of supporters and armed security guards. Our economy and government reporter Sam Kim joins us now for the latest. And, you know, obviously with the eyes of the world, Antony Blinken having recently just praised South Korea for the peaceful handling of this. Nobody wants violence or force here, but what are the options to try and get this kind of second attempt at executing the arrest warrant to be a successful one?
Well, it does seem like that it's going to be very difficult for the investigators to be able to detain President Yoon unless they resort to some form of violence, actually, because the presidential guards have fortified the walls of Yoon's residence with barbed wires. They've placed buses in front of the gate. And they've really ramped up the security around the presidential residence. And, you know, the only way for Yoon to ever respond to this type of arrest warrant would be if he's formally indicted, or if there's another court that issues a more stronger, an extensive form of arrest warrant for him. That's what his lawyers say. But for the time being, I think there's a lot of tension at the residence with pro-Yoon protesters and the presidential guards trying to block any attempt by the investigators to detain Yoon.
What are the chances of a tougher arrest warrant being issued? And in the meantime, what are the risks to Korea's reputation as a democracy?
This is certainly a test for Korea's democracy. There's no question about it. At the moment, there is a separate court proceeding going on with Yoon at the Constitutional Court deliberating on the impeachment motion that was passed against him last month. And then there's the what they call the corruption office investigation that is going on separately against Yoon. Who are the people that are trying to detain Yoon for questioning on what happened on December 3rd when he declared martial law. So there's essentially two proceedings legally that are happening. Now, this is something that has never been seen in Korea before, even though Korea did see two previous impeachment rows happening in the past 20 years. This is something just so unprecedented that even the lawmakers, the legal experts themselves are just questioning every step of the way whether what's happening is something that's valid, whether something, whether it's something that is, legally possible. So there's a lot of questions about, what's happening. And it is certainly a moment of test for, the authorities and the Korean democracy and everybody else watching it as well.
Economy and government reporter Sam Kim there. We have more ahead on the Asia trade. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
I think this scene is familiar.
Wages are still robust. They're still growing.
What does that mean for 2025?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
We're looking at a reacceleration of how much people are earning and the hours they're actually working.
We count you down to the jobs report.
The December Jobs Report, Friday on Bloomberg.
Panasonic says it's making big investments in North America as it prepares for the second Trump administration. We asked regional CEO Megan Mangwon Lee about the company's AI plans after its acquisition of supply chain software provider Blue Yonder.
As a 106-year-old company, and we're making big investment in North America in the area of energy for EV batteries. But supply chain is also a critical part of our business and the area that we're trying to make a contribution for a more efficient, smart supply chain solutions. So we bought Blue Yonder, and Blue Yonder is coming out with a end-to-end visibility capability with AI agent. They can customize for your problems and solutions and can work with you. So we're really excited about that announcement.
What kind of a deal was that? How difficult was it to get done? You know, like the story of 2024 was companies, industrial companies in particular, going out and saying, we're either going to have to acquire capabilities or we're going to have to grow them internally. You went one way.
Yes, yes. So we started working with them a couple of years ago, and we're really excited about their our ability and investment that we made with Blue Yonder and their capability to really solve the problem of the supply chain resilience and safety, and will be the forthcoming with the newer technology, and we're really excited about that. So it's a Blue Yonder subsidiary of Panasonic, and they're in North America based, and it's a great announcement for us and newer capability for us.
You said two things, supply chain resilience and investing in America.
Yes.
And I post on social media every year that I'm going to be speaking to you, and every year I get dozens of questions, hundreds actually in this case. I would say the vast majority are about the upcoming Trump administration and potential tariffs and policy around China. And that's so interesting to you because of the EV battery supply chain in particular in this country. What's your message around that?
So even before the Trump administration, the supply chain, I mean, we all know that China controls a lot of raw material.
Right.
We had
raw
our
material being lithium.
For the, for the EV batteries.
Right.
Yes, yes. So we've been working hard even before. I mean, during COVID, everyone had the challenge of managing supply chain. So we had that issue of trying to make sure that the supply chain is smooth and predictable and under control. So we have vested interest to make sure that it's closer to the production being Reno and a newer factory in Kansas, which is opening up this spring.
Panasonic's North America CEO speaking there in Las Vegas with our Bloomberg Technology co-anchor Ed Ludlow. Coming up on the Asia Trade in the next hour, we'll be back at the Malaysia Economic Forum for an exclusive interview with the Maybank President and Group CEO, plus AXA investment managers will be along with us to give us their outlook when it comes to the Fed. The market opens in Seoul and Tokyo are next. This is Bloomberg.
You talked about how governments are not looking at healthcare and investing in healthcare as much as they should. What's the message you'd like to send to those governments?
Well, I think a healthier population is always going to be more productive. It's just that sometimes the political will isn't there in some of these countries. So I hope that they can keep this as a priority, because a workforce that is 20 or 30% down during a pandemic or an outbreak, or there's certain diseases that keep spreading, is not healthy, it's not productive. And if you want everyone to perform at their best and you want healthcare costs to be down, you don't want to be burdened with insurance costs and other costs, I think it's important to invest early in health, in child health, in women's health, and I hope that continues both in India and other parts.
The top names at the Fed are on Bloomberg.
The median projection is 2 rate cuts next year. That makes sense to me, but we have to remain agile. Every meeting is live from the standpoint that you're debating, you're discussing, you're thinking what's the right level of policy. But my projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
Nobody covers the Fed like Bloomberg. U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is the Asia Trade. We're counting down to Asia's major market opens and the inflation sort of play across the world, not just, of course, what we're watching when it comes to the Fed and the jobs numbers that are expected towards the end of the week and how we are seeing that fair degree of caution there and potentially a slowdown in how they want to be easing according to those minutes. But, of course, also China, where it's a much different picture. Inflation pretty much projected to be at zero. Are they already in this deflationary spiral?
Yeah, well, that's the debate of the hour, isn't it? The Japanification of China, and have policymakers done enough to break their way out of that? We'll have that data a little bit later on in terms of the deflation picture, but you're quite right. The inflation story, meanwhile, in the US appears to be live and well, although we did hear from Chris Waller saying he wants to continue with easing.
Very interesting as we head into the start of trading across Seoul and Tokyo. In Japan, we had some pretty encouraging base pay numbers, at least. In fact, base pay rising the most in 32 years. Broadly speaking, it was a pretty positive sort of out-of-the-box beat for those Japan cash earnings numbers. We saw a little bit of a boost to the yen in sort of the wake of that data being released, and we're also watching, of course, what happens when it comes to JGBs today. Potentially some pretty challenging pricing for a 30-year auction coming up as well. So the Nikkei 225 lagging a bit as we get online. Broadly, it is a bit of downside across the Asian session as there is sort of muted appetite for risk at this point. But potentially, we're really just looking ahead to what the Bank of Japan do, given the sort of supportive rate hike outlook with the cash earnings numbers. In the inflation sort of adjusted numbers, we saw a drop of 0.3%, but there's now, just shy of a 50% hike at the January meeting, depending on further data on wage growth sustainability. We're waiting for the wage negotiations. That could be something that they're waiting for instead. Dollar yen moved at this point, 158, a little bit stronger for the yen there, but still within that window that we could see really still further pressure. And if there is sort of this choice to wait until where the Bank of Japan goes and those Shunto wage negotiations, we could see those bears still very much in control there. But taking a look at Korea, where we're seeing a little bit of upside there for the KOSPI, up about 0.1%. The political situation continues to kind of be one that we're watching, right, because we know that there is an intended second attempt to arrest President Yoon, but this ongoing sort of standoff continues, and they certainly want to try and achieve that within being able to do that sort of peacefully and in a stable manner without a force or violence. But this situation and the sort of deepening political divisions in Korea continues to drag on there, Paul.
A bit of a risk-off sentiment here in Australia as well. The benchmark index off by about 0.2%. Now, as we mentioned, Star Entertainment in particular taking a beating, the worst performing stock. Long story short, it's running out of money. We've got some data coming out of Australia as well at the bottom of the hour. It's retail sales, trade data for the month of November. The consumer's in a bit of a dark spot here in Australia as well with persistent inflation, although yesterday's CPI numbers for November were fairly encouraging. We've got money markets now pricing in 70% chance of an RBA cut in mid-February. Take a look at yields in the US. Meanwhile, they are recovering. Well, US Treasuries have recovered somewhat. The 20-year did briefly touch 5%. It's going to be a choppy day of trading tomorrow for US Treasuries cash market, closing early, futures closing early as well. It's a national day of mourning for former President Jimmy Carter. Well, let's get back to Morgan Stanley's Asia Wealth Summit now in Hong Kong. Our China correspondent Min Min Lo standing by with our next guest. Min Min.
Hey, Paul. Joining me here is Chris Eagle, CIO for Core Investments at AXA Investment Managers. Chris, really great to see you here in Hong Kong. Very short trip that you have here. I just want to start with what's happening in the US because we're getting the December employment data tomorrow, and we have seen bond yields spiking and traders really stop pricing a rate cut in the first half of the year. What are your bets on the rate cutting cycle this year, and where do yields go from here?
Thanks. Good morning. Thanks for having me. Well, we officially expect just one rate cut in the first half of 2025. Okay. But there's not a lot of conviction around that view because there's so much uncertainty in the outlook. And we really need to see what the Trump agenda is and what specific policies are going to be implemented by the new administration. The backdrop is, of course, that the US economy is quite strong. Yeah. Inflation is still above target. The labour market is slowing down, but it's still quite strong. And it makes sense for the Fed to be more cautious. But I suspect that as we go through the year, there may be a case for more rate cuts to come.
Okay, you talk about Donald Trump, and we have to talk about his tariff policy because that affects inflation and what the Fed would do. What is your base case scenario for his tariff policy and how that would impact markets?
Well, again, there's a lot of uncertainty because what's been threatened by Trump isn't necessarily what will be implemented. And if we look back to the previous Trump administration, actually the tariffs that were put in place were relatively modest. However, if he does go all in and puts tariffs on as he's been threatening, then that will have an impact on inflation in the US because those tariffs will be passed on to consumers. And that makes the Fed's job even more difficult. But more importantly, I think, is the effect on world trade, because other countries could retaliate, and that may impact on trade volumes everywhere. So what Trump does with China, what Trump does with Mexico, will be very important for trade flows and very important for the global manufacturing sector, which has been quite weak already. And this is one of the biggest threats, we think, to global growth over the next couple of years.
Okay. What is your outlook then for U.S. equities? Because I think you were the one who said that we have seen how the S&P had over 20% annual growth the last 2 years, and you said a third would be a stretch.
I think it will be. It's always what earnings do will be important. So earnings expectations are still quite optimistic. I think something around 14-15% earnings growth is expected for the S&P, which if the economy continues to grow as it is at the moment, then that is feasible. But my caution is around valuations. The S&P is expensive. When we look at any kind of valuation metric, it's at multi-year highs. And if bond yields keep on going up, as they have been doing since the beginning of this year, that we think is a threat to equity valuations. Yeah. Because bond yields at 5% potentially in the next few weeks could be a major threat to equity valuations.
Yeah, and when you think about how the Fed could possibly be pausing on rate cuts, that sort of also limits other central banks' ability to cut rates and stimulate growth as well. So where else are you looking for opportunities beyond the US?
Well, I think there is a divergence between what's happening in the US and the rest of the world, and rate cuts are much more likely elsewhere, particularly in Europe, where we think the ECB will cut rates to below 2%, which is needed because the European economy is quite weak. We do see opportunities outside the US in fixed income markets, particularly in Europe because of the rate cutting agenda, even in the UK where rates are still too high for the economy. And in emerging markets, I think we need to be selective because the tariffs could be a problem for some countries. But interest rates are likely to come down in a number of emerging market economies, particularly in Asia, because of what's happening in China. And we see, again, opportunities in fixed income, but also in some of the tech-related equity markets. So markets like Taiwan, we think, will continue to perform well.
And let's talk about China because it's really at the center of this geopolitical tension between US and China. How are you positioning for China?
Well, we're not, I think, at the moment. That's the truth of it, because there's a lot of uncertainty still on the growth outlook. when we look at what's happening with Chinese bond yields, it tells us there's a deflation problem in China. And for that to be corrected, we need to see more stimulus coming from the Chinese government. Now, we've had some attempts to stimulate the economy, but the real challenge is to stimulate consumer spending, and that may take some time. What we've noticed is that Chinese consumers are responding to lower prices and they're spending, but they're not spending on real estate, they're not spending on equities, they're not spending on big ticket items. And I think there's a lack of confidence, and we need to see more efforts from the government really to stimulate that kind of spending.
Okay, so which equity market do you think will do best in 2025?
Well, despite what I said about the US, I think you have to bet on the US remaining the strongest equity market. There will be more volatility, I think, but all in, I think the returns from the US will continue to be strong, led by tech. Elsewhere, we think Europe should do okay because earnings growth is lower, but there's a healthy dividend yield in European equities. And then we would look selectively at emerging markets. I think for China specifically, for the stock market to perform, it really needs consumer confidence to improve. And then that again goes back to the government stimulus measures.
Yeah, it's probably going to take several years for that to happen. Thank you so much, Chris Eagle. That was Chris Eagle, a CIO for Core Investments at AXA Investment Managers. Heidi.
Our China correspondent Min Min Lo there at the Morgan Stanley Asia Wealth Summit in Hong Kong. We do have some breaking news when it comes to SoftBank as well. ARM is said to be exploring an Ampere Computing takeover. We hear that this is kind of the exploration of a deal to acquire Ampere Computing LLC. This is a semiconductor designer which is based off ARM infrastructure as well. It's really drawn takeover interest from ARM. It's exploring strategic options with a financial advisor. And of course, this deal would just add to the wave of chip companies really capitalizing on the AI spending boom. It would give ARM expertise and impetus in this market. But Ampere, which is backed by Oracle, the semiconductor designer, has really drawn a lot of interest from ARM, but these discussions are private and ongoing. Our sources say that these talks could still fall apart, and also given there is so much interest, it's also possible that Ampere could end up being bought by another suitor, since it flagged itself as being open to such an acquisition. Neither ARM nor Ampere have agreed to comment, and spokespeople for SoftBank and Oracle also haven't immediately responded either. But we did report back in September that Ampere was working with a financial advisor to help field takeover interest. And Paul, that it was valued at $8 billion in a proposed minority investment by SoftBank back in 2021. So we'll kind of keep an eye out as to what sort of valuation they're now discussing.
All right, still to come. We will be live at this year's Malaysia Economic Forum for an exclusive interview with Maybank Group CEO. He'll be joining us a little bit later on. First, though, the Biden administration planning a parting shot at China on chips, extending restrictions on the export of AI equipment. Details next. This is Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry, and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models, and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's Jobs Day, and Bloomberg has the report under surveillance.
I think this scene is familiar.
Wages are still robust. They're still growing.
What does that mean for 2025?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
We're looking at a reacceleration of how much people are earning and the hours they're actually working.
We count you down to the jobs report.
The December Jobs Report, Friday on Bloomberg.
The Biden administration's planning further restrictions on the export of AI chips from the likes of NVIDIA and AMD in a final push to keep advanced technologies out of the hands of China and Russia. For more, let's bring in Asia Tech reporter Annabelle Drulers. So, Annabelle, the world divided into 3 tiers. How are these restrictions going to work?
Yeah, so this is what we're hearing from sources, but essentially the Biden administration could roll out this system by the end of this week. So as you said, we're hearing that it's going to be in 3 tiers. So the first tier is the US, its closest allies. So you're thinking about US, Japan, Korea, Taiwan, Western Europe, Australia, others. But you're essentially giving this group of countries and companies that are headquartered within those unrestricted access to American technology. The third tier, as you can imagine, is the most restrictive. So you're thinking about Russia, China, parts of the Middle East like Iran, Iraq and Afghanistan also fall into that category. So they're going to have the most punitive restrictions. And then the second tier is where it's pretty interesting, because this is really the rest of the world. But countries in Central, Southern America, large parts of Africa, India, across Asia, they're all going to need to essentially speak with the US government and get what's called VEU, or validated end user. So if you're a country or a company in this tier 2 category, of course, if it does eventuate, because this is according to sources at this point in time, but essentially you can get higher caps on the amount of advanced AI chips that you can access, because we're talking about chips that are used and put into AI servers. You can get greater access to those if you can meet certain requirements, and that includes having, for instance, a demonstrated track record of engaging with US government officials or meeting human rights standards, or at least you need to have some sort of credible plan for doing so.
And unsurprisingly, opposition from NVIDIA.
Yeah, which of course you can expect that, right? I mean, essentially what NVIDIA is saying is just don't move too quickly on this. They're saying that if you have any sort of last-minute rule that restricts exports to the most of the world, that's going to be a really big change in policy, and it's going to really, of course, increase the amount of risk of misuse, and that could, of course, as well threaten US economic growth. That's the argument that NVIDIA is making, and they're saying that there's just so much interest in their products that they're getting from around the world, which of course we know. But the market reaction to it, well, NVIDIA did slip a little bit in after hours following the reporting of this. AMD as well, that declined, but just less than 1%. Still, though, the Semiconductor Industry Association is saying that a policy change of this sort of scope, this sort of significance, shouldn't be rushed out the door in the final days of the Biden administration. But we do know that there is sort of bipartisan support for a more hawkish stance on China, and many in Congress would say that this is sort of a once-in-a-generation opportunity to leverage US AI technology and also to pry some companies and some countries away from Beijing.
Our Asia Tech reporter Annabelle Drulers, and of course China has economic problems of its own. On top of the geopolitics, we'll be getting the December inflation numbers in the next hour. Economists expect CPI to weaken closer to 0. This could signal more government stimulus is needed to counter deflationary risks. Bloomberg's Chinese economy and government reporter James Mager joins us now. So, James, sort of harkening back to yesterday's big topic and piece on the Japanification of the Chinese economy. This has been discussed for a long time. What's kind of changed, and are we meaningfully closer to that deflationary spiral and confidence, trap that, as we see from Japan, is very hard to get out of?
I mean, if you look, if you look not at the CPI numbers, but at the producer prices, which I think are what's really important for driving, inflation across the economy. China's already in deflation, and there is no sign that it's getting out. I think December will be the 27th straight month that producer prices have fallen. This is the longest streak since the mid-90s. And there is no sign that that's going to turn around this year. We expect that, and economists that we speak to, we survey expect that producer prices will be negative all of this year, and the GDP deflator, which is the broadest measure of inflation across the economy, will also be negative this year. And if that does happen, it'll be the longest streak of deflation in China since the 60s. So, China is already in a deflationary environment. And people are shopping and people are consuming based on those expectations. The prices will continue to fall, and that will flow into wages. Wages will continue to fall. Investment will continue to fall, or people will pull back on investment because of those things. So, it really is already in that. I sort of have some issues with the Japanification idea, but I do think the idea, the deflationary mindset that the BOJ spoke about a lot, is what we're seeing here. I don't think that the comparison with Japan and China is a one-for-one comparison, but the idea that people will base their shopping and their consumption on the expectation for future price falls, which is what the BOJ was trying to fight against for many years, is really what we're seeing here now. And you're seeing sort of similar, effects. For example, the shopping chain, the restaurant chain, Saizeriya, which is a Japanese chain, which has like Italian food, is become really popular in China because prices are really low. And it was exactly the same in Japan in the 90s and the 2000s. Saizeriya was really popular in Japan because prices were low and people could eat there cheaply. And so you're sort of seeing the same kind of effects, even for the same companies like Saizeriya, where people are shopping, but they're shopping cheaper. They're going out, on holidays, but they're going closer to home. They're not going overseas. They're doing cheaper holidays, those kind of things. So I think already that deflationary mindset has set in, and I think the data today is just going to confirm that continued through December, and it's likely to continue into this year.
Well, we've seen some policy from the government so far to address this, but as this problem deepens and really becomes psychological as well, when do we reach the point that something much more vigorous is going to be expected from policymakers, and what's the chances we'll see it this year?
The real big problem is that, at least for the producer price side or the manufacturing side of the economy, is that there's massive overcapacity in many, many industries. That's partly due to the housing market slump. It's partly due to other things, just overinvestment into various different sectors. And until those problems are addressed, until there is a real reduction in steel production, glass production, cement production, solar panel production, these other things, prices are not going to rise. There's too much supply, there's not enough demand. And so therefore prices fall. And the government is talking about doing things to solve that, and gradually at the edges, a little bit here, a little bit there. But it's not been a real drastic, there's not been real drastic measures so far to do that. And demand isn't picking up, enough to mop up that excess supply. So until we really see something that is going to cut into output of all of these things that there is too much of, which is what's driving these price falls. There's little chance of this turning around. The problem is, though, that if you start slashing output of steel, you start slashing the need for steel workers. So therefore, these comes with further economic problems that has to be dealt with. But for the price for inflation or deflation, we're not seeing anything really that's going to change this picture drastically.
All right, Bloomberg's Chinese economy and government reporter James Mager there. Coming up, we're going to get the outlook for Japan's busy M&A scene as CEOs express concerns over the blocked merger of Nippon Steel and US Steel. This is Bloomberg.
morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest, weekdays at 9 a.m. Eastern, only on Bloomberg.
The fact is, a country that was once the pride of the world for its free competition with no political intervention has now become entangled in politics. When that happens, I think that not only U.S. Steel and Nippon Steel, but also other Japanese companies will be hesitant to do things like this for fear that politics will get involved again. This is not good for the Japanese economy.
I think that this is ultimately a political deal, and if we call it a deal, I think there is a good chance that Mr. Trump will reconsider. I think there will be both positive and negative impacts. When a country as powerful as this takes action, there is no way that it won't have an impact, so it is necessary to prepare for that as well. And I think that most of the companies in Japan today are to some extent prepared for that.
We are still willing to invest to the United States, despite the fact that the Nippon Steel and U.S. Steel issue, which is still going on. But we are willing to be in part of the U.S. economy. It's disturbing that U.S. Steel and Nippon Steel deal will be broken because we believe U.S. is the best ally for us too. So there is a goodwill between the two countries.
Japanese CEOs commenting on Washington's decision to block the Nippon-US Steel deal. So Japan's steelmakers are expecting a busier 2025 after more than $230 billion in mergers and acquisitions last year. Bloomberg finance reporter Lisa Du joins us now for more. So Lisa, what's driving this M&A boom?
Morning, guys. Yes, last year was a super exciting year for Japanese M&A, about $230 billion US in transactions, some of the highest growth pace we've seen since 2018. Now, Japan's always been quite active for M&A, but when we speak to bankers, lawyers, deal makers, they say that this kind of deal making is now becoming more dynamic, more diversified, and what's really driving that is a changing mindset at Japanese corporations when it comes to kind of telling their growth story and paying attention to their share price. So Japanese corporations are realizing now, they're trading at low valuations. They don't have enough of a good growth story. They become targets for active investors who, will come and take a stake in their company and, and make public bids for change. Or they can also become the target of global rivals that might come and try to take over the company. And so what they're doing now is, they're being more proactive. So Japanese companies are being more proactive about growing their business, whether it's overseas M&A or what we're seeing at an increasing trend domestically is that some companies are opting to go private instead, or even maybe sell off more of their non-core businesses.